Very good morning, everyone. How are you all? Now, today we are going to start. Today we are going to start CA final financial reporting crash batch. Let me give a brief description. What will be our process? Okay. So you all know that this will be 7 days class, 8 hours per day. Correct? 60 hours approximately in total. Approximately 60 hours. There is one condition from your side that previously you have taken classes. Even though you have taken and you've forgotten, nothing to worry. Nothing to worry. But one thing that you need to be very much with full of concentration in the class. Okay. Now we'll take many questions also in the class so that you with conceptual clarity you will also get how to solve the problem. Because from examination point of view, with concept you should also know what is actual way of doing the solution. So that will be also our main area. Correct. Now the question is that will we be able to complete the entire syllabus? So of course we'll be able to complete the entire syllabus, but from examination point of view, we'll fully focus on examination point of view. Correct? Our regular batch is almost 300 hours. So that 300 hours we need to now cover in 60 hours. So of course the detailed discussion will not be there, but we'll concentrate from examination point of view. What are the area from examination point which is required to understand and to have a grip on that, so that we are able to solve the questions whatever asked in exam. Correct. What type of questions I will take in class, that is my I will decide. You are not supposed to decide which question will be taken, which question will not be taken. Means I have already given a PDF to you. Have you received the PDF? You have not received the PDF? Correct. So I have already given the PDF to you. PDF of question bank. That question, all the questions of that PDF will be taken in the class. Understood? Correct. Now let us start with the first chapter, that is Ind AS 16. So what I will do, I'll first cover all the Ind accounting standard related to asset. Related to asset. Related to asset means Ind AS 16 property, plant and equipment, Ind AS 38 intangible asset, etc. It has been seen that from these accounting standards, small accounting standard related to asset only, there will be coverage of 10 to 12 marks. And 10 to 12 marks is also very important. Correct? Are you getting? Means one chapter, if you see consolidation, consolidation is equal to all Ind AS related to asset. So from consolidation also the coverage is what, 15 marks, and from this Ind AS which is related to asset also coverage is what, 10 to 12 marks. So both are equal lah. So if you leave this chapter, you are losing how many marks? 10 to 12 marks. Correct? Understood? However, I will say consolidation, so we know what type of question will come. But from these Ind AS we don't know what type of question is going to come. Means total coverage is required in this Ind AS. So let us start. Understood? Correct. So we'll start with what? First chapter, Ind AS 16, property, plant and equipment. Correct? What is the meaning of property, plant and equipment? Property, plant and equipment are tangible item. Of course, tangible item, but all tangible items are not property, plant and equipment. Correct? Because investment properties are also tangible item but not PP. Inventories are also tangible item but not PP. So which tangible item are property, plant and equipment? That should satisfy how many conditions? Two conditions. How many conditions? Two conditions. Point number A is what? It must be held for use in production or supply of goods and services. Correct? It must be held for rental to other, or rental to other, or for admin purpose. Correct? So it must be held for either use in what? Production or supply of goods and services. For example, plant and machinery. For example, laptop I am using for providing services, or for rental to other. Any plant and equipment which is given or rent to other will be also property, plant and equipment. Correct? or for admin purpose, any asset which is used for admin purpose in a admin office or whatever we use for admin purpose, that will be also covered in this chapter. Correct. And the second condition is what, which are expected to be used for more than one period. Can I say basic condition? This is a very basic condition ki any asset which are expected to be used for more than one period will be only property, plant and equipment. Means if you purchase any asset which are expected to be used only for yeah, I will say for less than 12 months, so that will not be considered as what? Property, plant and equipment. So here period means what? One accounting period. One accounting period. Got it. Expectation. This expectation should be on which date? On the date of initial recognition. Means when you are doing initial recognition, what was your expectation? Whether it will be used for more than one period or what? Less than one period. Correct. So expectations should be on which date? On the date of initial recognition. Now one doubt will come, sir. You said only these three purpose, but there are many other purpose which are not covered here. For example, any asset which are used for accounting purpose, then so can I say it is not covered. However, admin purpose may include what accounting purpose, but there is no clear indication. For example, any asset which are used in research and development activities. So research and development activities, suppose we have some building where we are doing research, whether it is covered or not. So Ind AS 16 has given a clarification that admin purpose will include all other purpose. So admin purpose, this word is a wider term in this chapter. It will include all other purpose other than for sale in the ordinary course of business. Means any asset which are used, which are held for sale in the ordinary course of business, that will not be covered. Apart from admin purpose will include all other purpose. For example, it will also include selling and distribution purpose. It will include finance and accounting purpose. It will include research and development purpose. It will use any other purpose. Correct? Yes, sir. Second doubt will come, sir. You said this Ind AS 60 means property, plant and equipment. So when I say property, so can I say we have one investment property? And investment property, if you have done Ind AS 40, you know it is also held for rental. So any property which are held for rental, whether it will be covered in this chapter or Ind AS 40. One doubt will come because they have said rental to other. Rental to other. So one clarification has been given that any investment property are not covered here. Means any property which are given on rent to earn rental income will not be covered in this chapter. But any plant and machinery which are given on rent to others for earning rental income will be covered here. Are you able to understand this point? So rent to others, this point, there is one clarification that any investment property are covered under Ind AS 40. Are covered under Ind AS 40. Have you understood this point? Means what I am saying, property which are held for rental to other for earning rental income, which Ind AS? Ind AS 40. Correct. But any plant and machinery which are held for rental to other for earning rental income, then which Ind AS? Ind AS 16 only. Have you understood this point? Yes, sir. Then there is one more clarification given about spare part, standby equipment and servicing equipment. Spare part, you know, spare part, small spare part which are used for repair and maintenance. Servicing equipment are those equipment which are required on servicing plant and machinery, etc. Standby equipment are those equipment which are used only when the principal item cannot be used. For example, small generator whenever big power plant are not in use. Correct now. So these are standby equipment. Right now in class you can see AC we are using, but these fans are what? Standby equipment will use fan, ceiling fan only when AC is not in work. Correct now. So that is known as standby equipment. So whether it will be covered under Ind AS 16. So what they said, if it meet the definition of property, plant and equipment, then it is covered under Ind AS 16. Otherwise, it will be considered as inventory. So what they said, if it meet the definition of PP, then such spare part, standby equipment and servicing equipment, we need to apply what Ind AS 16 means recognized as property, plant and equipment. Otherwise, means if it does not meet the definition of property, plant and equipment, then recognize it as inventory and apply Ind AS 2. And can I say, once you are applying Ind AS 2, so it will be valued at cost price or NRV whichever lower as per Ind AS 2. And once it is consumed means once it is used, it will be charged to PL as an expense. Correct? So once they are used, it will be charged to PL as an expense if it does not meet the definition of PP. But if it meet the definition of PP, then you need to apply subsequent recognition as per India 16. We should charge depreciation also on that. Have you understood this point? Now what they said, if it meet the definition of PP, so can you say all these spare part, standby equipment and servicing equipment will always meet first condition? Will always meet first condition. Only doubt will come in what? Second condition, whether they are expected to use for more than one accounting period or not. Means always when second condition is not satisfied, then it will be inventory. Otherwise, it will be also considered as property, plant and equipment. I hope you have understood definition. Definition understood. Now come to recognition criteria. What India 16 says that even though it meet definition criteria, even though it meet definition criteria, are you getting what I am saying? It must meet recognition criteria to be recognized as property, plant and equipment. Means if it does not meet recognition criteria, then it will be charged to PL as an expense immediately, or it will not be classified as property, plant and equipment. Are you getting what I am saying? So what are the two recognition conditions? What they say, the cost of an item of PP shall be recognized as an asset if two conditions are satisfied. First condition, it is probable that future economic benefit will flow to the entity. Future economic benefit will flow to the entity. Probable means chances are more than 50%. And second, cost of item can be measured reliably. The cost can be measured reliably. Normally for tangible item, both these conditions will be satisfied. Normally, in normal situation, both these conditions will be satisfied and therefore it will be recognized as property, plant and equipment. But it is quite possible that you purchase one property, plant and equipment and you find that it is not supposed to be used in your business. It is quite possible. For example, suppose I purchase one camera and then I found that it cannot be used for recording in the classes. So can I say first condition will not be satisfied and therefore it cannot be recognized as property, plant and equipment. Understood? So both these conditions you have understood. So with definition criteria, it should also meet what? Recognition criteria. Understood? Once recognition criteria is satisfied, then we should recognize it. We should recognize it in our books of account. It means now we need to understand initial recognition and subsequent recognition. Initial recognition means on the date of purchase or on the date of construction, till the asset is ready for use. Till the asset is ready for use. Correct? Once it is ready for use, then we apply subsequent recognition criteria. So first let us take initial recognition. So can you say initial recognition is to be measured at what price? So what India 16 say that initial recognition will be always done at cost. Initial recognition will be always done at cost. Now what is the meaning of cost that we need to understand? What is the meaning of cost that we need to understand? So cost means cash price equivalent. Cash price equivalent. So what is the meaning of cash price equivalent? What they want to say that cash price equivalent we need to understand in two situations. What they are saying, if the payment is not deferred beyond normal credit period. Can you say whenever you do any business there is some normal credit period. Normal credit period, suppose you purchase one camera, so you may be allowed a normal credit period in that business. Suppose 30 days is the normal credit period. Correct? So if the payment is not deferred beyond 30 days, then cost price will be equal to cash and cash equivalent paid. Means whatever you are paying, whatever consideration you are paid, that is the cost price. So in that case, cost price will be equal to what? Consideration paid. But if payment is deferred beyond what? Normal credit period. Suppose you have been allowed a credit of 1 year. It means, can I say there is some interest element, there is some financing component, there is some financing component. So in that case, when payment is deferred beyond normal credit period, in that case, cost price will be equal to what? Equal to present value of all future payment. Present value of all future payment. You know what is present value? If future payment is given, you can find out present value. Correct? Present value of all future payment. Or we can say this is nothing but purchase price at normal credit period. We can say in this way now. Purchase price at normal credit period. Means suppose purchase price at normal credit period is 10 lakh. But you have been allowed a credit of 1 year, and because of that then you are paying 12 lakh. So what is the cost price? Cost price will be 10 lakh to 12 lakh. 10 lakh. 10 lakh na? Once again. What I am saying, if the payment is deferred beyond normal credit period, If the payment is deferred beyond normal credit period, then cost price will be equal to present value of all future payment. Means we need to find out present value of 12 lakh. Means can I say if the rate of discount is given, you can easily find out present value of all future payment. But sometimes rate of discount is not given. So can I say present value of all future payments should be equal to what? Purchase price at normal credit period. Means if the credit period would have not been allowed for 1 year, how much amount you would have paid? So you would have paid the amount which you would be paid at normal credit period. Suppose purchase price at normal credit period was 10 lakh, but you are paying 12 lakh because 1 year credit was allowed. It means cost price will be equal to 10 lakh or 12 lakh? 10 lakh. And the difference between 10 lakh and 12 lakh will be what? Interest expense. So this 2 lakh will be what? Interest expense. So can I say interest expense will be equal to future payment minus present value of all future payment? Present value of all future payment. And this interest expense will be recognized as an expense over the period of credit. Over the period of credit. Over the period of credit, correct? So this interest will be recognized as an expense over the period of credit unless it is covered under Ind AS 23. Ind AS 23 means borrowing cost. So it might happen this asset is a qualifying asset. If it is a qualifying asset, then Ind AS 23 will be applicable, and if Ind AS 23 is applicable, such interest may be capitalized also. So what they are saying, it may be capitalized if it is covered under Ind AS 23. Otherwise, it will be always charged to PL as an expense. Have you understood this much? Yes, sir. So I hope you have understood what is the meaning of cost. Now we need to understand what are the components of cost. What are the components of cost? Elements of initial cost. Means I have just taken one example so that you can understand what is the meaning of present value. So an entity acquired a plant for rupees 20 lakh on 2 year interest free credit. Interest free credit. So can I say interest free credit? It does not mean it does not have interest element. Can I say in invoice, in agreement, we can mention anything, but it does not mean that you are not charging interest. Correct? Because we do accounting based on substance, not based on agreement. In agreement, you can write anything, na? So we do not do accounting based on agreement. We do accounting based on substance. Because can I say 2 year credit is allowed, so it is understood there will be some interest element. It is understood there will be some interest element. So what was the price? 20 lakh will be paid after 2 years. Correct? An appropriate discount rate is 10%. So can I say we can easily find our present value of 20 lakh by applying discounting factor. By applying discounting factor, the present value is coming this much. You can see we have applied discounting factor. So this become what? Cost price. Is what journal entry will do. Journal entry will be property, plant and equipment to what? Payable. Property, plant and equipment. Account debit to payable. What amount is payable right now? 16 lakh. 16 lakh 52,893. This will be the cost price and this will be the amount of payable. Now at the end of each year we recognize interest expense by applying what rate of interest? 10%. You can see we have added interest for first year, then we have added interest for second year, then amount at the end of second year automatically will become 20 lakh and this amount will be paid. This amount will be paid. Understood? Correct. Now coming to the elements of initial cost. Elements of initial cost. There are three elements of initial cost. One is known as purchase price. What is the meaning of purchase price? Purchase price means invoice price less trade discount plus any non-refundable duties and taxes. This become purchase price. Very easy. Invoice price less trade discount plus non-refundable duties and taxes. Correct? Trade discount and rebate are normally interchangeably used. So trade discount or rebate. But what will not be deducted? Cash discount will not be deducted. Means if cash discount is received on settlement date, so that will be considered as what? That will be considered as income and that will be credited to PL. So cash discount will not deduct. So it might happen on settlement of payment, some cash discount is received, so that will not be deducted to find out the cost price of property, plant and equipment. So any discount which is received on settlement date, settlement of amount, that is known as cash discount and that will not be deducted. Understood? That will be our income. Income will be credited to profit and loss account. Have you understood this point? Yes, sir. Second element is what? Point number B. Directly attributable cost, that is cost incurred to bring the asset in present location and condition for its intended use. Means any expenses which are incurred to bring the asset in his present location or condition for his intended use. All that cost will be added. Correct. So what are the example of such cost? Employee benefit cost. Any employee benefit cost directly from construction or acquisition of property, plant and equipment. Any employee benefit cost. Correct. Understood? Yes, sir. Any transportation cost, any installation expenses, any site preparation cost. Correct. Any professional technical fee paid. Professional technical fee paid. Technical fee may be paid for installation, etc. Correct. Any cost of testing. Any cost of testing. It is quite possible that for some period we want to test the equipment whether it is of our desired quality or not. So some trial period is always allowed from vendor. Suppose I purchase camera and 5 days trial period is allowed. That you can use it for 5 years. If you are satisfied, okay. If you are not satisfied, then return it. So can you say for 5 days we are using only for trial purpose? During the trial purpose will incur some expenses. Now the question is that whether that expenses will be charged to PL or can be capitalized. So can I say this expenditure because has been incurred to bring the asset in working condition, therefore it will be capitalized and these are directly attributable costs. Correct. Whether the asset is working properly after this testing means what? Whether the asset is working properly or not. Correct. So suppose you incur 1 lakh cost. Your testing cost is 1 lakh. So during the trial period, it is quite possible that we have generated some output is produced, so that output can be sold in the market. And suppose that output is sold and we have recovered 10,000. We have recovered 10,000. Now the question is that we will capitalize 90,000 ki 1 lakh. Will capitalize 90,000 ki 1 lakh. So what India 16 says that this sale proceed, whatever you have recovered from the sale of output produced during this trial run will be deducted and the net amount will be capitalized. And the net amount will be capitalized. Understood this point? Yes, sir. This is important from examination point of view. This point can be asked in exam. This much you understood? Correct. Now, point number C is very important. What they said, initial estimated cost of dismantling and removing the item or restoring the site on which it has been located. Correct. We just try to understand. We purchase one AC. This is purchase price. And then we have installed it. This is installation expenses. Both will be added. Means purchase price is point number A. Installation expense is point number B. In this, no doubt. Now, can you say at the end of useful life, once the AC will be not in use, dismantle it, will dismantle it, will remove it, and will also restore the wall where it has been located. Have you understood the cost? Cost is what? Dismantling cost, removing cost, and restoration the cost, restoring cost where it has been located. Now the question is that should we capitalize that cost right now? First, we don't know actual, so we need to estimate it because these expenses will be incurred at the end of useful life. And right now we are doing initial recognition. The first question arises, should we capitalize? If the answer is yes, then how to estimate? There are 2 points now. So should we capitalize? Of course, if this point is given, so yes. But when? What India 16 says, just try to understand. This type of cost are known as decommissioning restoration cost. Understood? So yes, it should be capitalized, but only when one condition is satisfied. The condition is that if the obligation of such DRSL means what? Decommissioning, restoration and similar liability. If the obligation of DRSL means what? Decommissioning, restoration and similar liability has been incurred when the item of PP was acquired or during the period when the item is used. If the obligation is already incurred, this obligation can be either legal obligation or it can be constructive obligation. If you have done India's 37, you might be knowing about this term. Legal obligation means which arises due to contract or due to any act. Constructive obligation means which arises due to the entity's own action. Correct? That is known as constructive obligation. So this obligation can be either legal obligation or can be constructive obligation. So what Ind AS 16 says that when legal or constructive obligation of DRSN has been incurred at a time when the asset was purchased or during the period when the asset was used, then it will be capitalized. Why? Because there is an obligation. There is a legal obligation to dismantle. There is a constructive obligation to dismantle. Therefore, Ind AS 37 will be applicable, and Ind AS 37 says the provision should be created. So, if you are creating provision, that amount of provision will be added to the cost price of asset that Ind AS 16 says. Are you getting? So, what Ind AS 37 says that whenever there is a legal or constructive obligation arising from past event, whenever there is a legal or constructive obligation arising from past event, an outflow of resource is probable, an estimation can be made and provisions should be created. Means can I say Ind AS 37 will be applicable? It means we need to create a provision with an estimated amount. We should create a provision with an estimated amount. Means we'll do two provision. Are you able to understand? Means our journal entry will be what? Some account will be debited. Two provision. Are you able to understand what I am saying? We will say two provision. But which account will be debited? Normally can I say when you create provision, expense will be debited and that expense will be charged to PL. But in this case, whatever account is debited, that will not be expense, that will create asset. Means we'll say property, plant and equipment account debit to what? Provision. So what is the condition if obligation, which can be either legal or constructive obligation, has been incurred when the item of PP was acquired or during the period of its use? Means if such obligation has not been incurred at the time when the asset was acquired or during the period when the item was used, then will not capitalize it. Then it will not be capitalized. Then it will not be capitalized. It's just you only say if you purchase AC, you have installed it. Do you have any obligation to dismantle it? Do you have any obligation to dismantle? No obligation, therefore will not capitalize such cost. But suppose you have done one contract. We suppose this entire building is under lease. So we may have a contract with the owner. Once I leave this building, I need to do all the we need to do all the modification, etc. Means once I leave, I need to restore this place. So can I say there will be a contractual obligation to dismantle it? If there is a contractual obligation to dismantle it, therefore the initial estimated cost will be capitalized. Have you understood this point? Yes, sir. Correct. This point you have understood? Any doubt? No doubt. Means what are the three elements of cost? First you see me purchase price, second directly attributable cost to bring the asset in its present location and condition for its intended use, and third is what initial estimated cost of dismantling, removing or restoration of site where it has been located. Correct. Now this one is special point, and believe me, this special point in this RTP, in this recent RTP of your exam, one question has been given. Means ICAI can ask question from any point. So there was one special point. What is the special point? An entity applies Ind AS 2. Means entity need to apply Ind AS 2 to the cost of obligation for dismantling, removing or restoring the site on which the item has been located. Is what they are saying. To this cost, Ind AS 16 will not be applied. Ind AS 2 will be applied if, when, that we need to understand. I mean, right now what we have done, Ind AS 16 will be applied, means it will be capitalized to the cost price of property, plant and equipment. Correct. But just try to understand. Suppose we are doing some production activity here. In this building, we are doing some production activity, production of finished goods. And because of production, some alteration we have done here. Some alteration we have done in this building. And that alteration is required for production activity. And there is an obligation to dismantle that alteration once the production activity will be completed. So can I say it means this whatever alteration you have done, that is directly attributable to the production activity, and therefore the entire cost of dismantling, etc. should be added to the cost price of inventory. Should be added to the cost price of inventory. Are you able to understand what I am saying? To that they want to say Ind AS 2 will be applied to the cost of obligation for dismantling, removing and restoring the site on which it has been located that are incurred during a particular period as a consequence, that are incurred during a particular period as a consequence of having used the item to produce the inventory during that period. Means that has been incurred due to what consequences to produce the item during that particular period. Then will not apply Ind AS 60, will apply what? Ind AS 2, and the initial estimated cost of dismantling etc. will be added to the cost price of inventory. Means what journal entry will do? Inventory account debit to provision. Then we'll say inventory account debit to provision. Understood? Have you understood this point? Any doubt? I will take the all the doubt at the end. So all the doubt, whatever you have doubt, just mention in the group. Mention in the group. All the doubts I will take at the end. Don't worry about the doubt. What will happen if I take doubt in between? So my flow be will be interrupted. I don't want to interrupt my flow. Whatever you have doubt accumulated, at the end we'll discuss all the doubt. Whatever doubt is coming in your mind. Chalega? Yes, sir. Let me take one very simple question. On 1/4/2017, a PP was acquired for rupees 50 lakhs subject to a trade discount of 10%, GST of 18%. Credit of GST is not available. Credit of GST is not available means it is non-refundable, therefore will be added. Other directly attributable cost of 5 lakh, useful life of the PP 5 year as per applicable law means legal obligation. PP need to dismantle at the end of useful life. Estimated cost of dismantling is 6 lakh. Appropriate discount rate is 10%. Means what is the estimated cost of dismantling? 6 lakh. It will be dismantled at the end of 5 years. Correct. So what Ind AS 37 says that we need to estimate the amount of dismantling and we should recognize the present value of such amount. Means what amount we will capitalize, there should be present value of expected expenditure. Present value of expected expenditure due to time value of money. Time value of money is involved. Understood? Yes, sir. It means can I say we can easily calculate the present value of 6 lakh at the rate of 10% for 5 years. That we can calculate. We are expert in discounting. So what will be the cost price? Invoice price is 50 lakh. Less trade discount 5 lakh. It become 45 lakh. We'll add GST. GST is 18% of 45 lakh. So that will be also added. If suppose input credit was available, then we would have not added GST. If suppose input credit is available, then we will not add 8 lakh 10,000. Understood? Because input credit is not available given the question, therefore we have added. Now if suppose question is silent, then what we'll do? If question is silent, always assume it is non-refundable. If question is silent, always assume it is non-refundable by giving a note. By giving a note. So can I say this become purchase price? In this we'll add directly attributable expenses. Directly attributable expenses 5 lakh, and we'll also add present value of estimated cost of dismantling. How much that it is coming was 6 lakh multiplied by present value factor. When you calculate, it will come 3,72,540. If you have calculated, please cross check it. If you want to cross check. Understood? This become cost price. Super easy question. This type of question to lollipop question na. Of course, this type of question they will not ask. Don't worry. The lollipop questions. Correct? Yes, sir. Now coming to next point. Next point. Unit of measurement for recognition of PP and aggregation of individually insignificant item. Just try to understand. Let me take one example first for this because already a question have been asked from this topic. Suppose this is one building. Which building? Factory building. Chalega? There is one factory. Correct? And this is the premises. Understood? And this is what? NH. NH means what? National highway. Correct? And the distance between this is what? 5 kilometers. So for transportation, can I say you need to construct road connecting your premises to national highway? So when you will construct the road, it will incur some expenditure. So suppose you have incurred an expenditure of 50 lakh. You have incurred an expenditure of 50 lakh. Can I say you need to also construct some road inside the premises? Inside the premises also na? Are you getting? Suppose this is railway tracks. You know railway tracks? So sir, can I say for transportation you also require railway line, but this is 25 kilometer. Because it is 25 kilometer, therefore transportation is not easy. So what you have done, you have just constructed railway sidings. We call it what? Railway sidings. So that the so that a goods train will come to your premises, they will load all the goods and then go back. So this is known as railway sidings. Understood? Now just try to understand any road constructed inside the premises, you have control over it. If you have control over it, there is no doubt this is an asset. But any road constructed outside the premises, you don't have control over it. So can you say it will not meet the definition of an asset because you don't have control over it? Correct. And this railway siding also, can you say you don't have control over it because this is also outside your area, because this is the government land now. You have constructed it. Of course, you have taken permission from government. That is not a point. But this is, you do not have control over it. Anyone can come and sleep over it. अरे बोलना रे, they can sleep or not? अरे बोल, yes. So can you see you don't have control over it? Now the question is that, will you capitalize this? Previously, before India 16, we used to is before India we used to say that we do not have control over it. Therefore, you can't capitalize. But now, what India 16 says that the unit of measurement is not defined. Unit of measurement is not defined. Means what is the unit of measurement? In what unit you will apply measurement principle? Whether it will be applied to single item or group of item. My question to you all, whether this factory can give future economic benefit without this road? No. Means to derive future economic benefit from this factory, what is required? This road outside the premise required, railway sidings outside the premise required. Means if you are saying recognition criteria say that it is probable that future economic benefit will flow to the entity, but it will flow only when entire group is considered. Therefore, India 16 says the unit of measurement is not defined, but as per the intention of India 16, unit of measurement will be group of items which a group of items which collectively can give what? Future economic benefit, and therefore, as per India 16, entire units of this property, plant and equipment will be capitalized. Means recognition criteria will not be applied on single item. It can be applied to group of item on combined basis if all the group of items collectively give what? Future economic benefit. So now as per India 16, this railway siding will be capitalized. Already a question have been asked on this. Correct? Already a question have been asked on this. Have you understood this point? Correct. So this is also important from examination point of view. But this is a unit of measurement for recognition, that is what constitute an item of PP is not defined. What constitute an item of PP that is not defined under India 16. Thus, judgment is required in applying the recognition criteria to an entity's specific circumstances. So, judgment is required. It may be appropriate to aggregate individually insignificant items such as mold, tools, and dies, and to apply the criteria to the aggregate value. Means we can apply the recognition criteria to group on group basis. On group basis. Understood? Have you understood? Coming to self-constructed asset. Coming to self-constructed asset, to can I say either property, plant and equipment will be acquired, or it can be self-constructed. So if it is self-constructed, then what will be the cost price of property, plant and equipment? Can I say cost price of property, plant and equipment will be same as what we have done? It will include purchase price. It will include directly attributable expenses. It will also include initial estimated cost of dismantling if there is a legal or constructive obligation. So same component. So what India 16 says that whenever an asset is constructed, the cost of self-constructed asset will be calculated as same principle as discussed above. However, whenever self-construction, so there are two type of cost. One is known as specific cost, one is known as allocable cost. So there might be some allocable cost which need to be allocated to particular construction activity. We are expert in that from costing subject. We know how to allocate some cost, overhead cost. So there may be some overhead costs which require allocation. So there may be some specific cost, there may be some allocable cost. From examination point of view, how much amount should be allocated, that will be given in the question. You are not supposed to worry about that. But can I say the items will be same? What you are including, that will be same. Means it must be directly attributable expenses to bring the asset in working conditions. Correct. However, some note is given. Any abnormal loss during construction activity should not be added. Of course, abnormal loss will be charged to PL. Correct. Any internal profit included in the cost should be eliminated. Can I say internal profit means departmental chapter, one department will transfer to other department at cost plus profit, but that profit is not a part of cost, that should be eliminated. So if the cost includes some internal profit, that internal profit should be eliminated. So this is only a clarification. This we know now. So any internal profit if included in the cost price will be eliminated. Correct. This point number 3 is important. Any income related expenses of any incidental operation that may occur before or during the construction or development of an item of PP. Have you understood this point? Any item of income and expense which are incidental, which means any item of income and expense of any incidental operation which may incur before construction or development of an item of P. For example, you are doing construction activity, correct? In two phase, phase 1 and phase 2. This is phase 1, this is phase 2. Right now you have started phase 1. Can I say phase 2? Right now this land is what idle. So you may give this land for parking purpose. So when you have given this phase 2 land for parking purpose, you will generate some income, you will incur some expense. Now the question is that this income and expense whatever you have generated during development or construction period, whether it will be capitalized or it will be transferred to PL. So one clarification has been given, these are not related to construction activity, therefore it will be transferred to PL separately. So this will be transferred to PL separately. So will be recognized in PL, will be recognized in PL. Same example is given under India 16. Income may be earned through using a building site as a car park until construction starts. Understood? Yes, sir. Now, what are excluded from cost price? Can you see if you know what are included? The balance are excluded. Means in simple word, what are not directly attributable expenses will be excluded from cost price. But they have given some example. Let us read that example because in exam that example may be asked. Correct. What are excluded from cost price? Cost of conducting business in a new location with a new class of customer. Correct. Means any staff training expenditure. For example, I purchase one camera and I have given some training to employ how to operate that camera, so that training expenditure will never be capitalized. That training expenditure will never be capitalized. Cost incurred in introducing a new product or services. Any cost incurred for advertisement purpose for launching a new product will never be included. Cost of opening a new facility, cost of opening a new facility, for example inauguration expenses etc., will never be capitalized, will never be capitalized. Any administrative and other general overhead cost, any admin and general overhead cost will never be included. Understood? These are some clarification given. I have understood point. Correct. Now when I say directly attributable expenses, directly attributable expenses. What is the meaning of directly attributable expenses? Directly attributable expenses means those costs which have been incurred only due to purchase or construction of that plant and machinery. Means any cost which will be incurred even though you are not purchasing or you are not doing construction, that is not directly attributable cost. Means any ongoing expenditure, any ongoing overhead cost, means ongoing means which will be incurred even though you don't purchase, even though you don't construct such property plant and equipment, then also it will be incurred, that are not directly attributable cost. Means it will not include any ongoing expenses, it will not include any ongoing overhead cost. Ongoing overhead cost means what? Which will be incurred even though asset is not purchased or asset is not constructed. Understood? So such expenses will not be directly attributable expense. Understood is fine? Yes sir. I hope this also you have understood. Correct. Now, when to cease capitalization? So, what India 16 says that initial recognition will be completed. Initial recognition means when to cease capitalization. Initial recognition will be completed once the asset is ready or available for use, even though it is not put to use. We just try to understand this was the date when you started construction, and this is the date when the asset is ready for use, and this is the date when the asset is actually put to use. Quite possible it is used after 2 months. So you will cease capitalization on this date. This is the date when you will cease capitalization. Means after that you will not do any capitalization. So this is known as initial recognition period. Correct. Means any expenses which is incurred after the asset is ready for use and put to use, these expenses is charged to PL as an expense immediately. Understood? So when to cease? When to cease? When the item is in the location and condition necessary for is capable of operating in the manner intended by management. Means in simple word, when it's ready or available for use. Correct. Means following example, the following costs are not included in the carrying amount of item of PP because these costs are incurred once the asset is ready for use. So any expenses which are incurred once the asset is ready for use will never be capitalized. For example, what cost incurred when the item is ready for its intended use has yet to be brought into use or is operated as less than full capacity. Correct. For example, I started one factory. So can you say for some period it will not be worked in full capacity? For example, we are only using 20% of capacity of that factory. 20% of capacity. So it is already available for use now. You are not using it for 100 capacity, 100% capacity. But it is ready for use. So any expenses incurred, even though it is not used for full capacity, will be charged to PL as an expense. Correct. Any initial operating losses. So once it is available for use, losses may be incurred, and losses incurred that will be charged to pay. It will never be capitalized. Correct. Cost of relocating or reorganizing part or all of its entities operation. If you are relocating, if you are shifting your business from one place to another place, so this shifting cost or relocation cost will never be capitalized. Will never be capitalized. Understood? Some notes are given. Borrowing cost will be capitalized as per the requirement of Ind AS 23. However, there are some government grant which may be also deducted from cost price of property, plant and equipment as per Ind AS 20. I hope you know government grant can be also reduced from the cost price of PP. We'll discuss under Ind AS 20. Chalega? Correct. This also you have understood. Next point. Next point. PP acquired in exchange of non-monetary asset or a combination of monetary and non-monetary assets. Means whenever property, plant and equipment are purchased in exchange of other assets, then what will be the cost price? Correct. So what India says that in this case cost price will be equal to cost price of PP acquired will be equal to fair value of asset given up, fair value of asset given up plus minus cash adjustment, or fair value of asset received, whichever is clearly evident. Means can I say it will be the cost price will be equal to fair value? Fair value of what? Fair value of either asset given up or fair value of asset received, whichever is clearly evident. But if both fair value is given the question, then first preference you will give to what? Fair value of asset given up or asset received? Given up. So first preference will be given to this. Second preference will be given to this. Means suppose in exam it is given 10 lakh, it is given 11 lakh. So cost price of PP will be equal to what? Cost price of PP will be equal to what? 10 lakh. Correct. Suppose this is only given, then cost price of PP will be equal to what? 10 lakh. Suppose this is only given, then cost price of PP will be equal to what? 11 lakh. Understood? Have you understood? Correct. Plus minus cash adjustment. Cash adjustment you will do only with the asset given up. Means any cash paid or cash received. Cash paid will be plus, cash received will be minus. So cash adjustment you will do only with the fair value of asset given up. Don't do cash adjustment with what? Fair value of asset received. Have you understood this point? Yes, sir. But it is quite possible that fair value cannot be measured reliably. Suppose both fair value cannot be measured reliably. Then what will do? So for that, they have given some relaxation. If fair value cannot be measured reliably, then cost price will be equal to carrying amount of asset given up, book value of asset given up. So in that case, if fair value of asset cannot be measured reliably, fair value of both asset cannot be measured reliably, means both are not given, both are not given. Quite possible. Fair value cannot be measured reliably, then cost price will be equal to what? Carrying amount of asset given up plus minus cash adjust. Carrying amount of asset given up plus minus cash adjust. Correct. Understood. There is one more point. See, if the exchange transaction lacks commercial substance, if the exchange transaction lacks commercial substance. What is the meaning of commercial substance? If the transaction lacks any commercial benefit, means you have done such transaction which will not benefit, which will not either increase or decrease your future cash flow. Just try to understand. Suppose I have this mobile, correct, and you have the same mobile, same model, same age, same mobile, same company, same model of same age also, similar asset now. Now we are exchanging. Any commercial benefit? No commercial benefit. If there is no commercial benefit, then can I say we should not recognize any gain or loss? And therefore, in this case, what India 16 says that if the exchange transaction lacks commercial substance, then cost price of PP acquired, because you have acquired one PP, the cost price of new asset acquired will be equal to carrying amount of asset given up plus minus cash adjustment. Understood. So if the exchange transaction what lacks commercial substance, then also will not use fair value, will find out the cost price of new asset acquired equal to what carrying amount of asset given up plus minus cash adjustment. Correct also? Correct now. There is no commercial benefit. Now I am saying same asset, same model, same age, everything is same, similar asset. Correct. Don't worry, in exam they will inform you that this exchange transaction lacks commercial. Correct. Have you understood? Correct. I hope you have understood this point. Now, coming to next point. Subsequent cost. Can subsequent costs are those costs which will be incurred once you started using it? Means once the asset you started using it, then subsequent costs will be incurred. Correct. So there are three types of such cost. There are three types of such cost. Correct. One is known as day-to-day servicing cost. Day-to-day servicing cost. One is known as replacement cost. One is known as major inspection cost. Correct. Day-to-day servicing cost means what? It is routine repair and maintenance. Any routine repair and maintenance, can I say it will never meet recognition criteria, because can I say it will never increase the benefit, and therefore it will be always charged to PL as an expense immediately. Correct. So any day-to-day servicing cost which is nothing but routine repair and maintenance will never meet the recognition criteria and will be charged to PL as an expense. Correct. But about replacement cost and major inspection cost, do you know about major inspection cost? Major inspection cost means suppose big plant and machinery normally requires some inspection after some interval. Inspection means it will not be routine repair and maintenance. It will be major inspection, means each part will be inspected to avoid any accident. For example, aeroplane is there. So as per National Aviation Act, every aeroplane need to be inspected after 2 to 3 years to avoid accidents. So that inspection cost will not be 1000, 10,000 or 1 lakh. It will be in crore. That become major inspection cost. And after every 3 year it is required. Means can I say after every 3 year you are incurring some major inspection to derive benefit for another 3 year? To derive benefit for another 3 year. So can I say of course it may meet recognition criteria. It may meet recognition criteria because it is probable that future economic benefit will flow to the entity in the next 3 years. It should be capitalized. It should be capitalized. So what they are saying, replacement cost. Replacement cost, you understood? The replacement of component of an item. For example, this camera, this projector, I mean, what happened in our class? Projector lens was damaged. Lens is a component. Without lens, so we can't use it. Projector is okay, but lens was damaged. So we need to replace what? Lens. So we are replacing one component of that item of property, plant and equipment. Correct. So when you are replacing old lens with new lens, whether it will be capitalized? Yes, because it will give what? Future economic benefit for some period. So recognition criteria will be satisfied. So what they are saying, apply recognition criteria. If not satisfied, then charge to PL as an expense immediately. But if satisfied, then cost of replacement and inspection cost will be added to the carrying amount of the asset. Have you understood this point? Correct. Now just try to understand. Suppose this is one plant and equipment and there are many parts. Correct. Suppose the useful life of this principal entire item was 20 years. And this component A, component B, component C, component D, component E, component F, component G, component H. Can you see useful life of each component will be different? Useful life of each component will be different. Means for example, in a bus, engine useful life will not be equal to 20 years, na? अरे बोलना नहीं. There will be some fittings, furnitures and fitting in that bus. So that furniture fittings useful life will be different. So suppose the useful life of this component is 10 years. This is 5 year, this is 20 year, this is 15 year, this is 20 year, this is 7 year, this is what, 15 year, this is 5 year. Quite possible. My question to you are, the inter, this is one bus, समझ लो this is one bus or aeroplane, whatever you can. My question to you all, the depreciation will be based on 20 year or depreciation will be based on the useful life of each component. Useful life of means we'll do depreciation component wise. Means for depreciation we apply component accounting. For depreciation we apply component accounting. Means can I say A will be depreciated for how many years? B will be depreciated for how many years? 5 years. Means our journal entry will be bus account debit to cash or bank. We never do accounting component wise. We'll not say engine account debit, fittings account debit. We'll not do journal entry in that. Bus account debit to cash or bank. But for depreciation we'll use component accounting. Correct. Now can I say it means we know the carrying amount of each component. Now suppose this A require replacement. Correct. And suppose the carrying amount of this component is right now 5 lakh. And the cost price of new component is 7 lakh. Quite possible. Carrying amount of component A is right now is what? 5 lakh. And the cost price of new component is what? 7 lakh. So this 7 lakh will be added because it meet what? Recognition criteria. But can I say we should also de-recognize what? Old component. So carrying amount of old component will be de-recognized as per de-recognition principle. Otherwise, so it will be double accounting now. So what we'll do, we will recognize the cost price of new component, but we will de-recognize the carrying amount of carrying amount of old component which is going to be replaced. Understood? That is only given. Check करेंगे. Carrying amount of the part replaced or previous inspection cost should be de-recognized as per de-recognition principle. As per de-recognition principle. This much you understood? Have you understood this much? Correct. This note I will do at the end when I will take one question. But right now you will not understand. Even though you know, I will take these two note at the end when I will take one question. Correct? Correct. But I think basic point you have understood. Basic point you have understood. Coming to subsequent recognition. Subsequent recognition means what? Recognition at each reporting date. Recognition at each reporting date. Understood? Recognition at each reporting date means at year end. For subsequent recognition, Ind AS 16 has given two models, cost model and revaluation model. Option has been given. Option has been given. But this option is class wise, not item wise. This option is available class wise. Means can I say plant is one class, land is one class. Now in plant, there is plant 1, plant 2, plant 3. So this option is not available item wise. You can't opt revaluation model for plant 1 and cost model for plant 2. If you want to opt revaluation model for plant 1, then entire item of property, plant and equipment in that class require to be revalued. So it is class wise, not item wise. Understood? So option has been given either what or what? Revaluation model. Cost model, very easy. Cost model means cost price, whatever we have done right now, less what? Accumulated depreciation, less accumulated impairment loss. Impairment loss means as per Ind AS 36 coming soon. Correct? Means impairment we do as per Ind AS 36. Depreciation we do as per Ind AS 16 only. Correct? So this become carrying amount of what? Property, plant and equipment. Revaluation model means what? Fair value on revaluation date means we need to recognize the fair value. Fair value on revaluation date. Correct. Less subsequent accumulated depreciation, subsequent depreciation, less subsequent impairment loss. Means can I say even though asset is revalued, require impairment as per Ind AS 36. Correct. So even though it is revalued, it require impairment as per Ind AS 36. How to impair will do under Ind AS 36. This become carrying amount of property, plant, equipment under revaluation model. Correct. Now Can I say cost model no discussion required, only we need to understand how to calculate depreciation. But whenever revaluation model, we need to understand what will be the accounting treatment for revaluation. Correct. So what they say revaluation model, one thing we have understood that revaluation to be made for entire class of asset. For entire class of asset. It is class wise, not item wise. Correct. Means it is quite possible that for plant, entire plant we have opted what? Cost model, and for entire building we opted for what? Revaluation model. Quite possible. Quite possible. Correct. Now the question is the frequency of revaluation. Means if you have opted for revaluation model, whether for every year we should do revaluation, but no. Every year revaluation is not required. So when to do revaluation? So what they said, if the item of PP experience significant changes in fair value, if the item of PP experience significant changes in fair value, then annual revaluation is required. For example, for land, normally land experience significant changes in fair value in a developed market. Normally, so for land, if you have opted for revaluation model, annual revaluation required. When a build, but for example, plant, etc. If you opted for revaluation model, fair value will not change significantly, na, at the end of each year. So if fair value does not significantly change at the end of each year, then we'll do revaluation only after 3 to 5 years. 3 to 5 years as decided by the management. Understood? But if you have opted for revaluation model, so we know what will be the accounting treatment. But what will be the accounting treatment? So accounting treatment will depend upon what? First time revaluation or subsequent revaluation. This I hope you all know. First time revaluation, there can be what? Upward revaluation. Upward revaluation means there is a revaluation gain. So this revaluation gain will be transferred to what? OCI. Now you all know OCI. SOPL has two parts, PL and OCI. So this revaluation gain will be transferred to OCI as what? Revaluation surplus. What journal entry will do? PP account debit to OCI revaluation surplus. But if there is a downward revaluation first time, so there is a loss, revaluation loss will be charged to PL immediately. If first time, so revaluation loss will be charged to PL for the first time. I think no doubt. What will be journal entry? PL account debit to property, plant and equipment. But subsequent revaluation accounting treatment will depend upon previous revaluation. Previous revaluation. So what they said, if previously upward, now also upward. So that revaluation gain will be once again transferred to OCI as a revaluation surplus. But previously upward, now downward. So can now downward means revaluation loss. So this revaluation loss will be first adjusted with OCI to the extent revaluation surplus available. Any excess loss will be transferred to PL. Any excess loss will be transferred to PL. I hope very simple. Then previously downward, now again downward. So revaluation loss will be charged to PL immediately. But now upward, so can I say revaluation gain to the extent of previous decrease. Revaluation gain to the extent of previous decrease will be credited to PL. Any excess gain will be transferred to OCI as revaluation surplus. Understood? I think no discussion is required. Correct? Yes, sir. Now coming to the next point. This is very important from examination point of view. Accounting treatment of what? Revaluation surplus. Accounting treatment. Just try to understand one point. See, when we opt revaluation model, that is class wise, but accounting is always item wise. Accounting is item wise. Option is available class wise, but accounting is item wise. Means can I say we need to maintain revaluation surplus of each item separately? We need to maintain revaluation surplus of each item of that particular class separately. Is plant 1 this much revaluation surplus, plant 2 this much revaluation surplus. Understood? So accounting is item wise. Option is available class wise. The accounting treatment I have intensely mentioned that this is what? Item wise. Now the question arises, whatever revaluation surplus we have created, what we'll do about that? So there are two options available for accounting treatment. Whenever option is given, option means simplified accounting. One will be what? Fair accounting, one will be easy accounting. Fair accounting will be always complex accounting, and therefore option is given for easy accounting. Correct? So what is the easy accounting? Simple accounting is what? Revaluation surplus will be transferred to retained earning at the time of derecognition of asset. Means entire revaluation surplus will be transferred to retained earning on derecognition of asset. Means what journal entry you will do? Revaluation surplus account debit to retained earning. Understood? Revaluation surplus account debit to retained earning. Understood? The entire revaluation surplus will be transferred to retained earning on derecognition of asset. Understood? This is simple accounting, but this is not fair accounting. What is a fair accounting? What India 16 says that portion of revaluation surplus, portion means some amount of revaluation surplus will be transferred retained earning during its remaining useful life. During its remaining useful life. But what will be that amount of transfer? Understood? The portion of revaluation surplus may be transferred retained earning during the remaining useful life of asset. Means what they want to say, just try to understand. Suppose this is the date of revaluation and this is the remaining useful life. Correct? Suppose this was the carrying amount revalued at what? 15 lakh. And suppose remaining useful life is what? 3 years. So now you are charging depreciation 555. Correct? How much has been transferred to revaluation surplus? 5 lakh. If there would have been no revaluation, then what would be the depreciation? It would be how much? 3.33, 3.33, 3.33. What is the additional depreciation? 1.67, 1.67, 1.67. Have you understood this point? Have you understood? So what is the amount of revaluation surplus? What is the amount of revaluation surplus? 5 lakh. What is the amount of additional depreciation first year? 1.67. Can I ask one question? This additional depreciation will be charged to PL or charged to revaluation surplus? Have you understood the question? This additional depreciation, my one more objective of this class to identify the mistake which you normally do in exam. Correct? So whenever I'm asking some question, it means in that area you normally do mistake. So first you do mistake, then I will rectify it. And that mistake you need to write down. These are the area normally where student do mistake. This is the basic objective of this crash batch. Correct? My question to you are this additional depreciation charged to PL or revaluation surplus? Follow? No, it will be charged to PL. Depreciation will be always charged to PL. Depreciation will be charged to PL, na? Have you anywhere written depreciation will charged to revaluation surplus? No. But normally student do mistake. भावुक हो जाते. We become emotionally affected in exam. If somebody is asking question, we always will wrong because we are emotionally affected. अरे बोल ना रे. So additional depreciation will be always charged to PL. Means in the first year, how much depreciation will be charged to PL? In the second year, in the third year, the 5 lakh, 5 lakh, 5 lakh will be charged to PL because that is when we have done revaluation. Correct? But what India 16 says that this amount of additional depreciation will be transferred from revaluation surplus to retained earning during its remaining useful life. Means out of this 5 lakh, how much will be transferred retained earning in first year? 1.67. Second year, 1.67. Third year, 1.67. Understood? This is fair accounting. With an amount equal to additional depreciation. Revaluation surplus will be transferred to retained earning during his remaining useful life. Have you understood the terms? I am not saying additional depreciation will be charged to PL. I am not saying additional depreciation will be transferred retained earning. Additional depreciation will be charged to PL only. But what I am saying is the amount equal to additional depreciation will be transferred from revaluation surplus to retained earning during his remaining useful life. This is what is second option given. Normally in exam they ask this. If suppose question is silent, then you can do whatever you want. Understood? Yes, sir. So what are the two accounting treatment given? Either entire revaluation surplus will be transferred retained earning during his means on derecognition of such item, or amount equal to additional depreciation will be transferred from revaluation surplus to retained earning during his remaining useful life. Understood? So amount transferred will be equal to additional depreciation due to revaluation. This is amount transferred from what to what? From revaluation surplus to retained earning during his remaining useful life. Understood? So how to calculate that amount? Depreciation revalued amount minus depreciation on original cost. That you can calculate. However, I'll give one shortcut. Shortcut is what? Revalued amount. What is shortcut? Revalued amount divided by remaining useful life. Means in my case 5 by 3. But this formula can be used only when SLM, not in RBM. RBM hoga, so you need to apply this formula only. RBM means what? Reducing balance method. SLM means what? Straight line method. So straight line method. Normally in exam 99% they will ask SLM. 99% they will ask SLM. So we can do shortcut. Shortcut is what? Amount of revaluation surplus divided by remaining useful life. That will be the amount of additional depreciation which will be transferred to what? Retained earning. Understood? Yes, sir. Correct. This much have you understood? Correct. Now, next point is what? Adjustment of carrying amount of asset due to revaluation means what will be the accounting treatment. In this also they have given two techniques. Means accounting treatment of revaluation. There are two technique given. One is easy technique, one is pair technique. Technique 1. What is the technique 1? Technique 1 says that accumulated depreciation on the date of revaluation will be eliminated. Accumulated depreciation on the date of revaluation will be eliminated through gross carrying amount. Means, let me take one example. What I want to say. This is also expected from my point of view. Still no question have been asked, but expected. Suppose the gross book value. You know gross book value? Either cost price or fair value. Cost price in case of cost model. Fair value in case of revaluation model. Gross book value. Less accumulated depreciation. And net book value means after depreciation. 40,000. So 1 lakh minus 60. 40,000. Now, can I say, suppose you have increased, I need to take the example, otherwise you will not understand. Everyone. What I said, gross book value is how much? 1 lakh. 40,000 is what? This is what? 60,000. Correct. And suppose you have done increase the value by 80,000. It become 1 lakh 20,000. 1 lakh 40,000. 1 lakh 40,000. Galti kar diya. Is given 16. Let me take the example whatever I have given in the book only. 60 and 40. Now it is 1 lakh 20,000. Have you understood this point? Correct. Means this is the increased amount, upward revaluation. Now this upward revaluation will be adjusted with the gross amount on net amount. Can I say this is gross amount represent PP account and this amount represent accumulated depreciation account. Means there are two accounts. One is PP account, one is accumulated depreciation account. Means when you are passing one journal entry, the first journal entry is PP account, debit to OCI. Means can I say you are increasing 1 lakh by 80,000? You are increasing 1 lakh by 80,000 now. So you will increase 1 lakh by 80,000. So this will become 1 lakh 80,000. So can I say it will remain only 60. So if I am saying 1 lakh 80 minus 60 is equal to 1 lakh 20. Correct. But just try to understand when you are saying revaluation model. So can I say in balance sheet what you are writing? 1 lakh 20 1 lakh 80 minus 60 is equal to 1 lakh 20,000. But this is not correct because this amount should be fair value. Means just try to understand what they want to say. When I am saying revaluation model, so what is the carrying amount? Carrying amount is what? Fair value on revaluation date, na? Fair value on revaluation date less subsequent accumulated depreciation. So in this case, when I am taking this example, 1 lakh 80,000 is not fair value. Fair value is what? 1 lakh 20,000. And therefore what they said, ki entire accumulated depreciation will be also eliminated. And this will be eliminated through what? Gross carrying amount. And now you can see this will be 1,20,000 and accumulated depreciation will become what? 0. This will be 1,20,000 and accumulated depreciation will become 0 and net book value will be also 1,20,000. Means we are passing two journal entry. First is what? PP account debit to OCI by 80,000 and second journal entry will be what? Accumulated depreciation account debit to property, plant and equipment. Property, plant and equipment how much? 60,000. Have you understood this? This is technique 1. Means when you are doing technique 1, so in balance sheet, what is the gross book value? 1,20,000. What is the accumulated depreciation? Nil. And what is the net book value? 1,20,000. Accumulated depreciation become nil now. On the date of revaluation, accumulated depreciation will become nil. Subsequent depreciation will now come. Have you understood? This is technique 1. If question is silent, always use technique 1. And question will be silent only. Don't use technique 2. If question is silent, always use technique 1. Don't use technique 2. Understood? But what is technique 2? What they said? Technique 1 you understood? What is technique 2? Technique 2 says that gross carrying amount is restated proportionately to the change in the carrying amount. What they say? Just try to understand. If you give this presentation in the balance sheet, can you say from this presentation it seems that it is a new asset. Therefore, can I say we are not providing fair information to the user? We are not providing fair information to the user. And therefore, they give one fair technique. What is a fair technique? What they want to say? Same example I am taking. 1 lakh, 60,000, 40,000, increase by 80,000, and now it become what? 1,20,000. So what they are saying, this gross carrying amount will be restated proportionately. Means if the net book value is 40,000, now it become 1,20,000. So what is the gross book value in this case? Restated proportionately. Understood now? Are you able to understand? Means if the net book value is 40,000, what is the new net book value? 1,20,000. So if the gross book value is 1 lakh, what will be the restated gross book value? We'll do cross multiplication. Means what we'll do? 1 lakh into 1,20,000 divided by 40,000. How much it is coming? 3 lakh. So this will be restated amount. So 3 lakh will come here. Means we restate gross book value proportionately. Have you noticed cross multiplication? You know, बचपन में cross multiplication means 1,20,000 1 lakh divided by 40,000. Correct? It means, can I say how much PP we are increasing? We increase PP by how much? 2 lakh. Now, gross book value is 3 lakh. It become 1,20,000. Means we need to, what will be my accumulated depreciation? Accumulated depreciation will be also restated. So, accumulated depreciation will now become 1,80,000. 3 lakh minus 1,80,000 is equal to 1,20,000. It means we need to increase what? Accumulated depreciation by 1,20,000. We need to increase the accumulated depreciation by 1,20,000. Means what journal entry we are doing? Journal entry is what? PP will increase by how much? Accumulated depreciation will increase by how much? And the difference will be what? Gain. And that gain will be transferred to OCI. How much? Same impact is coming now. Impact remains same, but presentation changes. So this technique 2 has been given for presentation. Impact remains same. In SOPL, impact remains same. In balance sheet, impact remains same. But presentation changes. Presentation changes. So this is fair technique, but this will be used in exam only. They ask a specific question on this. Otherwise, don't use. Otherwise, don't use. Have you understood this point? Have you understood this point? Correct. Or you can also say in this way, you just first find out the what is the percentage of increase. So 80,000 we can do in simple way also. 80,000 divided by 40,000. How much increase? It is increased by how much percentage? Can I say 200% increase? 200 to increase 1 lakh by 200%, increase 60,000 by 200%. This way also you can do, simple way. So first find out increase percentage. So 80 by 40, so 200% increase. So increase gross book value by 200%, increase accumulated depreciation by 200%. That is only coming na? Chalega? Understood? Yes, sir. I hope this also you have understood. Correct. Now coming to depreciation. Depreciation is very easy. Depreciation, what to say? Correct. But let us read once in fast. Depreciation means what? It means systematic allocation of depreciable amount during the useful life of the asset. Systematic allocation of depreciable amount. Depreciation does not mean decrease in the value. Decrease in the value means either downward revaluation or impairment loss. Depreciation is not decrease in the value. Depreciation means what? Systematic allocation of depreciable amount during the useful life of asset. Correct. Now when to commence depreciation, you only say depreciation will commence from the date the asset is ready or put to use. Ready or put to use. From the date when the asset is ready for use or put to use. This is second area where student do mistake. Identify. We have identified, it will be what? Because if you are not able to say, this doubt hai na? So from the date when the asset is ready for use, not from the date when the asset is put to use. Give star mark. I said we'll identify the area where student do mistake. Normally student do mistake, correct? So depreciation will commence from a date when the asset is ready for use, means it will be depreciated even though it is not used. Then also depreciate. Yes. When to cease depreciation? So depreciation will cease when the date depreciation will cease from the date when the asset is classified as held for sale. Classified as held for sale means as per Ind AS 105 coming soon. You know Ind AS 105? So from a date when the asset is classified as held for sale or from a date when it is de-recognized, whichever is earlier. Whichever is earlier. So from the date when the asset is classified as held for sale or from the date when the asset is de-recognized, whichever is earlier. Then we'll cease depreciation. Correct? Understood? Then one note is given, depreciation does not cease when the asset become idle or is retired from active use unless it is fully depreciated. For example, right now I'm using laptop. Suppose the COVID-19 came and for 2 years there was no face-to-face batch. So can I say it is retired and we are not using it for the time being? Once the face-to-face batch will be coming, then we'll once again start using it. So will you cease depreciation? No, no, no. Because the asset is not classified as held for sale. Asset is not de-recognized. You are not using it for the time being because there is no batch only. So what I will do about laptop? Nothing na. These all benches will be not in use na. Then also we need to depreciate it. Then also we need to depreciate it. So depreciation does not cease when the asset become idle, but it is not classified as held for sale. If it is classified as held for sale, then cease depreciation. Understood? Then can I say we have understood component accounting? Component accounting we understood. Ind AS 16 now mandate the requirement of component accounting. What is the component accounting? Each part of an item with cost which is significant in relation to total cost should be depreciated separately. I hope component accounting will be easy. They will give component cost, they will give component useful life, they will depreciate it separately. Chalega? Yes, sir. Now what is the meaning of residual value? Everyone know that. What is the meaning of residual value? Residual value is an estimated amount that would be currently obtained from the disposal of asset if the asset is of same age at the end of useful life. However, as per the Companies Act requirement, residual value is 5% of original cost. As per Companies Act Schedule 2 requirement. But Ind AS 16 says that we need to estimate the amount of residual value. Correct? Yes. What is the meaning of depreciable amount? Depreciable amount means what? Under cost model, depreciable amount means cost minus residual value. Under revaluation model, the under revaluation model, what will be the depreciable amount? Fair value minus residual value. Correct? But in both cases, at one point of time, residual value will remain same. Please just try to understand. Suppose, because here also student mistake. Suppose entity A is adopting what? Cost model. Entity B is adopting what? Revaluation model. So 10 lakh was the initial cost. 10 lakh was the initial cost. Understood? correct? Now suppose depreciation is 1 lakh, depreciation 1 lakh. Now this become 9 lakh, this become 9 lakh, correct? Now we are re-estimating the residual value. The residual value under cost model is 5 lakh, and residual value under revaluation model will be how much? 5 lakh only. Means can I say residual value will not change because of cost model revaluation model. At one point of time under cost model and revaluation model, residual value remain same. Means can I say under this will be 9 minus 5, this will be what? Suppose revalued by 10, revalued to 15 lakh. So 15 minus 5 will do. Have you understood? The residual value at one point of time under cost model or revaluation model will remain same. This point have you understood? Correct. Then useful life you know. Depreciation method you also know. SLM, diminishing balance method, unit of production method. There are three depreciation methods. First is what? Straight line method. Second is what? Reducing balance method. Third is what? Production method. I am not going to inform you what is this. Just from bachpan say you are doing. Correct. Understood? This point, some clarification has been given. Can I say under SLM and RBM, depreciation will not become zero until we cease depreciation. Under SLM and RBM, depreciation will not become zero until we cease depreciation. But under PUM, if suppose actual production is zero, depreciation will become zero, even though we do not cease depreciation. So under PUM, depreciation may be zero, but it does not amount to ceasing of depreciation. It does not amount to ceasing of depreciation. Due to COVID-19, production stopped. 1 year there is no production. Then also when you charge depreciation, actual production is zero. So depreciation will be also zero. So under PUM there can be zero, but under SLM RBM it cannot be zero. Second, there may be a situation when residual value may be more than carrying amount. Residual value is more than carrying amount. So if residual value is more than carrying amount, so depreciation will be zero, but this will not amount to ceasing of depreciation. Depreciation calculation is zero, but this is not ceasing of depreciation. This clarification has been given. Understood? Yes, sir. Now change in useful life, change in residual value, change in depreciation method. My one question. Here also student mistake. My question to you all, change in residual value will be accounting estimate change or accounting policy change. When we change residual value, it is changes in accounting estimate or changes in accounting policy. Because we know accounting estimate prospective effect, accounting policy means retrospective. Because of this we are discussing. In this also student do mistake. So the residual value accounting estimate, accounting policy. Useful life accounting estimate, accounting policy, account. So can I say residual value accounting estimate, useful life accounting estimate? My question to you all, change in depreciation method will be accounting estimate, accounting policy. Change in depreciation method will be accounting estimate, accounting policy. Bolo? Everyone saying estimate? Thank you very much. Okay, correct only. Means all will be changes in accounting estimate, but normally student do mistake. But I don't know, from CA foundation you might be doing accounting policy, but now there has been change. See, depreciation method will be also considered as changes in accounting estimate, and prospective accounting will be done as per Ind AS 8. As per Ind AS 8. So all will be what? Changes in accounting estimate. So what Ind AS 16 says that residual value, useful life, depreciation method should be reviewed at least at the end of each financial year, and any changes should be accounted as changes in accounting estimate. Apply Ind AS 8 on prospective basis. Then one clarification has been given for land and building. Okay, land is not a depreciable asset. Land is not a depreciable asset, but building is a depreciable asset. So because we use component accounting, even though you have done land and building account, because we are using component accounting, it should be separated for depreciation. So on land component no depreciation, on building component depreciation should be charged. Correct. So land is not a depreciable asset. Why it is not a depreciable asset? Because it has indefinite life. Indefinite life means life cannot be determined. But there are some portion of land which may be depreciable asset. For example, you purchase one land, you have done some improvement on land. Correct now. For example, you purchase one land for organizing some cricket match. So you have done some improvement on land, and that improvement cost is 10 lakh. And that improvement is required after every 5 years. So that improvement cost will be debited to land account only. But that component has some useful life. After every 5 years, you need to do such improvement cost, and therefore that improvement in cost of land will be depreciated. Understood? So some portion of land might be depreciable. Some portion of land might be depreciable. Understood? Because of component accounting. Because of component accounting. Understood? Correct. Now impairment loss will be done separately under Ind AS 36. Correct? So we are not discussing in this. Derecognition. When to derecognize? When to derecognize? When the asset is disposed of, or when no future economic benefit is expected from that asset. So when to derecognize? Either on disposal, or when no future economic benefit is expected from such asset. On disposal means either on sale, or when the asset is given on finance lease. Either on sale, or if the asset is given on finance lease, then also will de-recognize it. You know finance lease? Correct. Understood? Now, whenever there is a de-recognition, so can I say we need to find out gain or loss on sale? How to calculate gain or loss on sale? So we'll first find out sale proceed. From that we'll deduct cost of disposal. Any cost of disposal will be also deducted. Cost of disposal will be deducted. That will be net sale proceed. From that we'll deduct what? The carrying amount of the asset on the date of sale. This will be gain or loss on sale. Yes, if we know that this gain on sale of asset will not be classified as revenue, it will be other income. So gain on sale of asset will not be classified as revenue. Means sale of property, plant and equipment will never be classified as revenue. Revenue means from ordinary activities. This is not ordinary activities, so it will not be classified as revenue. But there is one special point. What is the special point? Let us understand, because it is also expected in exam. Suppose there is one car dealer. Car dealer, now this car dealer has purchased 100 car for sale. For sale now. Now out of this 100 car, 80 car were held for sale in ordinary course of business. So it will be inventory. It will be inventory now. Which Ind AS will be applied? Ind AS 2 will be applied. But 20 car out of this 100 were given on rent. Quite possible. Given on rent, quite possible. But now it will be inventory or property, plant and equipment. This car are held for rental to others. So this will be inventory or property, plant and equipment. It will be property, plant and equipment because held for rental to others. So it will be property, plant and equipment. We are applying Ind AS 16. Ind AS 16 means either you will do cost model or revaluation model. But what happened after 2 years? It was ceased to be given on rented and now included in inventory to be held for sale in the ordinary course of business. Quite possible. So after 2 years, it was ceased to be given on rent and included in what? Inventory to be held for sale in ordinary course of business. Quite possible. So can I say now it will be reclassified from PP to inventory? So what Ind AS 16 says that this car will be reclassified to inventory, to property, plant and equipment at what? Carrying amount. So this journal entry will be done at carrying amount. It will be reclassified from PP to inventory or at what? Carrying amount of such asset. Now can you see this inventory will be sold in future, the sale of inventory? So what Ind AS 16 says that this sale will be classified as what? Revenue. Even though initially it was classified as what? PP. But this sale of inventory, because now it become inventory, sale of such asset which was initially given on rent, now classified as inventory, will be classified as revenue. A clarification has been given. Expected question till now not asked. What they have given? An entity that in the course of its ordinary activity routinely sells item of PP that it has held for rental to other shall transfer such asset to inventory at their carrying amount when they cease to be rented and become held for sale. Correct. The proceeds from sale of such assets shall be recognized as revenue in accordance with Ind AS 1 and 5. On the date of reclassification, what journal entry will do? Inventory account debit to PP at its carrying amount. Got it? Understood? Means almost this India 16 is over. Correct? Now scope. Let us understand scope. Scope means what is not covered in this chapter. Understood? Means even though it may meet the definition of property, plant and equipment, then also it will not be covered in this chapter because other Indias will be applicable to that. First, it is not applicable to PP classified as held for sale. Any property, plant and equipment which is classified as held for sale, what Indias will be applicable? Indias 105 will be applicable. Second, it is not applicable to biological asset other than bearer plant. Means to biological asset, India's 41 is applicable coming soon. What is the meaning of biological asset? Biological asset means living animal and plant. Living animal and living plant are biological assets. But there are some bearer plant to which India 16 will be applicable. There is one exception. To biological asset, India's 41 will be applicable. But if biological asset are bearer plant, then India's 16 will be applicable. Now what a bearer plant, that we need to understand. Correct? Then it will also not be applicable to recognition and measurement of exploration and evaluation of mineral resource. India's 16 will not be applicable. Till now no India's is there for this accounting. No India's. It is also not applicable to mineral rights and mineral reserve. India's 16 is not applicable. There is no specific India's for this right now. So for 6 and D, for this India's 106 is available, but it is going to be amended soon. And it is not in our syllabus. Right now there is one India's 106, but that is not in our syllabus. Because it will change. Soon it will change. Now what is the meaning of bearer plant? This definition is very important. Bearer plant are living plant, but all living plant are not bearer plant. If three conditions are satisfied, that become bearer plant. So bearer plant is a living plant that satisfies how many conditions? Three conditions. First condition, which are used in production or supply of agricultural produce, means which are used for production or supply of agricultural produce. First condition. Second, which are expected to bear produce for more than one accounting period. Which are expected to produce agriculture produce for more than one accounting period. I think two conditions you have understood. Third condition, which has remote likelihood of being sold as agriculture produce except for incidental scrap sales. Means the plant itself is not an agriculture produce. If the plant itself is an agriculture produce, then it is not a bearer plant. Has remote likelihood of being sold as what? Agriculture produce. Means plant itself is not an agriculture produce. Are you getting? Except, can I say, every plant will be sold as a scrap at the end of useful life. So except that. Understood? For example, just try to understand. If I say this is what? A living plant, and this is what? Mango tree. It will meet the definition of bearer plant or not. All three conditions satisfied. First, it is held for production or supply of agriculture produce, expected to bear produce for more than 1 year, and the plant itself is not a agriculture produce. Right? Second, annual crops. Can I say first condition is satisfied, but second condition will not be satisfied because it will be seasonal. 6 months, 9 months, there will be some harvesting period. So it is not expected to produce for more than one period. It will be harvested, entire plant will be harvested. Then again new plant will be grown. The entire plant will be harvested. Correct? Therefore it is not expected to produce for more than one. Second condition not satisfied. Third, I am saying this is what? Sugarcane. A sugarcane plant is itself a plant agriculture produce. Means, can I say, it will be sold as an agriculture produce only, and therefore it is also not a bearer plant. Means only this will meet the definition. So this India's 16 will be applicable. For these two, India's 41 will be applicable. Understood? Have you understood this point? Yes, sir. Now, one thing we have understood that for bearer plant, what will be applicable? Ind AS 16 means the cost price of bearer plant will be determined as per the principle given under Ind AS 16. We will apply the same principle whatever we have done for self-constructed asset. So self-construct, because that will be self-grown only. So self-grown, so it becomes self-constructed PP. Therefore, they have said cost of bearer plant are determined by using the principle of self-constructed PP. Disclosure, can I say you can read by your own? Disclosure. However, disclosure may be also important, correct? But can you read by your own? Disclosure, because I will read, you can also read, correct? Disclosure, you can read by your own. Nothing technical there. Last point, last point, which is also important from examination point. Last point, changes in the existing decommissioning, restoration, and similar liability. We have done initial estimated cost of decommissioning or similar liability will be capitalized. But journal entry we have done property plant account debit to provision, correct? This provision will be recognized at present value as per the requirement of India's 37, correct? Now can I say because it is a provision, it requires changes, it may change also. Reassessment is required, so there may be change in liability due to reassessment, due to change in circumstances. So if there is change, so of course changes we are doing as per the requirement of India's 37. But whenever they change, what will be the accounting treatment in property plant and equipment? India 16 was silent regarding this, and therefore there was a doubt. So whenever doubt comes in the industry, so doubt will be resolved by adding some appendix to that index. Appendix to that index. So this is appendix A to index 16. It is not index 16. It is what appendix A to index 16. Whenever questions come, you can't write as per index 16. You need to write down what as per appendix A to index 16. I don't know whether they will deduct marks for that or not, but you know ICAI, correct? Why do you take risk? Correct now. So this is as per appendix A to India 16. Are you able to understand what is the topic? Changes in DRSL. Correct. Now the entire accounting treatment will be based on which model you have opted. Cost model, revaluation model. Cost model very easy. Can I say increase in liability means increase in liability? So you need to increase the cost. So if increase in liability, the amount will be added to the cost price of property plant. What journal entry will do? PP account debit to provision. Decrease in liability, deduct from what? Cost. What journal entry? Provision account debit to PP. Simple. Simple now. Correct. So increase in liability, changes should be added to the cost. Decrease in liability, changes should be deducted from the cost. But in decrease there can be one point. Just write one. Suppose right now the carrying amount of PP is 10 lakh. Quite possible. And decrease is 12 lakh. Quite possible. I said carrying amount is 10 lakh. Carrying amount means after depreciation is 10 lakh. And decrease is 12 lakh. Quite possible. So what they said, key to the extent of 10 lakh, you deducted 2 lakh will be gain and gain will be transferred to PL. Gain will be transferred to PL. That is only given if a decrease in the liability exceed the carrying amount of the asset, the excess will be recognized immediately in the PL. Can I say after that subsequent means after this accounting increase or decrease, the carrying amount will be revised. The carrying amount of property plant income will be revised. That revised carrying amount will be depreciated during remaining useful life. The revised carrying amount will be depreciated during remaining useful life on a prospective basis. On a prospective basis. Now coming to revaluation model. Just try to understand revaluation model means at fair value. Can you change the fair value? No, we can't change the fair value. Then to it means it will hit the objective of revaluation model. It means if there is an increase in liability, can you do adjustment with PP? No. So whenever we have opted for revaluation model, adjustment will be done through revaluation surplus. Understood? Means increase in liability, there is a loss. So this loss will be debited to what? Increase in liability means loss. Loss will be debited to what? OCI to the extent revaluation surplus available. Any excess loss will be debited to PL. If there is a decrease in liability, that means gain. Gain. Gain na. अरे बोलना रे. So gain will be credited to what? OCI as revaluation surplus. Understood? That is only given check kalo. Means this accounting is same to same whatever we have done for subsequent revaluation. If increase in liability, changes to be debited directly to revaluation surplus OCI to the extent available and balance loss in PL. If decrease in liability, changes to be credited directly to OCI as revaluation surplus. Correct. However, can I say if there is a gain and previously there was a downward revaluation, so gains to be first credited to PL to the extent of previous decrease and the balance gain will be transferred to OCI as revaluation surplus. That is understood fine. Understood fine. That is only given if earlier the asset was revalued downward, it should be credited to PL to the extent of previous decrease and the balance gain should be credited to OCI as revaluation. Got it? In day 16 completed. Difference is not important from examination point of view. Difference between India 16 and AS10 is not important from examination point of view. Regular class we do, but in this batch it is not required. If you want to read, you can read by your own. So difference I will not do in this batch. Not important. If they ask, don't blame me. Correct? So India 16, all points covered. Now doubt. Whatever doubt is there, what have been asked, you can also ask. So one doubt, common doubt. This is a common doubt. The doubt came, just try to understand. Doubt I will take at the end. The doubt came from this topic. What was the topic? The normal credit period wala. Correct. This point we have done now. Initial recognition if the payment is deferred beyond normal credit period. Correct. This point. What is the doubt? He is asking that suppose this is 30 days. If this is the normal credit, so for this credit no interest means no discounting. Now suppose 1 year credit was given. So what he is saying, interest will be from this date ki from the beginning. Means present value will calculate up to this date ki up to beginning. What do you think? Beginning only. Beginning only. Just try to understand. If you add interest, interest will be added always from the beginning. Now if you are giving 1 year credit, now you will not say 30 days no interest. ऐसा नहीं होता है. Interest will be charged always from beginning only. Therefore discounting should be done for entire 1 year. Discounting should be done for the entire 1 year. Have you understood your doubt over? Bolo. Yes. Those who are asking doubt in WhatsApp group, please say yes if you have understood. चलेगा. Only one doubt was asked. You have any doubt? Hmm? Journal entry. Journal entry. Come to the journal entry. So one doubt came about a journal entry for what? Appendix A2 in day 16. So journal entry batao. I will give. So it is what? Changes in liability. So we are doing appendix A. Correct? So first cost model. Cost model can be increase in liability or decrease in liability. Decrease in liability na. Increase in liability journal entry is what? Property, plant and equipment. To provision. Decrease in liability will be what? Provision. Account debit to PP to the extent of his carrying amount. The balance, if any, will be credited to PL. Revaluation model. In this also there can be increase or decrease. Increase in liability or decrease in liability. Increase in liability means loss. Loss will be debited to what? OCI to the extent revaluation surplus available. Any excess loss will be debited to what? PL to what? Provision. Decrease in liability will be gain. So this will be what? Provision. Account debit. This will be credited to PL to the extent of previous decrease, if any. We see there is a previously downward revaluation, so it will first credit to PL to the extent of previous decrease. That is not there, then it will be entirely credited to what? OCI as revaluation surplus. So, have you understood? The journal entry? Journal entry understood? Can I take some questions if you permit? In case deferred payment 3 months, just try to understand 3 months, don't say whether 3 months is normal credit period or it is not a normal credit period. They are asking said if the deferred credit is for 3 months, will you do discounting? My question is that 3 months is a normal credit period or it is not a normal credit period. That you need to say me na. If suppose 30 days is the normal credit period, means you are allowing credit period more than normal credit 90 days now. So of course we'll do discounting. As per India 16 will do discounting. For 3 months we'll do discounting. Understood this point? Have you understood? So you need to first ask me 3 months is beyond normal credit period. If yes, we'll do discounting. As per the requirement of India 16. As per the requirement of India 16. Got it? Yes, sir. Can we come to some questions now? Questions. I've already given you what? PDF. Come to that PDF. You can see in PDF all the Indias has been given. Correct? You will come to India 16 PDF. India 16 PDF. Whatever question is given, that will do. Chalega? In this PDF now, if you are my student and you have recent question bank, so that question bank is also sufficient. देखो, I have said question number 5. This is question number 5 of my question bank, but recent question bank. So I have not changed the number of my question bank. Are you able to understand what I am saying? Correct? So these all questions have been taken from my question bank only, but not all. Only with what I feel it is important to understand the concept. Can we start taking questions? Bolo. Bolo. Yes. So what they said, first question, on 1st April 2001, an item of PP is offered for sale for 10 million with payment terms being 3 equal installment of 33,33,333 over a 2-year period. Payment are made on 1st April, 31st March, 31st March. His first payment is done on 1st April, then second payment is done at the end of first year, third payment is done at the end of second year. The property developer is offering a discount of 5%, means 0.5 million, correct? If the payment is made in full at the time of completion of sale, implicit interest rate is 5.6%. My question to you all, this 5% is a trade discount or cash discount? How cash discount? This is given at the time of trade only. No, at the time of trade, on completion of sale. Trade discount means any discount which is given on trade date. Means if it is cash payment, cash sale, so payment will be done on trade date only now. Cash discount is only given on credit sales. Cash discount cannot be available on cash sales. But the cash discount is given on cash sales or on trade sales. Just try to understand. Cash discount is normally given when the settlement date and the trade date are different. Normally students think this is the cash discount, but this is not cash discount. Any discount given on trade date is what? Trade discount of whatever nature. From accounting point of view, don't go to your client point of view. What your client is saying that we don't know. We think from accounting point of view. Whatever discount given on trade date that is known to us, to deduct ना. अरे बोलना रे. So any discount given on trade date is trade discount. So can I say what is the normal purchase price? Normal purchase price at normal credit. Can I say it will be 10 minus 5%? Means what? 10 million means 100 lakh. 100 lakh 5%, 5 lakh means can I say purchase price at normal credit rate will be 95 lakh? Correct. Means can I say present value of this will be equal to this? If you want to calculate present value of this 33 lakh 33,000, can you give me discount factor? Y0, Y1, Y2. Can I say at what percentage? You are 5.36%. Can you give me discount factor, everyone? This first will be 0. Second will be 0.949. Third will be 0. 9008. This will be 1. Total will be what? 2.8016 multiplied by 33,33,333. Karo. How much it is coming? It's coming how much? I'm not getting the answer. But it's coming 95 lakh. How much? No, we have done some mistake in this. What is the rate? Calculate once. 5.36. This is not correct, na? Fast. 9491. This is coming 9491 only. This is 9008. So total is coming what? Total is correct. It is 2.8. No, it is not correct. 2.8499 na? Into 33 lakh 33,333. Now how much it is coming? It will be approximately 95 lakh. Check karo. Approximately 95 lakh. Is present value of future payment is also 95 lakh. The cost price will be equal to 95 lakh only. Or I already said present value of future payment will be equal to purchase price at normal credit term. So what was the purchase price at normal credit term? 95 lakh only. Means what journal entry we are doing? What journal entry will do? First, PP account debit 95 lakh to bank. How much already paid on this date? 33 lakh 33,333 paid. And how much payable? Payable will be difference. Payable will be how much? 61 lakh. Correct. Now can you see we'll calculate interest on this for 2 years? That we can do. Interest will be charged to PL as an expense immediately. Have you understood this point? I hope you have understood. But normally students are confused why you are taking 95 lakh. It should be 100 lakh. Have you understood? This will be 95 lakh only. So any discount given on trade date is trade discount, not cash discount. Any discount given on trade date will be always trade discount. Kasam khalo. What promise? Bolo. Any discount given on trade date is trade discount. Okay, understood. I think balance journal entry you can do by row. This is what? Very simple journal entries. Yes, sir. Coming next question. On 1st April 2001, Sun Limited purchased some land for rupees 10 million, including legal cost of 1 million. So legal cost will be added. So 10 million will be capitalized. Correct. In order to construct a new factory, construction work commenced on 1st May 2001. Construction was commenced on which date? 1st May. Sun Limited incurred the following costs in relation with the construction: preparation and leveling of land. Can this will be capitalized? Purchase of material for the construction. Can this will be also capitalized? Employee cost of construction worker. Can I say 2 lakh per month? So we need to find out for how many months. But this will be also capitalized. Means it will be capitalized during construction period till the asset is ready for use. We need to find out for how many months we will be capitalizing. That now we don't know. We will wait for the entire question to be completed. But it will be capitalized or not. But 2 lakh into number of month we don't know. Okay. Overhead costs incurred directly on the construction of factory. Will it be capitalized? Follow? But into number of month that we don't know. Correct. Ongoing overhead cost, whether it will be capitalized. Ongoing means which will be incurred even though construction does not take place. Correct. So this will not be capitalized. Khata laga. Income received during temporary use of factory premises as car park, whether it will be capitalized. No, khata laga. Cost of relocating employee to the work to a new factory, shifting cost, whether it will be capitalized. No, baba, no. Cost of opening ceremony, whether it will be capitalized. No, baba, no. The factory was completed on 30th November 2001. So from 1st May to 30th November, how many months? 1st May. May, June, July, August, September, October, November. 8 months not, 7 months nalayak. One mistake, 0 marks. And then we blame what ICI. Then we started blaming ICI. You are saying 8 months. Count it what? Carefully. It is 7 months. We can do into 7. Into 7. Correct? Yes, sir. Then, which is considered a substantial period of time. What they are saying, 7 months is substantial period means of course there will be some loan borrowing cost will be also capitalized. Borrowing cost will be also capitalized. And production began on 1st Feb. Can I, this point, this date is not important. The date when the asset is put to use. What is important? 30th November or 1st Feb? November means depreciation will commence from 1st Feb or 30th November. Means depreciation will be from December, January, February, March. 4 month depreciation. 4 month depreciation will be charged. The overall useful life of factory building was estimated to 40 years from the date of completion. However, it is estimated the roof will need to be replaced for 20 years after the date of completion, and the cost of replacing the roof at current price would be 30% of total cost building. The component accounting, yes, 30% will be roof, 30% will be depreciated for how many years? 20 years. Balance will be depreciated for how many years? 40 years. Component accounting. At the end of 40-year period, Sun Limited has a legally enforceable obligation to demolish the factory and restore the site on its original condition. So will capitalize initial estimated cost at present value. The directors estimated the cost of demolition in 40-year time will be 20 million, and annual risk adjusted discount rate which is appropriate to this discount is 8%. The present value of rupee 1 payable is 40-year time at annual discount rate is 8%. 4.6 cents. Cents means what? Divide by 100. So they have given discounting factor in cents, but we require at rupees na. So what you will do? 4.6 divide by 100. What is the discounting factor? 0.046. Understood? Here also you can do mistake. Means they are playing with your minds. They are trying to play with your minds na. So be careful by reading the questions. The construction of factory was partly financed by a loan of 17.5 million taken out on 1st April 2001. The loan at an annual rate of interest 6% during the period 1st April 2001 to 31st August 2001, when the loan proceed has been fully utilized to finance the construction. Sun Limited received investment income 1 lakh on temporary investment. If you know India is 23. So under India is 23 for specific borrowing cost will be capitalized but reduced by any income which is earned on temporary investment. So 1 lakh will be income on temporary investment. So that will be deducted. Correct. Now the question is that we'll calculate borrowing cost to be capitalized on 17.5 into 6 months, 6%. But for how many months? From 1st April ki from 1st May? Can I say construction begin from 1st May? So capitalization period will start from 1st May. This will discuss under India's 23 if you have forgotten. India's 23 says that capitalization will commence when the expenditure on qualifying asset is being incurred. So this was taken for construction, not for the purchase of land. So purchase of land will not be considered. Construction started from 1st May. Therefore, capitalization will start from 1st May. Means for 7 months, and it will cease on the date when the asset is ready for use. So it will be capitalized for how many months? 7 months. Understood? Correct. Now you can read what they have given answer. You can purchase of land, preparation of leveling, material will be capitalized. This will be also capitalized. These figures are given in thousand. Huh? Figures are given in thousand. So we can convert the figures into thousand. Then directly overhead cost. Ongoing overhead will not be capitalized. Income from car parking will not be capitalized. Relocation cost will not be capitalized. Opening ceremony will not be capitalized. Finance cost for 7 months they have done. Calculate this amount is coming. Check karo. Mean this will be 17.5 into 6% into what? 7 by 12. Same amount is coming. Check karo. Correct. Investment income will be deducted. Deducted na. So you can say net amount will be capitalized. This is the net amount to be capitalized. any investment income on temporary investment of fund will be deducted from borrowing cost. Now you can see 612.5 minus 100. That amount will be capitalized. So you can see borrowing cost will be 612.5 minus 100. Correct. Then demolition cost will take what? Present value. So what was the 20? It was how much amount? What was the estimated amount? What was the estimated amount? It was how much? 20 million. 20 million into 0.046, how much? It is 0.92. How much given? 920 in thousands. Correct. Then total become 19,912.5 in thousand. Correct. Now can you say out of these 10,000 is land? Land is not depreciable, and 9912.5 is building, is factory building, that will be depreciable. Out of these 30% is roof and 70% is other. For 30% will charge depreciation for 20 years, and for 70% will charge depreciation for 40 years. So you can see total depreciable amount is 9912.5, and on two part they have calculated like this: 9912.5 into 30% divided by 20 into 4 by 12 4 month, and balance 70% they have done what? 1 by 40 into 4 by 12. This is a total depreciation. Total depreciation become 107.38. So if you minus from this 19,912.5 total depreciation, this become the carrying amount of factory. Factory means including land. Understood? Can I say calculation is required? One mistake in identifying the information you could check, but very simple question. Only calculation you need to be very much clear about the calculation month, etc. Yes, sir. We'll take one more question. Whether this speed is okay? Everyone, live class. Whether this speed is okay, I should be slow. Please respond, everyone. Speed is fine. Okay. Now, this question number 24 is very interesting, but till now not asked in exam. Correct? Till now not asked in exam. So if not asked, so it is very weak. It become very important. Can be asked in exam. Therefore, I have taken this question. NDD has a nuclear power plant and a related decommissioning liability. The nuclear plant started operating on 1st April 2001. The plant has a useful life of 40 years. Its initial cost was 1,20,000. This included an amount for decommissioning cost of rupees 10,000. Means 1,20,000 is inclusive of 10,000, and this decommissioning cost is nothing but present value. Bola. This decommissioning cost will be included present value, which represent rupees 70,400. This is future value. In estimated cash flow payable in 40 years, discounted at risk adjusted rate of 5%. Means they have given present value. Thank you very much. And 1,20,000 is inclusive of 10,000. Thank you very much. Correct. Thank you very much. Na? Yes, sir. Thank you very much. Means they have given the required information. The entity's financial year end on 31st March. Assume that market based discounted cash flow valuation is 1,15,000 is obtained at 31st March 2004. They have given market based discounted cash flow. Underline the word market based. Whenever they say market based discounted cash flow, it means this is fair value. Market based discounted cash flow means they have given fair value. How to measure fair value? That is given under Ind AS 113. But in this type of chapter, they will give fair value. They will give fair value. So it means they have given 1,15,000. This valuation is after deduction of an allowance of rupees 11,600 for decommissioning cost. Means can I say from 1,15,000 this 11,600 the must decommissioning cost is already deducted? Already deducted. which represent no change to the original estimate after unwinding of 3-year discount. Means if your discount is 10,000 for 3 years at a rate of 5%, same 11,600 will come. Means what they are saying, there is no change in decommissioning liability. There is no change in decommissioning liability after 3 years. On 31st March 2015, the entity estimated that as a result of technological advances, the present value of decommissioning liability has been decreased by 5,000. Means in the next year, there is changes in decommissioning liability. Means to apply Appendix A to India 16. We to apply Appendix A to India 16. Correct. The entity decide that full valuation of asset is needed on 31st March 2005 in order to ensure that carrying amount does not differ materially from the fair value. The asset is now valued at rupees 1,07,000, which is net of an allowance of reduced decommissioning obligation. How the entity will account for the above changes in decommissioning liability if it adopt revaluation model? Have you understood the question? First we need to understand, have you understood the question? Follow. Have you understood the question? Bolo, I'm asking something. You have not understood the question? Can I conclude that you have not understood the question? So let me explain you the question first. This is the question. Correct? Now, what happened? Just try to understand. On 1/1/4/2001, they have given initial cost 1,20,000. This is inclusive of DRSL 10,000. This DRSL is nothing but a present value of future amount discounted at 5%. Correct? Means 1,20,000. 1,10,000 is the cost component and 10,000 is estimated component. Yes, sir. Then they have given on 31st March 2004, after 3 years, they have given fair value 1,15,000. They have given fair value 1,15,000. And this is after deducting what? This is after deducting decommissioning liability, means decommissioning cost. So this is after deducting decommissioning cost. Means 1,15,000 is after deducting what? Decommissioning cost. Now this decommissioning cost, everyone, this decommissioning cost, can you say this is nothing but cost on disposal? Correct? Cost on disposal means it will be incurred at a time of sale. So what India's 113 says that fair value, to calculate fair value, we should not deduct any cost of disposal. Means transaction cost incurred at a time of sale will not be deducted. Means can you say fair value should be excluding, means fair value, whenever you are calculating fair value, from that should we deduct any decommissioning cost? We should not deduct any decommissioning cost, but they have given 1,15,000 after deducting what? Decommissioning cost. So this is known as fair value less cost to sale. Means they have given fair value less cost to sale, but we want fair value. We want fair value now. Are we able to understand what I am saying? Means revaluation is done at fair value or revaluation is done at fair value less cost to sale. Revaluation is done at fair value or revaluation is done at fair value less cost to sale. Fair value, but what they have given? Fair value less cost to sale given. It means can I say we need to find out fair value. So they have given cost to sale, how much? Transaction cost, means cost of decommissioning, how much they have given? 11,600. If we add 11,600 to 1,15,000, so what will get? Fair value. So can I say fair value is equal to 1,15,000 plus 11,600, means fair value is what? 1,26,600. This much you understood? Have you understood? But guys, this 11,600 is nothing but after adding 5% for 3 years, and there was no change in decommissioning liability, they have said. There is no change in decommissioning liability as on this day. This much you understood? Correct. Now, in the next year, on 31st March 2005, once again they have given fair value less cost to sale 1,07,000. Once again they have given fair value less cost to sale 1,07,000. Can I say from this also what has been deducted? Cost to sale has been deducted. So we need to once again add it, but they have not given the amount of decommissioning cost. But what they have given in this year, decommissioning liability will be decreased by 5,000. It means we need to calculate what will be the amount of decommissioning cost. So can I say if you add 11,600, if you add 5% interest, so 5% interest, how much it is coming? 12,180. So 12,180 means 12,200 approximately. From 12,200, if we deduct 5,000, so what is the decommissioning cost? 7,200. So it means we need to add what? 7,200. We need to add 7,200. Are you able to understand? Once again, what I am saying? If you add 5% on 11,600, so 5% when you are adding, how much you are getting? 11,600 into 1.05 is equal to 12,180, but let me take 12,200 approximately, because in the solution they have taken 12,200. In exam you can take 12,180. In exam you can take 12,180, but to match with the solution I am taking 12,200. So 12,200 they have taken. They have said decrease by how much? 5,000. Means what is the decommissioning cost right now? It is 7,200. So 7,200 if you deduct from one, if you add back to 1,07,000, you are getting fair value. What is the fair value? 1,14,200. Have you understood? Now this become perfect question. Understood what was the highlight of this question? They have not given fair value, they have given what? Fair value less cost to sell. But for revaluation, what we want? Fair value. Normally student do mistake. For revaluation we want fair value or fair value less cost to sell? Fair value. Third area where student do mistake. Understood? Now we can do it. Solution, if I read, you will understand. Here is the first we need to calculate the carrying amount. This is my class note of regular batch. So I'll give you the class note of regular batch PDF also. Don't worry. If you want, I'll give. If you don't want, then also I'll give. So I'll give you the class note of my regular batch. Whatever question I have taken from my question bank, all are solved यहाँ पर. Correct? Understood? Yes, sir. So calculation of carrying amount of nuclear plant. First, we need to find out carrying amount of nuclear plant as on 31st March 2005. What is the initial cost? Can I say first we'll charge depreciation for 3 years, because revaluation is done after 3 years. Depreciation for 3 years will be 1,20,000 minus 0, because residual value 0, divided by how much? 40 into 3, it will come 9,000 approximately. So this become carrying amount before revaluation. Before revaluation. Now we'll do revaluation. So what is the fair value given? Fair value given 1,26,600. So increase now. This will compare with this now. Carrying amount is 1,11,000. What is the fair value we calculated? We calculated 1 lakh. We calculated now 1,26,600 means fair value plus fair value less cost to sell plus decommissioning cost. 1,26,600 will come. Have you understood this point? So the difference will be what? Revaluation, upward revaluation, which will be credited to OCI as revaluation surplus. So this will be credited to OCI as revaluation surplus. Now this become what? Fair value means revised carrying amount. On the revised carrying amount, once again we'll charge depreciation. Depreciation for 1 year. Depreciation for 1 year will be what? What is the remaining useful life? 37. So 1,26,600 divided by 37. How much depreciation? 3,420 approximately. Then this come what? Cost price of what? Sorry, carrying amount as on this date. But before revaluation, once again they have given fair value. How much fair value they have given? 1,14,200. We have added 7,200 to fair value less cost to sell. So 1,14,200. The difference will be downward revaluation. Then downward revaluation will be decreased. So this revaluation loss will be first adjusted with what? OCI to the extent revaluation surplus available. So whether we have sufficient revaluation surplus, check करेंगे. Yes, we have. So it will be adjusted with what? Revaluation surplus only. Understood? Have you understood this? Correct. Now we'll come to decommissioning liability. Calculation of decommissioning liability. So initial value was 10,000 decommissioning liability. Means provision for decommissioning liability. Initial was 10,000. This is liability. We'll add interest cost for how many years? 3 years. So we have added interest expense for 3 years. It will be 10,000 into 1.05 to the power 3. This will be approximately 1600. Is I have taken the solution as per solution. However, some approximation amount will come. You can take that in exam. Correct. It become 11,600. This is only given in the question. 11,600. Then once again we'll add interest expense for the 1 year. So it will be approximately 600. It will become 12,200. Now decrease by what? 5,000. To decrease by 5,000, we'll apply appendix A. Now revaluation model. So this decrease will be adjusted with cost price or revaluation surplus. Revaluation surplus. Appendix A to India 16 decrease. Decrease means gain. Gain will be transferred to what? OCI as revaluation surplus. Are you able to understand? Very good question till now not asked. Very good question till now not asked. They are not asking difficult questions in exam. Understood? So this is decrease. Decrease will be transferred to what? OCI as revaluation surplus. Correct? And then this become carrying amount of decommissioning liability. Correct? Now let us come to the accounting treatment. So can I say on 31st March 2004 there was upward revaluation. Whenever upward revaluation you will apply technique 1 or technique 2. Question is silent. Technique 1. So entire accumulated depreciation will be eliminated. So what was the accumulated depreciation? 9,000. So what journal entry will do? Accumulated depreciation nuclear plant, and then we'll pass journal entry PP account debit to OCI with the amount of upward revaluation, that is 15,600. Correct. Then on 31st March 2005 there was downward revaluation. Once again we'll eliminate accumulated depreciation. So now can I say at this point of time accumulated depreciation was 3420 only. Correct. That will be also eliminated. Now downward revaluation, what journal entry will do? Because revaluation surplus is available, so OCI revaluation surplus to what? Property, plant and equipment. Understood? Then there was decrease in DRSL also. Decrease in DRSL 5,000. This will be transferred to what? This will transfer to OCI. Decrease means what? Gain. Gain will be transferred to what? OCI under revaluation model. What journal entry will do? Provision for DRSL account debit to OCI as revaluation surplus. So provision for decommissioning liability to OCI. Have you understood the journal entry? Correct. Then we can prepare extract of balance sheet like this. You can prepare. That is given the solution. Have you understood? Any doubt? Correct. Good question. Therefore, I have taken. One new question has been added for Appendix A to India's 10. This may be also asked in exam, but very easy. What they have given. H Limited purchased an item of PP costing rupees 100 million, which has a useful life of 10 years. The entity has a contractual decommissioning and site restoration obligation estimated at 5 million to be incurred at the end of 10th year. The current market based discount rate is 8%. So you can find out what present value. So can you give me what is the discounting factor for 10 years? How much? So 5 into what? 0 point. We can say 50 lakh. 5 million means 50 lakh na. So 5 into how much? 0.463. You are not confident. Correct or wrong? It is coming 2.315. Let us check whether it is correct or not. It is not correct. 2.32. अच्छा चलो ठीक है, correct only. 2.32. 2.32 approximately. चलेगा? Understood? Have you understood this point? You can add on 2.315 also in exam. Okay? The company follow SLM method for depreciation. H Limited follow cost model. Thank you very much. Cost model. Okay? Determine the carrying value of PP and decommissioning liability at each year end when there is no changes in the expected decommissioning expenses, expected timing of incurred. Means there is no changes in DRSS. It's very easy. The first case there is no changes. Then it is very easy. So can you see your cost will be what? 100 plus 2.315. So your cost price will be 102 0.32, that will be depreciated for how many years? 10 years. On SLM basis, divide by 10 because there is no residual value. And can I say on decommissioning liability, you will add interest cost every year at the rate of 5%? Rate of 8%, sorry, at the rate of 8%. अरे बोलना रे. On decommissioning liability, opening balance is 2.32. On that, you will add interest expense at the rate of 8% every year. So automatically at the end of 10 years, it will be equal to what? 5 million. That is only given. Check kar lo in the solution. Check kar lo. This is depreciation for, this is carrying amount. Then 2.32 interest. You can add it. This become 5. First case was very easy. Second case will be interesting. Second case, what they say. At the end of fourth year, the entity expected estimated cash flow on account of decommissioning and site restoration to be incurred at the end of useful life will be 8 million. So at the end of year 4, so can I say first we need to find out what is the decommissioning liability at the end of year 4. Is carrying amount of decommissioning liability at the end of that already be calculated? Can I say carrying amount of decommissioning liability will be 3.15? This is 3.15. Then what they have said, now the estimated cost will be how much? 8 million instead of 5 million. Discount rate remains same, 8%. So can I say now you will discount 8 million for how many year? How many year? You say at the end of 4 years, 6 year. So discount it for 6 year. How much it is coming? 8 million multiplied by what? How much? Discounting factor you will give me. 0.63 is equal to how much? 5.04. 5.04. Let's see what they have calculated. They have also calculated how much? 5.04. Thank you very much. And what is the carrying amount? Carrying amount was 3.15. The difference will be increase. Increase will be added to what? No, this is cost model. देखो कर पड़ो क्या ना? This is cost model. Increase will be added to the cost price of PP. Means you will do generate PP account debit to provision na. This is cost model. It will not be adjusted with revaluation surplus. There is no revaluation surplus rate. Correct. Now cost model, it will be added to what? Cost price. So this 1.89 will be added to PP account debit to provision. Correct. Means can I say at the end of fifth, at the beginning of fifth year, what was the carrying amount already be calculated? Carrying amount already be calculated 61.39. 61.39 will increase by what? 1.89. It will become how much? 63.28. Now this will be depreciated for how many years? 6 years. Divide by 6, you will do this. Same amount will come. Super easy. But calculation mistake you need to avoid. Super easy question. And can I say this 5.0 for new liability? Now once again we will do unwinding of interest at a rate of what? 8%. Unwinding of interest means what? Adding of interest. Unwinding of interest means what? Addition of interest. Chalega? This also you have understood? Correct. Correct. Question 25. This question already I have discussed. I have said about unit of measurement, that road wala example. I said already asked in exam, same question have been asked. ABC Limited is setting up a new refinery outside the city limit. In order to facilitate the construction of refinery and its operation, ABC Limited required to incur expenditure on construction and development, railway sidings, road and bridge. So ABC Limited incur the expenditure on construction and development, it will not have ownership right on this item, and they are also available to use to other entity and public at large. There is no control. Whether ABC Limited can capitalize the expenditure incurred on this item of PP? If yes, how should this be depreciated and presented in financial statement? Well, can we capitalize? Yes. Depreciated based on component accounting is based on the useful life of road and railway siding, etc. Can you read the solution by your own? This question was asked in exam. Everyone says out of syllabus. Means when you don't read, then we'll say na out of syllabus. Bolna rahi. This 37 super expected question. Super expected question. Correct. In this only I need to explain one point. Only one point, but before that I need to read what I have left. I left one point now. What point I have left? When I was doing what subsequent cost. This point. I said nah, these two note I will do at the end. Correct. So we are doing replacement cost and major inspection cost. Major inspection cost. What they want to say? If you say component accounting, everyone. If I say component accounting, so component accounting means what? Can I say if the significant cost is if any component has significant cost, then it will be depreciated separately. But if any component does not have significant cost, then can I say will not depreciate it separately because of maturity concept. So this item, suppose this one component may not have significant cost, so this will be depreciated. But as per the life of remainder item, means for example aeroplane. So aeroplane is the outer body, so that become principal item, and in that there are many components. So small component will be added to the principal item only. The small component will be depreciated based on the life of principal item. Means 20 year. Suppose aeroplane outer body is a useful life 20 year. So insignificant component will be depreciated along with what? The principal item, remainder item based on its useful life due to which concept. Otherwise, so can I say small item also we need to find out what? Useful life. That can I say the task will be tedious. It will be complex accounting now. There was some relaxation has been given. For insignificant item you can ignore component accounting for depreciation. But can I say their replacement may be possible? If their replacement is there, so can I say we need to add cost of new replacement and de-recognize what? Carrying amount of old item, old component. But can I say it is not depreciated separately? So it is quite possible we are not able to find out a carrying amount of such component. Are you able to understand? But we need to de-recognize it. So for that purpose, what is given? If it is not possible, now you will understand. If it is not possible to determine the carrying amount of replaced part, quite possible. In that situation, we are not able to find out a carrying amount of replaced part because we are not following component accounting of that because the cost might be significant. Correct? Then cost of replacement will be used as an indication of cost or replaced part which was at a time when it was acquired. Means the cost of new replacement will be taken as an indication to find out a cost price of old part. Means after 6 years if you are doing replacement, so we can apply 6-year discounting and we can find out what may be the cost price at the beginning of the year. Then we can apply depreciation on that and we can find out carrying amount. Understood? Have you understood what I am saying? Correct. Similarly, point number B, carrying amount of previous inspection will be de-recognized. Carrying amount of previous inspection will be de-recognized. Even if the cost of previous inspection was not identified in the transaction in which the item was acquired or constructed. If necessary, the estimated cost of future similar inspection may be used as an indication of what the cost of existing inspection component was when the item was acquired or constructed. Have you understood this part? This para, have you understood? Not understood? I have also not understood. Have you understood? I will explain. And for this point number B, one question has been given. Let us understand the question, then I'll come back to this. Let us read that question. Flying Airways Limited is a company which manufactures aircraft part and engine and sell them to large multinational companies like Boeing and Airways Industries. On 1st April 2001, the company began the construction of new production line in its aircraft parts manufacturing said. The costs relating to the production line are as follows. The cost of basic material list price 12.5 million less 20% discount. So this will be capitalized. Bolo. Recoverable goods and service tax included incurred not included in purchase cost. Recoverable tax whether it will be capitalized. No. Imply cost of construction staff for those 3 months to 30th June. So for 3 months they have given 3 months. So this will be capitalized. Other overhead directly related to construction. This will be also capitalized. Payment to external advisor relating to construction. This will be also capitalized. Expected dismantling and restoration cost. This will be capitalized, but at present value. Need to find out present value. The construction staff was engaged in production line, which took 2 months to make ready for use and brought to use on 31st May. Means 2 months, but this is for how many months? So we should take only for 2 months, and 2 months how much will come? How much? 1200 divided by 3 into 2. How much? 800. We'll take 800. Understood. The other overhead was were incurred in 2 month period only. So this means this is correct. They included an abnormal cost of 3 lakh. Oh. So this 900 is inclusive of abnormal cost. We will do 900 minus what? 300. The production line is expected to have a useful economic life of 8 years. At the end of that, Flying Airways Limited is legally required to dismantle the plant in a specified manner and restore its location to an acceptable standard. The amount of 2 million already given mentioned above is the amount that is expected to be incurred at the end of useful life. The appropriate discount factor is 5% and they have given discounting factor. So we'll do 2000 into what? 0.68. Thank you very much. 4 years after being brought into use, the production line will require a major overhaul to ensure that it generates an economic benefit for the second half of its useful life. Means after 4 years, what is required? Inspection cost is required to generate benefit for the next 4 years, and that inspection cost after 4 years will be how much? 3 million. This will be incurred after 4 years. The company compute its depreciation charge on monthly basis. No impairment has been incurred. Analyze the accounting treatment. Only I need to explain this point. This question I am doing only for this para. Only for this para. Correct? First, let me check whether you have understood this or not. This 10,000 you have understood. Minus 800 you understood. Plus 600 you understood. Other overhead means other overhead minus abnormal loss. Then 500 you understood. External advisor. Then 1360 present value you understood. Present value you understood. This become 13,260. Now only I need to explain what depreciation was. Just try to understand what I am explaining. What they have said. 8 years is the life. After 4 years, there will be what? Major inspection cost. How much? 3 million. 3 million means how much? 3,000 na? We'll take 3,000 or 300? 3,000 na? 30 lakh. Means we are taking in thousands na? The figure is in thousand. Okay. Correct? And what is the cost? Initial cost? 13,260. 13,260. Now just try to understand what they want to say. This 13,260. Everyone. Correct. Suppose I am doing some protection. First, suppose you want this mobile. Suppose this is a big plant and machinery. This mobile is big plant and machinery. So this plant and machinery I have constructed. Correct. Can I say before making it available for sale, I have done some inspection or not? Huh? Means inspection cost is already added. But you purchase it from me at 13,260. Correct. Bole yes or no? Already inspected. Means this inspection cost will give benefit for how many years? First 4 years. Then after 4 years you need to again incur inspection cost by your own. So 3,000 you have incurred. This will give benefit for next 4 years. But can I say initial cost includes some inspection cost or not? And that will give benefit for how many years? 4 years. Means can I say it has two part? It includes some inspection cost which will give benefit for how many year, and balance part will give benefit for how many year, 8 year. So what Ind AS 16 want to say that even though inspection cost cannot be determined or is not known, you need to estimate it. And estimation will be done कि after 4 year how much you will incurred if inspection was done on today. So guys, this 3000 was given as a current cost. We just read it what is given, check करेंगे. Let us read the question. Now you will understand the emotions of this question. 4 years after being brought into use, the production line will require a major overhaul to ensure that it generates economic benefit for the second half of its useful life. The estimated cost of the overhaul at current price means as on today, means if we incur similar expenditure right now, how much you will incur? Means can I say it is given at current price, so any discounting is required. Discounting is not required. Means if you incur similar cost as on today, right now on initial recognition, what will be the cost? So can 3000 become component of inspection cost, balance become what? 10,260. Other, this will be depreciated for 4 year, this will be depreciated for 8 year. Bolo yes or no? Means right now they are not asking about this. They have not asked about this, what will happen after 4 years. This 3000 if incurred today, it will be 3000, means after 4 years, so it may be 4000 also na. So this 3000 whatever has been given, this is not future cost. What they are saying, if inspection done today, so how much amount will be incurred at current price, that will be 3000. If they have given the component value of that inspection cost 3000, that will be depreciated for first 4 year not. अरे बोलना रे, this was the what point which we need to understand. What they have given, check करो how they have calculated depreciation. I need to only explain that na. Depreciation 3000 they have depreciated only for what, 4 year, and because it was available for use after 2 months, so depreciation was done for how many months, 10 months. And the balance 10,260 they have depreciated for how many year, 8 year, for how many months, 10 months. This become total depreciation. Understood? Same to same question will come in exam. You'll do mistake in this point if you will not revise. Have you understood this question? Simple question, but with one point it become interesting. Now if you read, you'll understand. Carrying, now you read. Carrying amount of previous inspection will be de-recognized even if the cost of previous inspection was not identified in the transaction in which item was acquired or constructed. Have you understood this point? Even if the cost of previous inspection was not identified in the transaction in which the item was purchased or constructed, if necessary, the estimated cost of future similar inspection may be used as an indication of what the cost of existing inspection component was when the item was acquired or constructed. Now understood? Now feeling aa raha hai? Understood? So this is very important. I think you have understood. Now my help is not required for this. Have you understood? So I think we have taken most of the question. One more question about that commercial substance wala question. This question is newly added, can be asked. Entity has a warehouse which is closer to factory of entity Y and vice versa. Entity X has a warehouse which is closer to factory of entity Y and vice versa. Means it is closer to factory. The factories are located in same vicinity. We just try to understand. Suppose one land and this is land in same area. My question to you all, if suppose this land is 2000 square feet, this land is also 2000 square feet, same area. Suppose this is what, Himayat Nagar of Hyderabad, same area. My question to you are whether fair value will be different or same? Same only. And if you exchange, whether it has some commercial substance, no, it lacks what? Commercial substance. So what they are, the factories are located in same vicinity. Vicinity means same surrounding. Correct? Entity X and entity Y agree to exchange their warehouse. The carrying value of warehouse is 1 lakh and its fair value is 1,25,000. It exchanges warehouse with that of entity Y. The fair value is 1,20,000. It also received cash amounting to rupees 1,000. How should I expand? But the valuation should be done at carrying amount of fair value, because it lacks what? Commercial substance. The cost price of new warehouse will be equal to carrying amount of asset given up. Carrying amount is 1 lakh. How much cash received? 5,000. So it will be 95,000. Is fair value whatever is given not at all relevant, because it lacks what? Commercial substance. The same vicinity means what? Of course, understood from the emotions of the question, it is what? Lacking commercial substance. Suppose you have a doubt. Suppose you have a doubt, see, sir, it might happen in the same vicinity also fair value may be different. Sorry, it may have some commercial substance. Give both the answer. If the transaction lacks commercial substance, this is the answer. If transaction does not lacks commercial substance, then cost price will be equal to fair value as it given up. That is also given. You can find out or not. To give both answer, but in the solution they have given yes, it lacks commercial substance. Can you read by your own? All the question of India 16 in my question booklet I have done. Means I have taken all expected and good questions. I have not taken simple questions that you can do by your own. India 16 completed from my point of view. Correct? Yes, sir. Any doubt? We'll take 5 minute break. Okay. Then we'll again start. Acha, break timing will be what? What will be timing of this batch? From morning 8 to 1 first half means 1:15. Then 45-minute break I'll give. Then from 2 to 6 second half. 4 hour, 4 hour. Okay? So 5 minute break will take. After that we'll start. Means I will do up to 1:15. You came with breakfast na? अरे बोलना रे. So came with breakfast. I'll not give any breakfast break. चलेगा? 5 minute break. Can we start once again, everyone? So we completed India 16. One doubt came that what will be journal entry for unwinding of provisional amount, means when we add interest, what will be the entry? That will be interest expense to what? Provision. Interest expense will be charged to PL. Interest expense account debit to provision. Provision will increase. Interest expense will be debited to PL. Then let us come to next India's related to India 16 only, that is intangible asset, India 38. Correct now. Most of the point will be similar to what? Most of the point will be similar to India 16, so we can do it very fast. Only we need to understand definition of intangible asset. What is the meaning of intangible asset? Intangible asset are asset which are identifiable, non-monetary, without physical substance. Which are identifiable, non-monetary, without physical substance. But this has been deleted under India's 38. Means this was covered under AS 26 definition but deleted under India's 38. Why? Because can I say, when I say intangible asset, intangible asset may be inventory also. When I say tangible asset may be inventory. Under India 16 we define property, plant and equipment. We have not defined tangible asset. But here we are defining intangible asset. So intangible asset may be held for sale in the ordinary course of business also. Are you getting what I am saying? So first they have given definition of intangible asset. So intangible asset means any asset which are identifiable, non-monetary, without physical substance. Means can I say, if you understand this meaning, identifiable, non-monetary, without physical substance, so we can understand what is the meaning of intangible asset. Correct. Means what I want to say, intangible asset may be inventory, but inventory is scoped out from this chapter. Inventory is scoped out from this chapter because inventory will be covered where? Under India's 2. Means any software which are inventory will not be covered in this chapter, even though it meet a definition. Even though it meet a definition of intangible asset, not covered in this chapter. Why? Because scoped out from India's 38. Covered where? Under India's 2. So now we need to understand what are identifiable. Identifiable means separable. Identifiable means it can be separable from other assets. So what India's 38 says that if it meets two conditions, means any one of the two conditions, then it is identifiable. So what they said, any asset is identifiable if it is separable. Separable means what? Capable of being separated, capable of being separated or divided from the entity. Means it can be separated from the entity. When it can be separated from the entity, when it is capable of being sold, capable of being rented, given on rent to other, capable of being exchanged, capable of being transferred, capable of being licensed to other. So if it is separable, it means they are identifiable. Understood? So any asset is identifiable if it is either it is separable or it arises from contractual or other legal right, or if it arises from any contractual or other legal right. Correct now. Suppose you taken my recorded classes to be played in your area, means you will play the recorded classes in your area. So can I say you purchase a right from me of recorded classes, that you can play my recorded classes in some remote area? Correct. So it means that right you purchase from me now. So that is contractual right. Correct. So that right whatever you have, that become intangible asset. That become intangible asset for you, not for me. You purchase right from me now. So that right for you become what? An intangible asset. Or it arises from contractual or other legal right. Correct. Regardless of whether those rights are transferable or separable from the entity. Means even though such rights are not transferable, means I may put a condition because it is a contractual right that you can't transfer this right to other person. So even though it is not transferable, even though it is not separable, then also it is what? Intangible asset. So identifiable means what? Either it is separable or it arises from contractual or other legal right, even though it is not transferable. Any one condition satisfied become identifiable. Correct now. Just try to understand, and any asset can be recognized only when it is identified. If it cannot be identified, it is not an asset. The first and major condition is identifiable. Now you must be thinking, sir, why for tangible asset this point was not given? Can it tangible asset can be easily identified? This is one tangible asset. So tangible asset can be easily identified, but it is quite possible that we are not able to identify intangible assets. So what they are saying, it must be separable. It may arise from contractual or other legal right, even though it is not transferable. Have you understood? Second condition, of course, it must be an asset. If it is not an asset, it is not an intangible asset. So asset means two conditions. It must be under the control of the entity, or it must be able to provide future economic benefit from the use. Correct. So two conditions. Whenever we say asset, so asset is a resource from past activity which is under the control of the entity and which provide what? Future economic benefit. If these two conditions satisfied, so of course it is an asset. Correct. Understood this point. Now, next point is what? Non-monetary. I hope you have done AS11 or India AS21. There we have done monetary item. So any item which are not monetary item are non-monetary. Means when I say debtor, just write debtor. My question to debtor is a monetary item. You all know. Data is a monetary item or not? अरे बोलना रे. Data is a monetary item. My question to you, data is a tangible or not intangible? Data is intangible. Very good. Why? Because data represent right to collect from other party. So the right is intangible. Why? Because it is a monetary, it is not an intangible asset. So only non-monetary items are what? Intangible asset. So any monetary item may be intangible, but they are not intangible asset as per India 38. So therefore they want to exclude all monetary item from the definition of what? Intangible asset. So what are monetary item? Monetary item are those items which have fixed or determinable number of units of currency, or which are realizable in terms of money. Which are realizable in terms of money. For example, debtor, any loan given, these are monetary items. Understood? So intangible assets are not monetary item, they are non-monetary item. It does not have fixed or determinable value. It cannot be realizable in terms of money. Understood? Yes, sir. Without physical substance, of course, can I say every intangible asset will be without physical substance. But can I say intangible asset may require storage in some device. For example, my intellectual property, my recorded classes will be stored in a hard disk. That hard disk will be tangible component. Now the question arises ki if every intangible asset will be stored in tangible component, So it will be considered as tangible asset or intangible asset. So some clarification is given that cost of that tangible component might be insignificant in relation to the cost of intangible component. Therefore, they are intangible assets. Therefore, they are intangible assets. Correct. But one doubt will come, sir. Suppose we purchase laptop. So in laptop there is a inbuilt Windows or operating system. So operating segment, operating system is intangible. Now, when you purchase laptop with operating system, both are significant. The cost of both component are significant. In that case, what will do? In that case, what will do? Are you able to understand what I am saying? So what they are saying, you need to find out whether the intangible component is integral or is not an integral part of tangible component. What they are saying, if intangible component in that case is integral part of tangible component, then apply Ind AS 60. Integral part means it cannot be used without what tangible component. So can I say operating system can be used only with tangible component? You cannot use operating system without that tangible laptop. It means it become an integral part of laptop. Therefore, apply Ind AS 16. Apply Ind AS 16, but for depreciation we need to apply component accounting. Are you getting? If suppose intangible components are not an integral part of that tangible component, then what? Apply separate Ind AS. Are you able to understand what they want to say? When the intangible component is an integral part of tangible component, then entity should apply Ind AS 16 to the entire asset. However, when the intangible component is not an integral part of tangible component, then entity should apply Ind AS 16 to tangible component and Ind AS 38 to intangible component. For example, you purchase laptop with Tally software. The Tally software is not required to operate laptop now. It means it is not an integral part. Then apply Ind AS 38 to Tally software and apply Ind AS 16 to tangible component. Are you able to understand what I am saying? Correct? I hope you have understood this point. So with this we understood the meaning of intangible asset. What is the meaning of intangible asset? Intangible asset are identifiable, non-monetary, without physical substance. Can I say even though definition criteria is satisfied, we need to now apply recognition criteria. Recognition criteria means what? Two conditions same to same whatever we have done under Ind AS 60. When two conditions are satisfied, it will be recognized. First, what? It is probable that expected future economic benefit will flow to the entity and cost can be measured reliably. Can I say in case of tangible component, always second condition will be satisfied. But in case of intangible asset, second condition may or may not be satisfied. So what they are saying, in case of Ind AS 38 intangible asset, give more importance second condition also. So if second condition means if you are not able to identify the cost, then do not recognize such asset as an intangible asset in your books of account, then charge it to PL account immediately. The best example from the beginning, from the bachpan, self-generated goodwill. Can I say we do a lot of expenditure to generate goodwill, but we are not able to identify how much cost is attributable to generation of that goodwill. Means when I started my classes, initially I have given a lot of free classes to generate goodwill in the market. So some cost has been incurred, but how much cost of that free class is attributable to generation of goodwill, that we don't know. And therefore cost cannot be measured. And if cost cannot be measured, goodwill will not be recognized. Self-generated goodwill will not be recognized in our books. Understood? So both the condition is important. Correct? Understood. Now coming to initial measurement of intangible as same to same. Initial measurement will be done at cost. Separation acquisition. Separation acquisition means the cost of a separately acquired intangible asset comprised of purchase price, including import duties and non-refundable purchase after deducting trade discount. Already we know now. Any directly attributable cost of preparing the asset for its intended use. It will not include cost of employee benefit arising directly same to same profits. Sorry, example of directly attributable cost they have given. It will include cost of employee benefit arising directly from bringing the asset to its working condition, professional fee, cost of testing, everything we have done. Same thing. It will not include the following expenditure: cost of introducing a new product or service, cost of continuing business, new location, administration and general overhead cost. Same thing whatever we have done under India 16. Deferred settlement time same to same. Deferred settlement. If the payment is deferred beyond normal credit period, then the cost of intangible asset will be equal to cash price equivalent, which will be equal to what? Present value of future payment. Any interest cost will be charged to PL as an expense over the period of credit unless it is covered under India's 20. Same thing, same, correct? Then cessation of capitalization, same thing. It will commence, will cease capitalization once the intangible asset is available for use. Once it is available for use, will cease capitalization. Correct. Then acquired in exchange of non-monetary assets, same to same given. It will be the cost price of intangible asset will be equal to fair value of asset given up plus minus cash adjustment of fair value of asset, whichever is clearly evident. However, if fair value cannot be measured reliably or exchange transaction lacks commercial substance, then cost price will be equal to carrying amount of asset given up plus minus cash adjustment. Understood? I'm just repeating to inform you that it is given same only. ठीक है ना? मेरे को तो रटा हुआ है. Acquisition as a part of business combination. This acquisition as a part of business combination, can I say it will be better understood when we have completed India's 103? Correct. But what India's 103 says, because we have done business combination chapter, therefore we can discuss it. Correct. So what they said, as per India's 103, any intangible asset acquired will be measured fair value on acquisition date. Means any intangible asset which is acquired from acquiree will be measured at fair value on acquisition date of acquisition. But other than goodwill will be always balancing figure. Goodwill will be what? PC minus fair value of net asset acquired. So other than goodwill, the other intangible asset will be always accounted at fair value on acquisition. Correct? Understood? Now, in this, in case of India's 103, in case of India's 103, the probability recognition criteria is always considered to be satisfied. Means there are two recognition criteria. First is that there must be probable future economic benefit and cost can be measured reliably. So in this case, so we are taking at fair value. So what they are saying, the probability recognition criteria is always considered to be satisfied in case of business combination. Means we are not supposed to apply the probability recognition criteria. If we can determine fair value, then it will recognize that fair value. Understood? Correct. An acquirer recognize that point I will do at the end is after some point, these 2 points. Then is a goodwill will be calculated as under this formula, from business combination. If you have done business combination, remember this formula: fair value of consideration paid plus fair value of previously held equity plus fair value of NCI less fair value of INA will be equal to goodwill or gain on bargain purchase. Remember this formula? If you don't remember, then we'll go to what? In days 103, we'll discuss about this. Have you understood this point? This 2 point gives star mark. I'll come back to this point. Understood? Correct. Then acquired through government grant. Any intangible asset which is acquired to government grant, can I say apply in days 20? In days 20 says that there are two options: either recognize at nominal value or concessional value, or recognize at fair value. Correct? Two option has been given under India's 23 for any asset acquired to government grant, either recognize at nominal value or concessional value. Second option is what? Recognize at fair value. Once again, we'll do discussion about this with one example under India's 20. Chalega? We'll take one example for this. Chalega? Now, internally generated intangible asset. Any internally generated intangible asset. So, there are two type of internally generated intangible asset. One is for which cost cannot be measured reliably. If cost cannot be measured reliably, then it cannot be recognized as an intangible asset. Entire expenditure will be charged to PL as an expense. But any internally generated intangible asset for which cost can be measured reliably, then we should recognize it as an intangible asset. For example, know-how. Suppose you develop your own know-how to produce item. So that know-how is an intangible asset. So you have developed the know-how to produce one item. Are you getting that? Know-how is an intangible asset. Or we are developing our own website. Suppose whatever website we have now, that is developed by external parties, but we can develop from our in-house team. So that is what self-generated intangible asset, but cost will be incurred. which can be measured reliably, and therefore that website will come in my balance sheet. Are you getting what I am saying? So there are many internally generated intangible assets for which cost can be measured reliably, therefore recognize it. But what India's 38 says that there are two phases of such development. One is known as research phase, one is known as development phase. During research phase, no intangible asset will be created. Therefore, entire expenditure during research phase will be charged to PL as an expense immediately. During development phase, whatever expenditures are incurred can be capitalized as an intangible asset when six conditions are satisfied. I think you all know about this, correct? So what they say, development phase, it may or may not be capitalized. It will be capitalized only when six conditions are satisfied, correct? So what they said, an intangible asset arising from development phase should be recognized if and only if entity can demonstrate all the following points. First is what, there must be technical feasibility of completing intangible asset. Second is there must be intention to complete intangible asset. Third is there must be ability to use or sell such intangible asset. Fourth is what, there must be existence of market for the output of intangible asset or for the intangible asset itself. Fifth is what, there must be availability of adequate technical, financial or other resources. Last, the ability to measure the expenditure reliably. This point is to understood. The cost to be measured reliably. Can I say this A B to E is nothing but, if you are saying A to E are those points which will demonstrate future economic benefit. Means from A to E is nothing but future economic benefit. And last is cost. This to be a recognition criteria condition. Probable future economic benefit and what? Cost can be measured. Means can I say in case of self-generated intangible asset, India's 38 is more strict for recognition. They are saying you should be sure about probable future economic benefit and therefore demonstrate point number A to point number E. Are you able to understand? Correct. Means can I say in this way, suppose this is what research phase and you incur 20 lakh, what you will do? What you will do? Transfer to BL. But during research phase, either the research phase can be successful or it can be unsuccessful. If it is successful, you will start what, development phase? If it is unsuccessful, then you will not start development phase. My question to you all, if it is successful, then what you will do? This research 20 lakh will be capitalized or charged to PL? Then also charged to PL. Even though successful, correct? Then can I say after this you will start development phase and you incur 50 lakh. But six condition was satisfied at this point of time. We suppose 20 lakh was incurred यहाँ पर, 30 lakh was incurred यहाँ पर. Quite possible. But six condition was demonstrated at this point of time. My question to you are 20 lakh will be PL or capitalized? Have you understood? Not understood? What I am saying? The development phase started from this date. But six condition was satisfied at this point of time. So 20 lakh was incurred before, 30 lakh was incurred after. My question to you all, 20 lakh will be charged to PL or capitalized? Follow? PL, charged to PL, and this will be capitalized. Means even though six condition was satisfied, can you reverse 20 lakh from expense to asset? No. Any past expense which has been charged to PL cannot be reversed and cannot be recognized as an asset. Understood? Means capitalization will be done from the date when all the six conditions will be satisfied. Understood? I hope you have understood. This is very important question from examination point of view. You can see the cost of internally generated intangible asset for the purpose of initial measurement and recognition is the sum of expenditure incurred from the date when intangible asset first meet recognition criteria. Understood? Right. Means can I say in this way, any intangible asset which does not meet recognition and definition criteria, that expenditure will be charged to PL as an expense immediately. Means any intangible asset, any expenditure, we should say, any expenditure which will not meet the definition of and recognition criteria will be charged to PL as an expense immediately, even though amount is 1000 crore, 5000 crore, 10,000 crore. Suppose staff training expenditure, Wipro Infosys has incurred 10,000 crore of staff training expenditure in 1 year. 10,000 crore. This staff training expenditure, whether it will meet definition criteria. Why? Because it is not identifiable. It cannot be sold to some other party. It is not separable. So it will be capitalized or it will be charged to PL. Charged to PL. Even the amount is what? Can we defer it? Can we defer it and we can charge it to some 5 years, 6 years? There is no concept of deferred expenditure. There is no concept of deferred expenditure. I hope you have understood. We can see following types of expenditures should always be recognized as an expense. They have given some example. Expenditure research, expenditure in startup activities. Startup costs may consist of establishment costs such as legal or secretarial costs, means preliminary expenses they are saying. Preliminary expenses, correct now? Expenditure to open a new facility or business, expenditure for starting new operation or launching a new product. Similar point we have done now. Expenditure on training activity, expenditure on advertisement, promotional activities, expenditure on relocating or reorganizing the part or on. Yeah. Understood? Have you understood? This also you have understood. Forgot one point. Okay, this much you understood? Ha. This much you understood. So I'll come to one point which I have left where? Here. Now just try to understand. This is very super point. Expected question, not yet asked in exam. Okay. One question is already given in ICAI study material. Now suppose this is what business combination. This is X limited, this is Y limited. X limited purchase what? Y limited. Means X limited is acquirer, Y limited is acquiree. Same thing we'll do where? Under Ind AS 103 also, but some question has been given under Ind AS 38, therefore I am referring it. Okay, now this has been acquired. There was some research project, in-house research project. So they have applied Ind AS 38 and suppose 20 lakh it is charged to PL as an expense. Correct. Now because X limited acquire Y limited, they will also acquire this research project. Correct. And suppose the fair value of this research project, it will have some fair value. बोलना yes or no? Suppose the fair value of this research project is 25 lakh right now. Now the question is that can X limited can recognize this in-house research project as an asset on acquisition date? Have you understood this point? Means as per Ind AS 38, any research expenditure cannot be capitalized. But now they have acquired this in-house research project. Till now development not started. Till now development not started. They have acquired what? Research project whose fair value is 25 lakh. Whether it can be recognized as an asset on acquisition date in the books of X Limited? Yes or no? Yes. As per Ind AS 103 also, as per Ind AS 38 also, means they will recognize the 25 lakh. Now subsequently they will incur some research expense, some development expense. Now X Limited will incur some research expense and development expense. Suppose 10 lakh research and 60 lakh what? Development expense. Now can we recognize this research expense? No, it will be always charged to PL. Can we recognize this development expenditure? Yes, if 6 conditions satisfied. Means carrying amount if 6 conditions satisfied will be 25 lakh plus 60 lakh. Same to same question will come in exam. Have you understood this point? I hope now you will understand the emotions of the point whatever I have left. An acquirer recognized at acquisition date separately from goodwill an intangible asset of the acquiree irrespective of whether the asset has been recognized by the acquiree before business combination. Means even though that intangible asset was not recognized in the books of acquiree, then also we can recognize it. Thus, the acquirer recognizes an asset separately from goodwill and in process research and development project of the acquirer if the project meet the definition of intangible asset. If it meet definition, not recognition, means even though it does not meet recognition criteria, then also it can be recognized as a intangible asset. Understood? I hope you have understood. Have you understood? Yes, sir. Now, subsequent recognition, same to same Ind AS 16 revaluation model, cost model, two option has been given entire accounting treatment. Same, you can do it by rule. Means intangible asset also two model, cost model or revaluation model. Same to same, can you refer? Whatever we have done, same to same will be applied. Chalega? Yes, sir. Then amortization. In this case, amortization are divided in two parts. Intangible asset having finite useful life, intangible asset having indefinite useful life. So if intangible asset has finite useful life, can I say it will be amortized? It will be amortized. So how to amortize? That we need to understand. That they have given finite useful life means amortization required. Indefinite life means amortization not required. Means any intangible asset which has indefinite life, amortization is not possible. Same thing we have done for land also. Land is having what? Indefinite life. But can I say in case of intangible assets, there are many intangible assets for which we cannot determine the life. For example, brand. What is the life? Brand? We don't know. So it means they have life, but we can't determine the life, and therefore amortization is not possible. But if suppose you purchase a software and it can be used only for 5 years, it means it has a life for 5 years. Correct. So intangible asset with finite useful life, can I say it will be depreciated? Depreciation basis will be same only. You can say depreciable amount and a cost model, payable model, same thing. Correct. Residual value, what Ind AS 38 says that for intangible asset, residual value will be always assumed to be zero. One question has been given in RTP this time regarding this. With this question they have given means for normally intangible asset it is always assumed to be zero. But for property, plant and equipment, we need to estimate residual value. Correct. So what they are saying for intangible asset, Ind AS 38 says that it will be always assumed to be zero unless any of the following two conditions satisfied. Unless there is a commitment by the third party to purchase the asset at the end of useful life, or there is an active market. Normally intangible asset does not have active market. Brand does not have an active market now. Goodwill does not have an active market. Software may have an active market. But suppose you have a patent does not have an active market. Are you getting? Suppose you have know-how does not have an active market. Understood? Therefore, it is said that always assumed to be zero. Amortization period same to same commence from a date when the asset is available for use. It will cease from date when the asset is classified as held for sale or when the asset is de-recognized, whichever is earlier. Amortization method same thing is given SLM, RBM and PUM. However, what they said in case of Ind AS 38, if the pattern of future economic benefit cannot be estimated, means you don't know what is the pattern of future economic benefit, because SLM, RBM, PUM will be based on pattern of future economic benefit. If the benefit pattern is evenly spread, then SLM. Diminishing, then what? RBM. If based on production, then PUM. But if you cannot estimate the pattern of future economic benefit, always apply what? SLM. This is given only for what? Intangible asset, not for property, plant and equipment. Same thing, review of residual value useful life amortization matters should be done at the end of each financial year. It will be accounting estimate to on prospective basis. Correct? Yes, sir. This point have you understood? Now, intangible asset with indefinite useful life. You can say any intangible asset having indefinite useful life will not be amortized, but it requires impairment as per Ind AS 36. Now, what Ind AS 36 says that any intangible asset having indefinite life require annual impairment testing, irrespective of indicator. If you know Ind AS 36, I know impairment testing is required only when there is indicator. But any intangible asset having indefinite life require annual impairment testing irrespective of what? Indicator. Means can a such asset will be tested for impairment annually irrespective of indicator and whenever there is what? Indicator. Understood this point? Okay. So there is one special point. I don't want to miss this point because it might happen they have given some question based on this. Amortization based on revenue. Now just try to understand whether we do amortization based on sales ratio. No, we do either SLM, RBM or PUM. This amortization we do based on expected unit to be produced, not based on sales value. Correct now? Whether we do amortization based on revenue. अरे बोलना no ना, there are three methods ना, SLM, RBM and PUM ना. SLM, RBM, PM means we are not taking amortization in the ratio of sales now. Expected sales we are not calculating. We are calculating expected unit to be produced. Correct. So can you say we do not amortize based on revenue? Why? Why? There is a rebutable presumption has been taken that we will not amortize based on revenue. What is the meaning of rebutable presumption? Without any logic. Rebutable presumption means without any logic. Understood now? So there is a rebutable presumption that amortization method based on revenue is inappropriate. Why? We don't know. The reason is not given. Correct. But there is one exception to this rule. If there are some intangible asset where amortization based on revenue is permissible. I don't know whether this question will be asked or not, but same point is given in ICAI study matrix. Have you understood what I am saying? We normally will not amortize based on revenue, but there are some intangible asset where amortization can be done based on revenue. Correct? What they said, if the predominant limiting factor that is inherent in an intangible asset is the achievement of revenue threshold, then revenue to be generated can be an appropriate basis of amortization. There are some examples. For example, right to explore or extract natural resources. Suppose you have taken right to extract natural resources. So when their predominant fact, whatever right you purchase, suppose you right whatever you purchase is paid 100 crore. Why you paid 100 crore? Because you know you can generate mineral resource to the extent of 100 crore or more than 100 crore. Then only you paid 100 crore for that right. It means, can I say in this case the achievement of revenue is the predominant factor, and therefore in this case if you want to amortize that right intangible asset, it can be based on what revenue. Similarly, right to operate toll roads. Suppose you have a right to operate toll road, so you are collecting what? Toll tax. So whatever amount you have paid to purchase the right, the achievement is what? To generate a toll tax. In this case, you can amortize that intangible asset based on what? Estimated revenue. I don't know whether question will be asked or not, but it has been given, therefore I have done. Correct. Impairment once again will do as per India 36. Retirement disposal same to same whatever we have done for India 16. Should I repeat? Retirement disposal. It will be de-recognized when any one condition is satisfied, either on disposal or when no future economic benefit is expected from such asset. Balance point is same to same. You can read. Scope, what is not applicable, you can read by your own. Correct. It is not complicated. Disclosure you can read by your own. I will not read disclosure. If I think that it can be read, it can be understood by your own. Chalega. Difference, so it is not important. If you want to do by your own. India's 38 is completed. So I have taken much time in India's 16. But now India's 38 easily done because we have understood India's 16. Now can we take some question? Of course, questions will be taken. We'll take some good question. Come to question 5. Sun Limited acquired some doubt you have. First you ask me doubt. Then I'll come to the question. No doubt, na? Bolo. No doubt. Intangible asset. Can I come to some questions? Sun Limited acquired a software from Earth Limited in exchange for telecommunication license. The telecommunication license is carried at rupees 5 lakh in the books of Sun Limited. Correct. The software is carried at rupees 10,000 in the books of Earth Limited. So in the books of Sun Limited, in the books of Earth Limited, in the books of Sun Limited, what? There was a telecommunication license. In the books of Earth Limited, there was one software. What was the book value of telecommunication license? 5 lakh. What was the book value of software? 10,000. Understood this point? Advise journal entry in the following situation in the books of Sun Limited and Earth Limited. Fair value of software is 5,20,000 and fair value of telecommunication license is 5 lakh. So Sun Limited acquired what? Software in exchange of telecommunication. My question to you all, in the books of Sun Limited, what will be the cost price of software acquired? Asset given means how much? 5 lakh? 5 lakh. So you can software account debit 5 lakh, correct? To telecommunication, telecommunication will be de-recognized at book value. Book value is also 5 lakh. So therefore, there is no gain or loss. In the books of Earth Limited, they have acquired telecommunication license. So it will be recognized at what cost? Fair value of asset given up. So what is the asset given up? They have given up software. So cost price of telecommunication license purchase will be equal to fair value of software given up. So you can see telecommunication is now coming at 520. But will de-recognize software? So two software at what? Book value. Book value is what? 10,000. So any difference will be what? Gain or loss. The gain is coming what? 510. This gain will be transferred to PL. Understood. Normally students do mistake what? When they are de-recognizing this, so they are taking fair value. De-recognition will be done at what? This is the area where you student do mistake. You can also do the mistake, huh? Because right now I am with you now. Are you able to understand what I am saying? De-recognition will be done at book value, not at fair value. Okay. Now, second, fair value of software is not measurable. However, similar telecommunication license, fair value is given 4,90,000. Now, can you say in the first case, the cost price of software will be equal to telecommunication license fair value given up, so 4,90,000 only. The carrying amount was 500. There was a loss of 10. Can you say in the books of Earth Limited, we are recognizing telecommunication, but the fair value of asset given up is not ascertainable. So we'll take fair value of asset received, that is telecommunication 4,90,000. The book value is 5 lakh. Loss is 10,000. Understood? Sorry. My mistake. Telecommunication is coming at 4,90,000. The book value is what? 10,000. 10,000. The profit is coming 4,80,000. Last case they have given. Neither fair value is reliably measurable. So now in that case we'll take what? Book value of asset given up plus minus cash adjustment. So in this case what we are doing, check करेंगे. This software will be recognized at what? Software will be recognized at what? Book value of telecommunication. And in this case telecommunication will be recognized at what? Book value of software. And this, have you understood this point? Correct. One more question. Expenditure on new production process in 2001-2002. 1st April to 31st December 2,700. 1st Jan to 31st March 900. Total is 3,006. The production process made the intangible asset recognition criteria for development on 1st Jan 2002. The amount estimated to be recoverable is 1,000. Means they are given recoverable amount. Whenever they give recoverable amount, it means that is given for impairment. Now, impairment is done whenever recoverable amount is less than carrying amount. As per India statistics coming soon. Correct? So after this we'll do India statistics only. What is the carrying amount of intangible asset and how much amount will be charged to PL in this year? Then further expenditure for the next year is 6,000. At 31st March 2003, the amount estimated to be recoverable from the process is 5,000. So once again they have given recoverable amount. What is the carrying amount they have given? Means what they have given? First they have given first year, then second year. They meet recognition criteria at this point of time. Correct? Before that, what was the expenditure? 2,700. So 2,700, then 900. They have given recoverable amount how much? 1,000. Then the expenditure incurred was how much? 6,000. Now recoverable amount given how much? 5,000. This is the entire question. This is the first year. This is the second year. But this 2,700 will be charged to PL or capitalized? PL. This will be charged to PL or capitalized? Capitalized. So carrying amount become 900 and recoverable amount is more than carrying amount, and therefore no impairment loss, because recoverable amount is more than carrying amount, no impairment loss. Now carrying amount will become 900 plus 6000 is 6900. Again further expenditure was 6000. Now recoverable amount is equal to what? 5000. 5000 now. So what is the impairment loss? Impairment loss will be what? 1900, which is charged to PL. Understood. Now, what India 36 says that any intangible asset which are under development phase, is which is not yet available for use, for that also will do annual impairment without any indicator. Means any intangible asset which is not yet available for use. So this is not yet available for use because this is under development stage. For that also annual impairment testing is required. Annual impairment testing is required irrespective of indicator. Understood? Therefore, we have done annual impairment testing irrespective of, even though it is not available for use. Understood? This is also done. This question I have taken intentionally. X Limited acquired Y Limited on 1st April, whatever 30th April. The purchase consideration is 50 lakh. The fair value of tangible asset is 45 lakh. The company estimated fair value in process research project is 10 lakh. No other intangible asset is acquired by X Limited in this transaction. Further cost incurred in relation to that research project is what? 5 lakh research expense, 2 lakh technical feasibility, and 7 lakh for further development cost after technical feasibility. My question to you all here, PC is equal to what? 50 lakh. Now we need to find out fair value of net asset acquired. So tangible asset is 45 lakh. Will you take fair value of in process research project? Yes. So 45 lakh minus 10, sorry, 45 lakh plus 10 lakh, how much? 55 lakh. It means there is a goodwill or gain. So gain of how much? 5 lakh. This gain on bargain purchase will be transferred to capital reserve. Correct. Now, can I say this in-house research project will be initially capitalized at 10 lakh? Now, whether will 5 lakh will be capitalized or charged to PL? Charged to PL. This 2 lakh will be capitalized or charged to PL? Because it is incurred to establish technological feasibility, means this will be also charged to PL, and 7 lakh will be capitalized because this is incurred after technical feasibility is established. So now the carrying amount will be 10 lakh plus 7 lakh, that is 17 lakh. Understood? Similar point I have taken. Have you understood this? Any doubt? Then this question 21 will come यहाँ पर. X Limited is engaged in developing, this question already asked in exam, but sometimes I am also confused when I read question. Sometimes. So it is only difficulty in understanding the language of the question. So sometimes a question designed in such a manner we are not able to understand what will be added, what will not be added. Therefore, always revise and go this type of question. Means being a teacher, I am also sometimes confused. I am also sometimes confused. So you will be the pakka confused. Correct? Understood? So X Limited is engaged in developing computer software. We are not God now. We can also do mistake. So if I am confused because I am not God. I am human being. We are born to do mistakes, huh? Correct? Yes, sir. The expenditure incurred by X Limited in pursuance of its development of software is given below. Paid 2 lakh towards salary of program designer. Now when you don't read, you will not be able to understand whether it will be capitalized or it will be charged to PL. One thing is clear that this is development phase. Development phase. Now initially you will think it will be capitalized because it is development phase now. Initially you will think it will be capitalized, but you read entire question, then only you need to give some justification, it will be capitalized or it will not be capitalized. Incurred 5 lakh towards the cost of completion of program design. Is prima facie it will be capitalized only. Correct. Incurred 2 lakh towards the coding and establishing technical feasibility. Means at this point of time Technical feasibility was established, means this all will not be capitalized. Paid 7 lakh for other direct costs after establishment, this will be capitalized. Incurred 2 lakh toward testing cost, this will be capitalized. Cost of producing product master for training material, whether this will be capitalized. Master file, just try to understand, whenever we develop any software now, so one will be master file, and that master file say will do copy and will sell the copy of that master file. For example, we are also developing our recorded classes. This is also recording. Right now recording is going on, so the raw video will be master file, then we'll copy and then we'll sell it now. So raw video is master file, we'll not give raw video to you now, we'll copy and then we'll encrypt it so that you can misuse it, and then we'll sell it now. अरे बोलना रे. So the cost of developing product master for training material, this will be capitalized. Correct. A focus group of other software development was invited to a conference for introduction of new software. Once it become available for use, now whatever meeting you are doing for publicity etc., that is what charged to PL as an expense, this will not be capitalized. Then whatever is incurred will not be capitalized. Once master file is developed, then whatever you are incurring, that is after the asset is available for use. Correct. So I think 7 lakh plus 2 lakh plus 3 lakh, what is the answer is given? Answer given 12 lakh. Jadu, today I have not a mistake. Understood. So I have taken some question, balance question. Can you do by your own? Please balance ICAI question. If you have some doubt about any specific question which you think I should take in this batch, so you can give me the question number, I will take. Suppose I have not taken one question which you have doubt, so that you can ask me, sir, India is 38, please do that question. I will open my book, I will take that question. Are you getting what I am saying? But you need to inform me, otherwise I will not take that question. Chalega. This chapter also completed. Can we come to the next chapter? Right now I am just doing all the Indias related to asset only today. Let us come to India's 40 investment property. India's 40 investment property. Correct. Can we start? Follow. Let me see any doubt is there or not. Live student may also ask doubt na. Sir, no doubt. No doubt. Okay, sir. Okay, okay. There is no doubt. Okay, chalo. Can we start investment property? Investment property, we have already understood that. We have already understood that any property are of two types now. Any property which are held for production or supply of goods and services or for admin purpose will be covered under India 60. Means there are some property which might be now covered under India's 40. So now we need to understand which type of property will be covered under India's 40. Means when I say office building property, India 60. Factory building property, India 60. Factory land, India 60. Correct. So which property? First, property means what? Property means land or building or part of building or land building. When I say property, property does not mean entire wealth. Means it will not cover gold. So normally we say property, the gold will also come in our mind, na? Are बोलना नहीं? Property, we have a property, बोलना yes or no? So when we say property, prima facie gold will also come in our mind. But in accounting, property means land or building or land and building. So what is the meaning of property? Investment property is a property which is held either by owner or by lessee as a ROU asset. I hope now you all know ROU asset. So either it is held by owner or it is held by lessee as ROU asset. Correct. For which purpose? For earning rental income or for earning capital appreciation or for both or for understood. Any doubt in this? I think no doubt. Definition is very simple. Means, can I say in this way? Property held for sale in the ordinary course of business, which index will be applicable? 2. Property held for production or supply or for rental to other or for admin purpose, which index will be applicable? Index 60. Property held for earning rental income, held for capital appreciation or for both, which index will be applicable? Index 40. But one doubt will come, this rental to other and earning rental income. Now let me take one example. Suppose you have one property you have given to your employee at concessional rent. Now बताओ which index? 16 or what? Index 40. Concessional rent I said. You have some property you have given to employee at concessional rent. Index 16 in Index 40. It is Index 16 because it is not for earning rental income. When I say rental income, it means market rent, not concessional rent, and therefore this word has been added rental to other. Means any property given to employee at concessional rent, it will be what? Index 16. Understood? Correct. Means can I say any plant and equipment, if it is given to, if it is rented to other at concessional rent, which index? But any plant and equipment which is given for earning rental income, then Index 16 only. Plant and equipment always what? Index 16. Whether given at concessional rent or at market rent, Index 16. Means Index 40 is only applicable for property, not for plant and equipment. Understood? One clarification I am giving. Yes. Now, I hope you understand property held by owner. Owner means legal owner. Correct. If it is owner occupied property means they are using it. So Index 16. Correct. If it is leased, if it is given a lease, now there can be two type of lease. Means now this owner become lesser. If it is leased, so now it become lesser. So if it is leased and leased on operating lease, means operating lease means it is given for earning rental income. So now this property will be investment property. Means any property held by owner given on operating lease, investment property. But given on finance lease, then the property will be de-recognized. The question of classification will not arise. Now that property is no more an asset. Are you getting what I am saying? If it is given on finance lease, property will be recognized. The question of Index 40 will not arise. Correct. But in both cases, whether given on operating lease or finance lease, these payment will be accounted as per what? Index 116. These payment will be accounted as per Index 116. Right now we are discussing about property. Property will be as per which index? Are you able to understand my emotions? अरे बोलना रे. Now this though you know now I'm not. Now property held by lessee as ROU asset. Property held by lessee as ROU asset. Are you able to understand my emotions? Property held by lessee as ROU asset. If it is owner of means if it is if it is for their own purpose. Property held by lessee as ROU asset. They are using it for own purpose. Then what? India 60 either for production, supply, admin, whatever. But that property can be subleased also. It's held by lessee. Now lessee can sublease it. So lessee become lesser now. Sublease. So can I say if it is subleased on operating lease, then can I say that ROU asset become investment property? And if it is on operate finance lease, then it will be de-recognized. The question of India's 40 will not arise. Sublease will discuss under India's 116 once again. But have you understood this entire point? Yes, sir, we have understood. Correct? Yes, sir. Now, There are some example. This you can read. Land held for capital appreciation. Which India? You will say, huh? Land held for sale in the ordinary course. India's 2. Land held for a currently undetermined future use. Right now we don't know for which purpose we'll use it. Correct now? Understood now? We don't know for which purpose we'll use it. If an entity has not determined that it will, so it will be always deemed that it is held for capital appreciation. It will be deemed that it is held for capital appreciation. So India's 40 will be applicable. Even though right now we don't know for which purpose it will be used. Correct? Agriculture land. Agriculture land. India 60. It is for business purpose only. Agriculture is also one business. Correct. Building owned and leased out under operating lease. Building owned and leased out. Operating lease. India's 40. Building owned and leased out under finance lease now not an asset. It is de-recognized. Property held as a ROU asset and leased out under an operating lease. India's 40. Subleased. Property held as a ROU asset and leased out under finance lease, not an asset now. Are you able to follow me? A building that is vacant but is held to be leased out under one or more operating lease means a building is right now vacant but can be given an operating lease in future. So India's 40 only means it will be given an operating lease in future. So India's 40 will be applicable. Property which is being constructed for future use as IP means right now it is under work in progress means it is under construction but in future it will be used as an investment property. India's 40 will be applicable. Building held for sale in the ordinary course of business. Building held for sale in the ordinary course of business. India's 2. Owner occupied property. Owner occupied property means what? India's 16. Any property which is used by owner is known as owner occupied property. India's 2. Sorry, India's 16. India's 16 na? India's 16. Property constructed on behalf of third party. It is via contractor. So if I am constructing property on behalf of contractee, then India's 115 will be applicable. Because then it become our revenue. It is an inventory for us. So for that India's 115 will be applicable. Property occupied by employee at concessional rent, then India 16. IP classified as held for sale. Any investment property now classified as held for sale. India's 105. Understood. Correct. Now special case. There are 3 points of special case. First point. Any property which can be used for more than one purpose is known as dual use property. Any property which can be used for more than one purpose. Suppose we have what? This building, ground floor, first floor. This is given on rent normally and this is what? Owner occupied property. Now the question is that will you apply India's 40 and India's 16 separately or we need to apply only one India's? One doubt will come. So what they are saying, if this portion are separable, then apply different Indias. If these are not separable, then apply either India's 16 or India's 40 depending upon the circumstances. Have you understood what I have said? Now one question will arise, how will understand it is separable? Correct. Separable means what? Either it can be sold separately or it can be given on finance lease separately, not operating lease. It can be given on finance lease separately. Means right now not sold. Right now not given on finance lease. We are expecting. Suppose we have one building. Can this portion can be sold separately? Can this portion can be given on finance lease separately? Yes, they are separable. If no, they are not separable. Are you able to understand the wordings? Correct. Now, each portion or part can be sold separately or leased out under finance lease separately. If yes, then apply India's 16 and India's 40 separately. Understood? Means just try to understand India's 40 will be applicable only when given on operating lease. Huh? Are you able to understand? But for separation wala point we are saying whether it can be sold or it can be given on finance separately. If yes, it means it is separable. But right now you are giving on operating lease. This point you are able to follow. No, but if the answer is no, suppose this is one floor and some portion, only one floor, some portion we have retained and some portion we have given on. Retained means what? This is owner occupied property and this is given on rent. Now question, because now it is not separable. Now it is not separable. In this floor only say we have there are three classrooms, but we have taken two classrooms. One classroom we have not taken. Means the owner has given on operating lease. Has given on operating lease. Are you able to understand what I am saying? But one classroom is not taken. But you only say this floor can be sold separately. That portion can be sold separately. No, Baba, it is impossible. Whether it can be given on finance lease separately. No. If yes, then okay. So can if no, then what they are saying? If an insignificant portion is held as OP, okay, this is insignificant portion. If an insignificant portion is held as OP, then apply India's party. But the honor occupied portion is significant, then apply what? India 16 on entire asset. On entire asset. So if insignificant portion is honor occupied property, then India's party. But if the honor occupied portion is significant or not insignificant, if the honor occupied portion is not insignificant, then apply India 16 entirely. But in this one, doubt will come. Just try to understand. Let me take some situation. Suppose this is the first situation. 1090. Can you say 10% is insignificant? India's 40 will be applied. Correct. Second. Now 60%, 40%. 60% is honor occupied property. Okay, significant only. India 16 on entire asset. But now doubt will come. 40% and 60%. 40% is honor occupied property. But how? Significant, insignificant. 40% is significant, insignificant. Can you say 40% is not insignificant? So 40% is passing marks, huh? अरे बोल ना रे 40% you can't say insignificant. So can you say 40% is not insignificant, therefore India is 16 entirely. So what is insignificant, that is not defined. Judgment is required. But 40% you can't say it is not, 40% is not insignificant, it is understood. But doubt will come when there is a 20% or 25%. This type of question will not be given in exam, don't worry. The 25% can be significant, can be insignificant depending upon the circumstances. Means we need to understand the facts and circumstances and emotional activity of what that enterprise, why the situation arises. So this type of questions will not come. Even though come, they will inform you 25% is insignificant or not insignificant. If question is silent, I will say apply both these. Because 25% can be insignificant, can be not insignificant. Judgment need to be applied. So this type of question will not come in exam. If come, apply your common sense. Then ancillary services. Sometimes property is given with ancillary services. So what they are saying, if ancillary services is insignificant, then India's party. But ancillary services significant. For example, hotel. When you go to some hotel, 5-star hotel, okay, there are a lot of services provided. With that room, with room can laundry services, starting from laundry to all whatever you require, they will provide. अरे बोलना रे. So it means in this ancillary services are significant. Apply India 60. Means hotel building India 16 will be applied because that is with what many significant ancillary services. But there are many lodge where no services are given. You go, sleep, and then out. No other services. No food will be given. Only for what stay. Lodge are there now. That is what without ancillary services or whatever services will be provided, that will be insignificant. For example, maintenance services or security services will be provided. That is what India's party will be applicable. Understood? So ancillary services are not insignificant. India's 60 are insignificant. India's 40 and then Property leased out to group entity. Any property which is leased out to group entity means parent company has leased to subsidiary company or vice versa. In that case, what they are saying, if the property is within group, if the property is within group, then in consolidated financial statement, it will not be investment property now, because that is used within group only. Are you getting? So what they are saying, in consolidated financial statement, apply India 16 if it is held within group. Can you say in separate financial statement or individual financial statement apply India 16 or India 40 as the case may be? As the case may be. Means if it is given on operating lease, investment property. If it is used for admin purpose, then owner occupied property. Then what? India's 16. Let me take one example so that you can understand. Because no question has been given for this, but one exam में question आया. There was no question in ICAI study material, but in exam one question was asked from this topic. One simple example let us take. Property parent company, subsidiary company, owner occupied property given on operating lease to what? S. S means subsidiary company. So can you see in the books of S become lessee, it will become ROU asset. Parent company has given asset on operating lease. So parent is a lessor, subsidiary is a lessee. In the books of lessee, ROU asset will come as per Ind AS 116. That I'm assuming. Ind AS 116. I'm assuming that. Now, parent company has given an operating lease. So in the separate financial statement of parent company, this will be classified as what? Investment property. But can I say this subsidiary company in their books ROU asset is coming and is used for protection purpose. So in the individual financial statement of subsidiary company, it will be classified as what? Used for admin purpose or protection purpose. India 60 will be applicable. But in the consolidated financial statement, whether it is held within group or not, and used for which purpose? Protection purpose. So in consolidated financial statement of parent company, which Ind AS will be applicable? Ind AS 16 will be applicable. Have you understood? Correct? Chalega? Chalega? I hope now you have understood the emotions. Yes, sir. Now coming to recognition and measurement criteria, it is very simple. Once again, recognition criteria will be similar to Ind AS 16. But they say recognition criteria, it will be recognized when two conditions are satisfied. What? Probable future economic benefit and cost can be measured reliably. However, if the investment property is held by lessee as a ROE asset, then it will be recognized as per Ind AS 116. If any ROE asset will be recognized as per the requirement of Ind AS 116. As per the requirement of Ind AS 116, now that is understood. The measurement. Separate acquisition, same thing is given. You can read means purchase price, less trade discount, add non-refundable duties and taxes. Read it. What I will do. Acquired deferred credit, same thing. Cost price will be equal to present value of all future payment. Interest will be equal to this minus this. Interest will be recognized as an expense over the period of credit. Understood point. Same thing as per India 16 deferred credit period beyond normal credit. Just now. Investment property held by lessee as an ROE asset to what they said recognized in accordance with Ind AS 116. Cost price will be recognized as per the requirement of Ind AS 116. Acquired through exchange, same thing. You can read fair value of asset given up, fair value of asset received, whichever is clearly evident. Same thing is given. If transaction lacks commercial substance or fair value cannot be measured reliably, then cost price will be equal to carrying amount of asset given up plus minus cash adjustment. Same to same now. What I will teach, nothing to teach. Subsequent recognition, in this there is some difference. Can you say intangible asset two option cost model revaluation model? Property plant equipment two option cost model revaluation model, but here they say only cost model. Only cost model. And cost model also as per the requirement of Ind AS 16. Means they said apply cost model as per Ind AS 16. Means depreciation will be also as per India 16. Impairment will be as per India 36. They have just given cost model as per India 16. But what they want to say, even though you are applying cost model, but fair value is required to be disclosed. Means fair value of that property is required to be measured and require disclosure. Correct? What they said, if fair value of investment property, entities are required to measure the fair value of investment property for the purpose of disclosure. For the purpose of disclosure, even though they are not required, even though they are required to follow cost model. If fair value of investment property are not reliably measurable, the entity shall make a disclosure for the same as understood. Fair value require only disclosure, not recognition. चलेगा? Now, transfer. Transfer case means what? Can I say any investment property can be reclassified to P, can be reclassified to inventory, or vice versa, property, plant and equipment can be reclassified to investment property, inventory can be reclassified to investment property. Means any building which is held for sale in the ordinary course of business can be now decided to be held for given on rent to other. So if the intention change, reclassification required. So reclassification anywhere, whatever India's reclassification is always done on prospective basis at carrying amount. Reclassification is always done on prospective basis at what? Carrying amount. This is the rule. Reclassification rules remain same for every India's. Prospective basis at carrying amount. You can see such transfer, whatever transfer from investment property to owner occupied property, or investment property to inventory, or owner occupied property to investment property, inventory to investment property, such transfer from one category to another category will be recognized at carrying amount. However, can I say if IP become inventory, then there will be no subsequent depreciation. Then inventory will not be depreciated now. Investment property will be depreciated as per cost model, but inventory does not require depreciation. Owner occupied property will be depreciated. Investment property will be depreciated, but inventory will not be depreciated. One clarification given: if IP become inventory, then no depreciation will be charged subsequently. Understood? Correct. De-recognition, IP should be disclosed. Sorry, IP should be de-recognized. One second, two condition. Any one condition satisfied, de-recognized. On disposal or when no future economic benefit is expected. On de-recognition, gain or loss will be calculated, will be transferred to PL. Will be transferred to. Let us read disclosure. If I read this disclosure, now the automatically disclosure of India 16, India 38 will be covered. Can I read it once for your choice? Disclosure. The accounting policy for measurement of IP. Accounting policy is cost model, revaluation model. Here only cost model. The criteria to distinguish IP from OP and from property held as inventory means why it is classified as IP. Some clarification need to be given. To the extent to which fair value of IP is based on the valuation by independent valuer, means whenever you opted for revaluation model, or in this case, so you are measuring fair value for disclosure purpose, you do just give a description that whether the valuation is done by independent valuer who hold professional qualification. If there has been no such valuation, that fact should be disclosed. Means if you have done valuation from nalayak person, disclose the fact that he is not qualified valuer. Correct now. The amount recognized in PL for rental income from investment property, direct operating expense arising from investment property, that need to be disclosed separately in SOPL. Correct. The existence and amount of restriction on realizability of IP. Any restriction on realizability of IP, suppose the IP has been given as a security to a loan, for a loan, so it cannot be realized soon, so that restriction need to be given. Contractual obligation to purchase or construct or develop IP. Suppose you have done a contractual obligation to purchase IP, but after 5 years, that need to be also disclosed. Correct. And it is required to disclose depreciation method used, useful life of depreciation rate used, gross book value and accumulated depreciation at the beginning and at the end of the period. With accumulated impairment loss also, do you know you need to prepare one schedule. The gross book value at the beginning at the end, then accumulated depreciation at the beginning at the end, then net book value at the beginning and at the end. That schedule is required, notes is required. A reconciliation of carrying amount of investment property at the beginning and at the end. Closing balance and opening balance should be reconciled for purchase, acquisition, etc., disposal, etc. Fair value of investment property required. चलेगा. India's party is also over. Can we come to the question? India's party. India's party. What they have given? Question number 12. Means I am just taking good quality of questions. I am not taking all questions. Means I have also released one expected question list. Expected question is different. There may be some simple question also now that I am not discussing यहाँ पर. So if you want to read, if you want to go for expected question, that is a separate question. Huh? This is not expected. This may or may not come, but I am just taking what good questions, which will be required to understand the concepts. And I am taking good question, expected question. There are some questions which I expected also, but simple question I am not taking, which may be expected. Huh? Which you can do by your own. I am not taking here now. That will wastage of time. Understood what I am saying? अरे बोलना रे. The expected question list may be different from this. That I am just informing you. 70% is included. 30% may be some different question which I feel should be done from examination point of view. Correct? So it means you just go through that expected list, you'll find that 70% is already covered. 30% what is not covered? Still correct ना? थोड़ा सा तो मेहनत खुद करो ना. Yes or no? Little effort you should also put ना. चलो. Can we start? X Limited is in the construction of industry and prepares financial statement up to 31st March each year. On 1st April 2013, X Limited purchased a large property consisting of land for rupees 2 crore and immediately began to lease the property to Y Limited on operating lease. Means it is an investment property. An annual rental where 20 lakh is it was given on rent, so 20 lakh was the annual rental. On 31st March 2017, means after how many years? Whatever. The fair value of property is 2 crore 60 lakh. Under terms of lease, Y Limited is able to cancel the lease by giving a 6-month notice in writing to X Limited. Y Limited gave this notice on 31st March 2017 and vacated a property on 30th September 2017. On 30th September 2017, the fair value of property was 2 crore 90 lakh. On 1st October 2017, X Limited immediately began to convert the property into 10 separate flats of equal size, which X Limited intend to sell in the ordinary course of business. Means for reclassification from investment property to inventory. X Limited spent a total cost of 60 lakh on the conversion project between 30th September to 31st March 2018. The project was incomplete. Means WIP, WIP, WIP na. As on 31st March 2018, and the directors of X Limited estimated they need to spend a further 40 lakh to complete the project. After which each flat can be sold at rupees 50 lakh. So 50 lakh into 10 means how much? 5 crore? 5 crore. Examine and show how these three events would be reported in the financial statement of X Limited for the year ended 31st March 2018. Have you understood the question first? If you have understood, then solution is easy only. Can we do the solution? Yes, sir. That question. Yeah, this is the question. You can see on 1/4/2013, the cost price was 2 lakh 2 crore. Annual rent was 20 lakh. Can you say because it was a land only, so no depreciation. It was only land component, no depreciation. On 31st March 2017, they have given fair value 2.6 crore. Can you say fair value is not relevant? It is relevant only for disclosure purpose. Then on 30th September 2017, can I say it was vacated? It was vacated. Fair value is given 2.9 crore. Once again, can I say it is not at all important? So can I say on this date it will be reclassified from investment property to what? Inventory. Reclassification will be done at carrying amount. Carrying amount is what? Cost price only in this case because there is no depreciation. So it will be valued inventory at what? Is carrying amount means 2 crore. 2 crore. Then they have incurred some expenditure 60 lakh. So this will be added to what? 2 crore. It become 2.6 crore. Correct. On this date, can I say it become WIP? WIP will be valued at cost price or NRV, whichever lower. Cost price is 2.6. We need to find out NRV. What is the NRV of WIP? Remember, as per Ind AS 2. What is the NRV of WIP as per Ind AS 2? It means what? The expected sale price minus expected cost to complete. What is the expected sale price? 5 crore. What is the expected sale price? 5 crore. From this 5 crore, we'll deduct what? Estimated cost to complete 40 lakh. So 5 crore minus 40 lakh, how much? 5 crore minus 40 lakh, how much? 4.6. What is the cost price? 2.6. What is NRB? 4.6. Whichever is lower. Therefore, it will be carried at what? Lower. Lower is what? 2.6. Understood? Correct. Have you understood this point? Cost is 2 crore plus 62.6. NRB will what? 5 crore is the sale price minus estimated cost to complete is given 40 lakh. It will become 5 crore minus 40 means what? 4.6. Will take lower 2.6 or 4.6, whichever is lower will take lower 2.6. Therefore, it will be carried in the balance sheet at 2.6 as inventory. Correct. Yes, during the year for the first half, it was held as investment property is given on rent. So 20 lakh was the annual rental income. So 10 lakh will be recognized as what? Rental income of this year. 10 lakh will be recognized as rental income in this year. So they have three events. First event is this, second event is this, and third event is this. So they have asked what will be the accounting treatment of three events. First event is what? For first 6 months. Then on the rate of reclassification, the next 6 months. Understood? This 3 months they have asked accounting treatment. चलेगा? Understood? बोलो. Correct. One more question. Question 14. Finance Limited is a. This question have been asked, I think, 2 times in exam. Similar question. Finance Limited is a multinational entity that owns three property. All three properties were purchased on 1st April 2001. The details of purchase price and market value of the property are given below. Property 1, property 2, property 3. Factory means Ind AS 60. Let out means what? Ind AS 40. Purchase price given 15,000, 10,000, 12,000. Market value they have given 16,000, 11,000 and 13,500. Life they have given 10 year, 10 year, 10 year. Subsequent measurement cost model, revaluation model. My question to you all, if for one item of class, if you opted for revaluation model, for other item can you opt for cost model? In one class for one item, if you opted for revaluation model, so for different item in the same class, can you opt for cost model? No. Means can you opt for cost model? Either opt for cost model for both or revaluation model both. So you need to keep both scenario because question might be silent. So you need to correct. So either for property 1 and property 2, you go for cost model or go for revaluation model. Property 3, can you opt for revaluation model? No. For that only what? Cost model. Why? Because Ind AS 40 revaluation model is not permissible. Property 1 and 2 are used by Venice Limited as factory building, while property 3 is let out to a non-related party at market rent. The management present all three property in balance sheet at PP. This is also not correct. Means first two will be PP and the third one will be what, investment property. Correct. The company does not depreciate any property. This is also not correct. They need to depreciate even though market value is more than what? Cost price. On the basis that fair value are exceeding their carrying amount. Nalayak, they don't know anything. And recognize the difference between purchase price and fair value. In SOPL, batao, it will be transferred to SOPL, but in PL or OCI, any gain or loss in revaluation will be transferred to what? OCI. OCI. This is the also mistake. Analyze. Whenever they say analyze, actually this question I have taken from analysis of financial statement. There is one chapter. There is one chapter, last chapter, analysis of financial statement. Whenever they say analyze means you need to write down first what? Ind AS required, which Ind AS will follow. Then you need to write down definition requirement, recognition requirement, measurement requirement, both initial and subsequent. Then give wrong treatment, then give correct treatment, then give the what? Accounting treatment correct and extract of finances. Whenever they say analyze, are you getting what it is? So whenever they say analyze the treatment done by the Nalayak accountant, we should give reference of Ind AS and also the provision of that Ind AS. Now, why Ind AS 16 cost model, revaluation model, whatever, everything need to be written. Correct? We can read it. The analysis you can read it. I'll just go for the solution. Chalega? Means you can read it now. You can see this much they have given. Correct? But just try to understand. They have given in case 1. Finance Limited apply cost model to the entire class of property plant. If cost model, then what will happen? Cost model, then what will happen? It is 15,000, 10,000, 25,000. Will not take revaluation. Life is 10 year. So 25,000 divided by 10. 25,000 divided by 10 is the depreciation. So means what will be the carrying amount? 25,000 minus 2,500 is what? 22,500. So in PP how much will come? 22,500. Correct. Investment property will adopt cost model only. This 12,000 divided by minus what? 1,200. It will come 10,800. This much only. You can see what is given in the answer. Check करेंगे. Same thing is given. Check करो. Super easy na. Answer was very easy. But then also writing part, huh? Writing part you read. I will not say. Same whatever I will say, that is only written. Understood what I am saying? Then if you opt for revaluation model for what? Property, plant and equipment. So first you need to charge depreciation. Of first you will apply revaluation. You only say. Means you will do revaluation at the end. First depreciation or first revaluation? First depreciation or first revaluation? First depreciation or first revaluation? No. Second mistake. Identify the area where you can do mistake. Most of the students will do this. They will say 50 minus 6 now 1000 will transfer to us. Compare the carrying amount with fair value. Carrying amount will come after depreciation. Revaluation is done at the end now. So first depreciation, then revaluation. Understood? First depreciation, then revaluation. Always. Kasam kao. Kasam kao. I said now I need to identify the area where you can do mistake. And this is the area where you do mistake. You know everything, then also you do mistake. And then we cry. We cry that we are not getting marks. Understood? The first depreciation. Can depreciation remain same? Depreciation will remain same. Now 15,000 minus 1,500. So 15,000 minus 1,500. 13,500 minus 16,000. So upward, downward, upward. So minus 16,000. How much OCI? 2,500 OCI. Understood? Write down somewhere. 2,500 OCI. And the carrying amount will be 16,000 now. Revalued at 16,000. Then 10,000 minus 1,000. 9,000. Increase to 11,000. Increase to 11,000. 2,000 OCI. 10,000 minus 1,000 depreciation. Na? अरे बोलना रे. 10,000 minus 1,000 depreciation 9,000. 9,000 will be compared with 11,000. Upward revaluation 2,000 OCI. Total OCI become how much? Understood. And in balance sheet it will come 16,000 plus 11,000. OCI will go to revaluation surplus in balance sheet. Correct. And can I say for property let out it will be same only. Let's see the answer is same. Same to same question came in exam. But how you are writing that depend. Check karo. 16,000 11,000. Property 3 10,800 and OCI 4,500. Normally student have done mistake here, but they have done mistake यहाँ पर. Understood what mistake they have done? Understood. One more question. This is newly inserted question. This was newly inserted question. Expected. Not yet asked. But if this question will come now, this will be of 10 to 12 marks. Now the question is that whether they will ask 12 marks question from this chapter. That is the point. Because normally from this chapter 6 marks question. If they ask in 10 to 12 marks means then they will not ask from consolidation. ठीक है ना? That is the point. चलो देखते हैं. Surya Limited own a building A which is specifically used for the purpose of earning rental. The company has not been using building A or any of its facility for its own use for a long time. The company is also exploring the opportunity to sell the building to get a reasonable amount in consideration. Means it is held for capital appreciation, so it become investment property. Right now, so it is easy to identify this is investment property. In exam, you don't know which chapter you are doing. In exam, you need to first think which Ind AS. So Ind AS 40 na, where it is held for sale, but not in the ordinary course of business. Correct? Following inform is relevant for building A for the year ended 31st March. I have seen students have a lot of doubt for this. Let's see what you are thinking. This this sentence, many students have doubt. I don't know why. Let's see what you are thinking. Same question will come. If you will not highlight this point, you will do the same mistake in exam. Let's see what you are thinking. What they said? Following inform is relevant for the year ended 31st March 2020. Okay? Okay? What mistake everyone is doing? Building A was purchased 5 years ago at a cost of 10 crore. Building life is estimated to be 20 years. The company follows straight line method for depreciation. During the year, the company has invested in another building. During the year, with the purpose to hold it for capital appreciation. This is also IP. The property was purchased on 1st April 2019 at a cost of 2 crore. Means at the beginning of the year, expected life of the building is 40 years. As usual, the company follows straight line method. This first building, what is the life? Second building, what is the life? Further, during 2019-20, the company earned or incurred falling direct operating expenses relating to building A and B. Rental income, rental income, then sales promotion expense, fees and tax, ground rate, repair, maintenance, legal and professional commission. Everything is given. The company does not have any restriction and contractual obligation against building. These are all disclosure requirements. You have done right now, na? Disclosure requirement. No restriction. For complying with the requirement of India, the management sought an independent report from a specialist so as to ascertain the fair value of building A and B. Understood? The independent valuer has valued the fair value of property as per the valuation model recommended by International Valuation Standard Committee. Fair value has been computed by the method streamlining the present value of future cash flow, namely discounted cash flow. These are all disclosure requirements. Just write down 1, 2, 3 like this. Means in question solution is given. Are you getting disclosure requirement? Write down 1, 2, 3 points. The other key input for valuation are the estimated rent, which they have given the assumption taken for what? Valuation. Ind AS 113 says that all the assumptions taken for fair valuation need to be disclosed. So whatever assumption you have taken for fair valuation as per Ind AS 113 required disclosure. So this assumption need to be disclosed. Assume that fair value of property based on discounted cash flow method is 9, means total fair value is 10.5 crore. They have given fair value, thank you very much, Only for disclosure, huh? What will be the treatment of building A and building B in the balance sheet of Soria Limited? Please provide detailed disclosure and computation in line with the relevant India's accounting is in accounting standard. Treat it if you are preparing separate note means you need to give separate note for balance sheet. Extract of finances. These are the questions which can kill you, even though very easy. Why? You will take a lot of time if you do not practice. And first to understand what is the requirement, you will take more time to read the question only. See, this type of questions should be revised before exam. If you revise before exam, same to same is going to come. They will not change it. ICAI has a trend of repeating the same question, only they will change the number. Just try to understand before exam, read it and revise it. Same question will come. You can save 12 minutes or 15 minutes or not. Reading time and what? Writing time. Well, once you know, you can start or not. But read it, huh? They may change one information. They may change only one information, nah. Read it, but you can save time, nah. So therefore, this type of questions should be done before exam. If you are a smart student, you will do before exam. If you are not a smart student, you will not do. Smart student always plan their exam. Hard working student will become CA, but a smart student will become CA very soon. The difference between hard working and smart student will plan their exam before only. What to revise, what not to revise. Understand what I am saying? To all those questions which I have taken are those questions require revision before exam. You can see I have taken all good questions. And if one questions come now from this all list, so it means you can score 20 marks or 15 marks. 15 marks so I am giving you. One question will पक्का come. ज़्यादा ही आएगा. From my expected list, the past trend is what 60% coverage will come. But I always say don't rely on that because ICI has a trend of changing the train. Understood what I am saying? But you need to plan your study. That is very important. This is planning. What to revise before exam? Big question. Believe me, if you don't do before exam, now you will take 20 minutes to understand. Game is over. 20 minutes in reading time. The game is over, na? Correct? Yes, sir. Now it is very easy. Only one point you can do mistake. Let me come to that point. Let's see what mistake you are doing. Let me whether you are doing that same mistake or not. Can I ask that point? Follow. Can I ask that point? My question to you are everyone sub. Just try to understand. In this question they have given which year? 31st March 2020. An asset was purchased 5 year without. Building A was purchased. They have given following information relevant for building for the year ended 31st March 2020. Building A was purchased 5 years ago at a cost of 10 crore. Now my question to you all, 5 years should be counted from this date or from beginning means 1/4/2019 means you want opening balance as on this date. So they are saying the building A was purchased 5 years before. So 5 years will be counted from 31st March 2020 from 1/4/2019. What do you think? Have you understood? Following information is relevant for building A for the year ended 31st March 2020. Building A was purchased 5 years ago. From the beginning you will count कि from the end you will count. Everyone saying building? Is everyone saying beginning? Beginning? Have you understood my question? Because in this question only that is the point. If you can understand, you can do it by rote. If you do not understand, one mistake, 0 marks now. Initial mistake means 0 marks. So if you are saying from the beginning, it is correct. But if you are saying from the end, it is wrong. Because they have given, just try to understand what they have. The following information relevant for the year ended. They have not said that these are the information as on year end. This is for the year now. So it means you are preparing financial statement of current year. And they are saying building A was purchased 5 years ago. So from the beginning only. So it means it was purchased from the beginning and 5 years will be counted from this date. And what was the cost price? 10 crore. 10 crore na. What is the useful life? 20 into what? 5. So how much depreciation already charged? So it means it becomes 7.5 as on this date. Correct. Second machinery was purchased yahin par. Second machinery, what was the cost? It was 2 crore. So 2 crore divided by 40 is equal to what? So 0.05 will be the depreciation of this. What will depreciation for current year? Can you same depreciation for SLM? 0.5. So total depreciation becomes 0.55. But can you say for this accumulated depreciation was 2.5? Correct? Understood? So how to present the information? How to present the information that I need to inform? You can see notes to financial statement. Investment property. What is the gross book value opening balance property A? 10 crore. Purchase property B 2 crore. Total gross book value, closing balance of gross book value 12 crore. Then we'll do accumulated depreciation. Opening balance 2 crore 50 lakh. Depreciation of 1920. Total depreciation of A and B 5.5 we 0.55 we calculated is 55 lakh. So total accumulated depreciation becomes 3 crore 5 lakh. 12 minus 3 crore 5 lakh. We can calculate closing balance. And we need to also give the opening balance on net book value. These are all disclosure requirements. Means we need to give opening balance and closing balance of gross book value. We need to give opening balance and closing balance of net book value also. Understood? Now, can you say we have some other income also, rental income? So rental income of property A is given, property B is given. Then from this we'll deduct all direct operating expense. Direct operating expense is given. The total is coming 13 lakh. You need to write down separately. Then depreciation of property is what? 55 lakh. So this become what? Profit from earning of rental income. This will go to SOPL. So profit from earning of rental income. This will go to what? SOPL. Correct. And then you can see I have given all the disclosure requirement for IP. A, B, C, D. Whatever is given, we have written. Investment property consists of building A and building B. Whose fair value is itna? The valuation is made by independent valuer having a professional qualification. A valuer recommended by IVSC is applied and discounted cash flow method has been used. Following assumption has been taken. Whatever assumption given, write down. Correct now. The entity has no restriction on realizability of IP. The entity has no contractual obligation for IP. These all are what disclosure requirement, write down. This question will come for 10 marks, but how you write, that is very important. Understood? Correct? I think done. In days 40 is also correct. I'll give break at 1:15. Chalega? We can take one more in days if you permit. You need to permit me every time. So now which in days? You want borrowing cost? Easy wala, chalo ठीक. Or I have already made one schedule. I'll go as per schedule. So we have completed India 16, we have completed India 13, we have completed India 40. Let us take 23. Easy one lele. Correct? Now all small means I can complete more Indias today. Will take what? Because what I am saying now, I will do this small Indias thoda quickly so that I can give more time on consolidation, business combination, financial instrument chapter. These three chapters I want to give more time. If I will take much time in this, then I have to give less time there na. So I am trying to complete this all small Indias quickly so that I can give more time where? In consolidation, etc. Chalega na? Are you able to understand my objective? Correct? So intention is to give Have a quick revision in this because most of the point you can easily understand by your own. Now come to what? Ind AS 23. Chapter number. Let us complete it fast. Foreign cost. I hope this to you know everyone. Foreign cost. There are two, three special points which require attention. I know where you can do mistake, so I will help you in that point. Hope you all know that entities shall apply this accounting standard for borrowing cost. This accounting standard is not applied on actual imported imputed cost of equity. So we are not dealing with cost of equity. We are dealing with only cost of borrowing. Now you all know that redeemable preference shares will be borrowing. Redeemable preference share capital will be always classified as financial liability. That is borrowing. But irredeemable preference share capital will be equity. Correct? So redeemable preference shares capital to any dividend expense will be borrowing cost now. Correct? So borrowing cost are interest cost and other costs in connection with the borrowing of fund. It will include interest cost and other cost. Correct? Now, when I say borrowing costs include three type of interest cost. One is interest expense calculated by using effective interest method. Now, because you have done financial instrument chapter, you all know about effective interest method. We calculate EIR. On EIR, we calculate by using EIR, we calculate interest expense. Understood? Interest expense in respect of RU asset held by lessee as per Ind AS 116 is in case of lease in the books of lessee, whatever finance charges that will be also borrowing cost. That will be also borrowing cost. Correct. And exchange difference arising from foreign currency borrowing to the extent it is regarded as an adjustment to interest cost will be also borrowing cost. This point I will discuss at the end. One second, from examination point of view. How much exchange difference will be considered as borrowing cost. Okay. Now for the purpose of accounting, what they say, there are some borrowing costs which will be charged to P&L, there are some borrowing costs which will be capitalized. So we need to understand which borrowing costs will be capitalized. Can I say balance will be charged to P&L? So any borrowing costs which are directly attributable to the construction, acquisition or production of a qualifying asset will be capitalized. Means any borrowing costs which are directly attributable to construction, acquisition or production of a qualifying asset. Now the question is that what is the meaning of qualifying asset? You all know that any asset which takes substantial period of time for getting ready for its intended use will be what? Qualifying asset. Any asset which takes substantial period of time for getting ready. For getting ready for what purpose? Either for sale or for use. Means when we are saying for use, to when is the use? It can be property, plant and equipment, it can be intangible asset, it can be investment property. When I am saying for sale, to it can be inventory. Means inventory can be also qualifying asset. Correct. Now the question is that what is the meaning of substantial period of time? You only say what is the meaning of substantial period of time? So it is not defined under Ind AS. However, AS 16, if you remember, there was some explanation given about substantial period of time. If any asset takes more than 12 months, it will be substantial. But if any asset is taking less than 12 months, it may or may not be substantial. It depends upon facts and circumstances of each case. Correct now. So, again, substantial will be a judgmental factor. From examination point of view, if any asset is taking 12 more than 12 months, always assume what? Substantial. If any asset is taking less than 12 months and question is silent, I will say write down one note and based on note give your solution. Suppose any asset is taking 9 months, what you will do? I will say assume 9 months is substantial. Your question is not clear now. Question is silent. You need to take one assumption. So 9 months you assume it is substantial. I give an alternative solution also. If it is not substantial, then borrowing cost will not be capitalized. However, from my point of view, most of the question will give an indication whether it is substantial, it is not substantial. Correct. Now, there are some specific assets which are excluded from a definition of qualifying asset. So what are the specific exclusion? What they said, any qualifying asset that are major fair value, means any asset which are major fair value will not be a qualifying asset. Means for example, biological asset will be initially major fair value. The biological asset are initially major fair value, that will not be a qualifying asset. Similarly, investment which are financial asset are initially major fair value only, that are also not qualifying asset. Right? Similarly, any inventories, for inventory they have given a special point. Any inventories that are manufactured or otherwise produced in large quantities or on a repeated basis will not be a qualifying asset. What they have said? Inventories that are manufactured or otherwise produced in a large quantities but on a repetitive basis will not be a qualifying asset. Now, everyone, this is one special point. Now, India 16 has given only this non-highlighted point. Is sorry, India 16. India 23. India 23 has said any inventories which are manufactured or otherwise produced in large quantity on a repetitive basis are not a qualifying asset and silent. Correct. Now the question arises: any inventories which are produced in large quantities on a repetitive basis. Repetitive basis means on a regular basis. Correct. And takes substantial period of time. Whether it will be qualifying asset. What doubt will come? One second. India 23 says any inventory which are produced in large quantities but on a repetitive basis are not a qualifying asset. One doubt will come. If any inventories are produced in large quantity on a repetitive basis but by taking substantial period of time, whether it will be qualifying asset. Doubt will come. So ICAI has given one interpretation in ICAI study matter here. They said even if they take what substantial period of time, it is not a qualifying asset. This is the interpretation given by ICAI, not by me. First thing. As per ICAI study matter, what they said, any inventories which are produced in large quantity on a repetitive basis will not be a qualifying asset even if they take substantial period of time for getting ready for its intended use. This has been given by ICAI study material, not by me, not by India. I am giving what ICAI says. Chalega? Yes, sir. So no fighting for this. No fighting for this, huh? You need to fight with whom? ICAI. Are you able to understand what I am saying? Are bolna re. This is not my interpretation. Have you understood this point? Yes, sir. Now, can you say you have understood now substantial period of time? Can you say depending upon whatever discussion we have done right now, can you say inventories may be a qualifying asset now? But which inventories? Inventories which are not produced in large quantity, not on repetitive basis, and taking substantial period of time. Means suppose we are producing single asset. It is not large quantity. We are producing, yeah, we are manufacturing, yeah, we are assembling aeroplane. So it will be a qualifying asset only. Single na. Will not do bulk productions for aeroplanes. Understood? The plant can be what qualifying asset? Power generation facility, intangible asset, investment property. Beer plant can be also qualifying asset because beer plant are covered under India 16. Other biological asset cannot be qualifying asset because other biological asset are measured at fair value. Understood this point? Can I say any asset which are ready for its intended use on the date of purchase only are also not qualifying asset? Any asset which are ready for its intended use or sale at the time of purchase only, they are also not qualifying asset even though you have taken loan on purchase because they are not taking substantial period of time for getting ready. For example, you purchase one commercial apartment of rupees 100 crore by taking a loan of 100 crore and it was available for use on the date of purchase only. So whether it is a qualifying asset, it is not a qualifying asset. Coming next point. For the purpose of capitalization, how to calculate amount of capitalization, it has been divided in two parts. Whether it will be specific borrowing or it will be non-specific borrowing. If it is specific borrowing, so borrowing if it is specific borrowing, then borrowing cost to be capitalized will be actual borrowing cost minus any income earned from temporary investment. Right now we have done one question under India 60, correct? So actual borrowing cost less income earned from temporary investment. This will be borrowing cost to be capitalized. Borrowing cost to be capitalized. चलेगा? Now this actual borrowing cost is calculated by applying EIR only. Huh? Is calculated by applying EIR. Now you know the concept of EIR. Is whenever we calculate interest expense will be calculated by applying EIR, not contractual rate of interest. Remember this financial instrument chapter? We'll always apply EIR, not contractual rate of interest. There are two type of rate of interest. One is contractual rate of interest, one is EIR. So to calculate borrowing cost, we'll apply EIR or contractual rate of interest. If question is silent, then we'll assume contractual rate of interest and EIR are same. Correct. Now for non-specific borrowing, what to do? Is whenever non-specific borrowing, if there are more than one non-specific borrowing, suppose we are borrowing 1, borrowing 2, borrowing 3, correct? So these are the borrowing which can be used for any purpose. So what India's 23 says that for this borrowing, first calculate capitalization rate. Capitalization rate is nothing but effective rate of interest. We'll calculate capitalization rate. So capitalization rate for non-specific borrowing, it will be equal to actual borrowing cost of non-specific borrowing is total borrowing cost divided by weighted average borrowing fund. Weighted average borrowing fund means what? Suppose this was available for 9 months, this was available for 10 months, this was available for 12 months during the year. So this will do 9 by 12, this will do 10 by 12, this will do what? 12 by 12. As we do in EPS, amount of loan multiply by time weight, and we'll calculate weighted average borrowing fund. Have you understood this point? Have you understood this point? Yes, sir. This will be capitalization rate, and this capitalization rate will be applied on average expenditure. Average expenditure during the year. Let me take one question to explain what they want to say about this. Can I take one question? Very simple question I will take. So come to India's 23. Question number 20. X Limited began the construction of new building on 1st Jan 2007. This is very simple question. Similar question might have done at CA Inter also. But to explain one point, I am taking this question because I think one point student may do mistake, and that type of question have been asked in exam. So 1st Jan 2007, it obtained 1 lakh special loan to finance the construction of building of 1st Jan 2007 at an interest rate of 10%. The company's other outstanding two non-specific loan were itna and itna 5 lakh, 9 lakh, 11%, 13%. These are non-specific. Then expenditure that were made on building project were as follows: 2 lakh, 2 lakh 50,000. They have given date wise. Correct. So how to calculate what? Borrowing cost. Do we need to calculate borrowing cost? Can we calculate? Follow. Everyone. Can you say first we'll calculate what? Borrowing cost. What will be borrowing cost? Batao. This one is specific borrowing. 1 lakh is specific borrowing. Rate of interest 10%. If actual rate of interest means if EIR is not given, then contractual rate of interest will be taken as what? EIR. So 10% to 12 by 12. This is borrowing cost in specific borrowing. Correct now. Then non-specific borrowing, there are two non-specific borrowing. 5 lakh at a rate of 11% and 9 lakh at a rate of 13%. Both are outstanding from the beginning. We will take 12 by 12 and this become 55,000 and 1,70,000. This become borrowing cost or non-specific. This so you can easily calculate. Correct? In this any doubt? Have you understood? You have the questions. Don't have the questions. है ना? Have you understood this point? Follow. Yes, sir. Now, can you say because there are two non-specific loans, so we'll take what? We'll calculate capitalization rate. So what will be the capitalization rate? Capitalization rate will be 1,72,000. Correct? Divided by, can you say 5 lakh plus 9 lakh? Total borrowing cost divided by total fund. But because this is for entire year, so we'll do 5 lakh into 12 by 12 and 9 lakh into 12 by 12. So 5 lakh divided by 14 lakh, how much it is coming? What is the capitalization rate? 12.28%. This become capitalization rate. If suppose this loan was taken at the mid of the year, then can you see we would have done 5 lakh into 6 by 12. So यहाँ पर we would have taken 5 lakh into 6 by 12. Normally student do mistake यहाँ पर. Normally student do mistake in this case. They will take entire 5 lakh. Because you are taking interest for 6 months, so your fund should be also for 6 months. This point have you understood? Correct. Now we'll calculate average expenditure. Can I say average expenditure will be calculated as per the number of months? So how much expense incurred in the month of Jan? 2 lakh. We'll give weight for what? 12 by 12. How much expenditure incurred in the month of April? 2,50,000. So April to December, 9 months. How much expenditure in the month of July? For 6 months. How much expenditure in the month of December? 1 month. We have assumed because it is given the question year end is 31st December. So this become average expenditure. Can I say out of this average expenditure, first we'll use specific borrowing. Means this expenditure will be from first from specific borrowing. So first we'll use specific borrowing to the extent of 1 lakh. Means balance expenditure is from non-specific borrowing. So expenditure from non-specific borrowing is 5,20,500. Correct. On this we'll apply what? 10% only. Correct. Means now what will be borrowing cost to be capitalized? Borrowing cost to be capitalized will be what? Expenditure from specific borrowing 1 lakh into 10%. And expenditure from non-specific borrowing 5,20,500 into capitalization rate. So this become what? Total borrowing cost to be capitalized. The balance borrowing cost will be charged to PL. Balance borrowing cost will be charged to PL. So what was the total borrowing cost? Total borrowing cost was how much? 1 lakh 82,000. So 1 lakh 82 minus what? This will be charged to PL. Understood? Have you understood? Correct. This much if you have understood. So I would like to ask one question from you. Suppose in the same question they have given this expenditure. Means only I have changed the expenditure. Means you can see Jan 50,000, April 4 lakh, 4 lakh 50, 1 lakh 20. So how to calculate average expenditure? Understood? Can you say only calculation of average expenditure will be different? So the first 50,000 you will take how many months? How much? 12 by 12. Then 4 lakh how many months? Huh? How much? 9 months. And here only you will do mistake. Just try to understand. Out of total loan, 1 lakh is what is specific borrowing. And case for specific borrowing, entire borrowing cost will be capitalized irrespective of expenditure. Means out of this expenditure, 1 lakh will be from which expenditure? So this is from specific borrowing. Out of this 4 lakh, 50,000 will be from specific borrowing, and this 3,50,000 will be from non-specific borrowing. Are you able to understand what I am saying? So for this you will need to take 12 by 12 only. For specific borrowing, entire borrowing cost will be capitalized irrespective of expenditure. This is the concept. And normally in this question, everyone will do mistake, and this type of question already asked in exam. Have you understood this point? One second. Can I say for a specific borrowing, borrowing cost will be capitalized irrespective of expenditure during capitalization period. Now what is capitalization period? I will do at the end. During capitalization period. In this case, the capitalization period is 12 months. Understood? This will be what? 9 by 12. Now you can do now the same thing. Have you understood this concept? This is the area where you can do mistake. In this crash match, there are two objectives. My objective is to give you the conceptual understanding from examination point of view. Second objective is to identify the area where you do mistake. This is the area where you can do mistake. Got it? Chalega? I hope now you will understand whatever is given. You can see that is given. Calculate average expenditure on qualifying asset during the year. Amount of capitalization, that is borrowing cost to be capitalized. Expenditure from specific borrowing, expenditure into actual rate means EIR. Expenditure from general borrowing means expenditure into capitalization rate. This is amount of capitalization. Balance borrowing cost will be charged to PL. Understood? Correct. Now there is one special point. This last point before break. One special point. Suppose you have taken one specific borrowing, correct? And the purpose for which borrowing was taken, suppose the purpose was what? For construction of building, and the building is ready. So once the purpose completed, for that particular building will cease capitalization. Understood? Means can the purpose of this borrowing was over? Purpose of this borrowing is over, but it is not repaid in the next year. Means second year it is not repaid. So if not repaid, can I say we are incurring borrowing cost? Bole yes or no? Are we able to understand? So whether this will be considered as specific borrowing or general borrowing for second year, this borrowing cost will be always charged to PL. Huh? Have you understood the question? What India's 23 say that we cannot make one-to-one relationship of borrowing, if which borrowing is used for which purpose. Now once the purpose completed, this borrowing, specific borrowing, will be treated as general borrowing, and this borrowing will be taken into consideration to calculate capitalization rate for. Till now no question have been asked from this, but a small question is given in revised study material, so can be asked. Till now not asked. Understood? But I am full confident that this point will pakka ask at CA final level. What is given? The capitalization rate shall be weighted average of borrowing cost applicable to all borrowing of the entity that are outstanding during the period. Point you understood? But which borrowing? General borrowing? General borrowing na? However, an entity shall exclude from this calculation borrowing cost applicable to specific borrowing until, means from this calculation what we should exclude? Specific borrowing until substantially all the activities necessary to prepare the qualifying asset for its intended use are complete. Yes, you understand? When the funds are borrowed specifically for a qualifying asset, Cost in relation to that borrowing are accounted for as specific borrowing cost until the asset is ready for its intended use or sale. If the borrowing remain outstanding after the related asset is ready for its intended use or sale, it become part of what? General borrowing. Have you understood this para? I hope you have understood. Correct? So we'll take break because now lunch time ho gaya. I am also feeling hungry. Okay? You also take break. We'll also take break. We'll meet at 2. Okay? Okay. Chal. Can we start once again, everyone? Now, before break, we were discussing about India's 23. I hope the last point you have understood about specific borrowing. Whenever you take specific borrowing and the purpose of that borrowing is completed and is not repaid, then specific borrowing will be treated as general borrowing and it will be taken into consideration for calculation of capitalization rate. Yeah. One doubt came in the break. Let me discuss that doubt first. What is the doubt? Let me read that doubt. The doubt came that if a loan has been taken from bank for a construction of asset which takes substantial period of time to get ready. Okay, it is specific borrowing. In order to capitalize borrowing costs, is it mandatory that funds should be utilized from that amount borrowed from bank only? Or it is used, or is it allowed to be capitalized even if we use some other money, that is some portion of money which we already had that is being used in the current year, because of which entire loan amount remain unused in current year, such loan amount is used in subsequent year. Just try to understand. India's 23 has not given any clear indication that from where you are using that amount. For example, you have taken a loan of 10 lakh, even though you are not using, but can you make one to one relationship? You can't make one to one relationship. You have taken a loan, that amount is now in a part of bank balance, and you have some other fund also in your bank balance, so you can use any amount. You can't make one to one relationship. No, we have not used this part, we have used this part. This one to one relationship cannot be made practically also. Are you able to understand? Just try to understand what I want to say. Suppose this is your bank balance. Already you have own fund of 5 lakh. You have own fund of 5 lakh. Now you have taken loan of 5 lakh. So this will be in this bank balance only. This is also 5 lakh. Now you are saying that you are using this 5 lakh. You are not using this 5 lakh. This is nonsense, I will say. We cannot make one to one relationship. So if there is a borrowing, if there is a specific borrowing, you can't say that we have not used that borrowing and we are uh, you started your construction. You need to start construction by using that fund only, and therefore borrowing cost will be capitalized. Even though management say that we are not using that fund, because we cannot make one to one relationship. Have you understood this point now? Correct? Is your doubt clear? Respond. Have you understood? Yes. Now, coming to the next point, this point number 5 I will do at the end by taking a question. Okay? Now come to point number 6 about commencement, suspension and cessation of capitalization. Means when to commence, when to suspend and when to cease capitalization. Correct? The same to same whatever we have done under AS 16. So when to commence, when to commence. So what Ind AS 23 says that it will be commenced from commencement date. So what is the commencement date? Commencement date is the date when all these three conditions are satisfied simultaneously. So when these three conditions are satisfied, that will be the date of commencement of capitalization. So what is it? It incur expenditure for the asset, means expenditure on qualifying asset is being incurred. It incur borrowing cost, means you have taken loan and borrowing cost is also being incurred, and it undertake activities that are necessary to prepare the asset for its intended use or sale. Means the activities which are necessary for construction, acquisition or protection has been initiated, has been undertaken, correct? Means suppose, just try to understand, for construction of building, board of directors resolution is required. Resolution is required in board of directors meeting, and you have not taken the resolution. Can we start construction? We cannot start construction. And if we started construction, can I say, I will say that is not correct. That is not correct now. So what they are saying, any activities which are necessary for construction, acquisition or production of qualifying asset has been initiated, has been undertaken. For example, construction, for construction you require permission from municipal department, etc. So that permission has been taken or has been initiated or has been taken, then only you can capitalize your borrowing cost. Understood? Means what I want to say, when to capitalize. So this is the date when you have taken loan. You have taken loan on this date. This is the date when expenditure on qualifying asset is incurred. Normally, activities which are necessary for construction, etc., will be initiated before this only. Normally, activities which are required for construction, etc., will be initiated, yeah, will be undertaken before this. So therefore, can I say, at this point of time will become commencement date, and this will be what? The date of commencement from which capitalization will commence. Means any borrowing cost before this will not be capitalized. Any borrowing costs which are before this will not be capitalized, that will be charged to profit and loss account as an expense, because all the three conditions need to be satisfied on commencement date. Means what I want to say, suppose you have taken loan on this date, and expenditure was incurred on this date, expenditure of qualifying asset was incurred on this date, but activities which are necessary for construction, acquisition or production of a qualifying asset was undertaken on this date. It means this will become commencement date. This will become commencement date, because all borrowing costs after this will be capitalized. This will be charged to profit and loss account. Understood this point? Have you understood this point? Yes, sir. Then what? When to suspend? When the borrowing cost will be suspended? So can I say, borrowing cost capitalization will be suspended when active development is interrupted due to some unnecessary activities. When active development is interrupted due to unnecessary activities means which is not required for construction. Sometimes we suspend our development activities due to some necessary activities, then we will not suspend capitalization. So when we say suspend means what? It is temporary, it will be ceased, not permanently ceasing, it will be temporarily ceased for the time being. So when the active development is interrupted due to unnecessary activities, then we'll suspend capitalization, and during that period, borrowing cost will not be capitalized, with charge to profit and loss account. For example, some legal case is going on. Because of that legal case, someone has filed a case against you. Because of that legal case, you stop production. So can I say that is unnecessary activities? Unnecessary activities. Therefore, you need to suspend capitalization. Correct. Fire occurred. So can I, that is also unnecessary activity. You need to suspend. You need to interrupt your production activities or construction activities. So during that period, you are not supposed to capitalize your borrowing cost. But there are sometimes necessary activities. Because of that reason, you need to stop your production or construction activities. For example, if you have seen a building is constructed, sometime we'll stop construction for curing purpose. You'll give water for what? Drying that portion. Correct. Now water is given now. That is known as curing purpose. So that curing is necessary for construction activity. That is a part of construction activity. Therefore, you will not suspend capitalization during that period. Understood? Now, when to cease? Can I say capitalization will be seized when substantially all the activity necessary to prepare the qualifying asset for its intended use or sale has been completed. Means in simple word, asset is ready for its intended use or sale, will cease capitalization permanently. Even the loan is not repaid, even the borrowing cost is incurred after that, but borrowing cost after that will be charged to PL as an expense. Have you understood this point? Means what I want to say, just try to understand. If I just inform you some diagram, means suppose this. I hope this will give a better picture. You can see this is the date of loan. This is the date of construction of qualifying asset. Correct? So during this period, your borrowing cost will be charged to PL. Once you started incurring expenditure of qualifying asset, this will become date of commencement of capitalization. From this date, we will start capitalizing. And suppose during this date, active development is interrupted due to unnecessary activities. So we'll suspend. This will become date of suspension. And during this period, till development restarted, we'll charge it to profit and loss account. We'll charge it to profit and loss account. Once the development restarted, once again we will recommence capitalization. And suppose on this date the asset is ready for use, so during this period we will capitalize it. And once the asset is ready for use, then any subsequent borrowing cost will be charged to profit and loss account as a expense. I think it is giving better idea. Correct. Now just try to understand. This is what this is what your capitalization period. This is your capitalization period. Excluding the period during which the borrowing cost is suspended. Capitalization borrowing cost is suspended. Correct? Means suppose this is 2 months, this is 3 months, this is 2 months, this is 3 months, this is 2 months. So what is your capitalization period? 6 months is your capitalization period. 6 months is your capitalization period. Correct? Means can I say if it is specific borrowing, so during the capitalization period, borrowing cost will be capitalized irrespective of amount used. Means if it is specific borrowing, borrowing cost will be capitalized irrespective of amount used. Means suppose you have taken a loan of 10 lakh and you have used only 2 lakh, then also how much borrowing cost will be capitalized on 10 lakh or 2 lakh? On 10 lakh. But if it is non-specific borrowing, the for non-specific borrowing will only take the portion of the amount which has been used for expenditure. Means expenditure from that non-specific borrowing, that portion will be capitalized. Have you understood this point? Have you understood this point? Yes, sir. We have understood. Correct. Now let us come to the one special point regarding this in AS 23 about exchange difference arising from foreign currency borrowing, which is allowed as an adjustment to interest cost. Which is allowed as an adjustment to interest cost. So what Ind AS 23 says that, everyone just try to understand. Suppose you have taken a foreign currency borrowing of $10,000. Okay. Rate of interest is 4%. Correct. Exchange rate on this date is 70 rupees. $1 is equal to rupees 70. And you could have taken similar loan from domestic market. That type of borrowing will be known as functional currency borrowing. Means if you the local currency will be known as what? Functional currency as per Ind AS 21. Do you know about functional currency? Foreign currency. So we have taken foreign currency loan. Means if similar loan has been taken in India, so that will be known as what? Functional currency borrowing. So if you take similar loan in India, the rate of interest will be 14%. Correct. And on 31st March 2021, exchange rate is equal to $1 is equal to 75. Now, what Ind AS 21 says that, sorry, what Ind AS 23 says that, Ind AS 23 borrowing cost says that, first calculate interest on foreign currency borrowing. That will be $10,000 into 4%, means $400, and this will be converted into functional currency by applying the exchange rate. So suppose the interest was paid on 31st March, exchange rate on that date is 75. So 400 into 75 become what? 30,000. And suppose a similar loan you would have taken in India. So how much loan amount you would have received? 10,000 into 70. 70 was the exchange rate on the date of loan. So 7 lakh you would have received. 7 lakh into 14% means what would be the amount of interest? 98,000. Correct. But can I say whenever we take funds, whenever we take foreign currency loan, there will be one more expense we need to incur, that is exchange difference. So you can see 70 becomes 75. So 5 rupees difference is there. So can I say you need to incur some exchange loss, that is 10,000 into 5. So that becomes 50,000. So just try to understand. We are not discussing about this. This 30,000 will be always borrowing cost. Right now we are discussing about this 50,000, whether it will be covered under Ind AS 21 or Ind AS 23. If it is covered under Ind AS 21, Ind AS 21 means foreign exchange, effect of foreign exchange rate. As per India's 21, any exchange difference of whatever nature will be transferred to PL. But as per India's 23, if suppose such exchange loss is a borrowing cost, it can be capitalized also. Are you able to understand? So what India's 23 says that out of this 50,000, out of this 50,000, some portion will be covered under India's 23, some portion will be covered under India's 21. So we need to understand how much will be covered under India's 23, how much will be covered under India's 21. So what India's 23 says that, everyone, how much will be covered under India's 23 will be lower of point number 1, actual exchange loss, that is 50,000, actual exchange loss, that is 50,000, and the difference between interest on foreign currency borrowing and functional currency borrowing. So in functional currency borrowing, what was the interest? 98,000. Foreign currency borrowing 30,000. So 98 minus 30, how much? 98 minus 30, 68,000. We'll take lower one. So what is the lower? 50,000. So out of 50,000, entire 50,000 will be covered under India's 23, and nothing will be covered under India's 21. Means, can I say this 50,000 will be considered as interest cost? This 50,000, even though exchange difference, it will be considered as interest cost and may be capitalized if it is incurred on construction, acquisition, or production of a qualifying asset. Have you understood this much? Have you understood this much? Huh? Correct. So what they want to say, the amount of borrowing cost adjusted will be lower of. Amount of borrowing cost adjusted will be lower of actual foreign exchange loss and borrowing cost in functional currency minus borrowing cost in foreign currency. Lower of these will be adjusted as an interest cost, and any balance exchange difference will be covered under India's 21. Correct? Have you understood? But suppose, just try to understand, suppose in this question there was no exchange loss, there was an exchange gain. Quite possible. There can be exchange gain also. So what India's 21 says that any exchange gain will be ignored. Any exchange gain cannot be a part of India's 23. So that will be covered under India's 21 and apply India's 21. As per India's 21, it will be transferred to PL. Correct. So any exchange gains should be ignored. This point you understood? Correct. But what they say, if subsequently there is a realized or unrealized gain, means if subsequent year there is what? Realized or unrealized gain. Correct. In respect of settlement or translation of same borrowing, the gain to the external loss previously recognized as an adjustment should also be recognized as an adjustment to interest cost. Have you understood this point? Means subsequent year there is a gain. Means in the first year there is a gain, ignore it. In the first year there is some exchange gain, ignore it. That will be covered under India's 21. But in subsequent year there is some exchange gain, that will be also regarded as an adjustment to interest cost, but to the extent of what amount? To the extent of loss previously recognized as an adjustment. Means if I take one example, let me take one example so that you can understand. This example, correct? You can see I have taken similar question as whatever example I have discussed. 70, 75. So first year borrowing cost will be 30,000 and exchange loss how much will be covered under India's 23, 50,000. So it become 80,000. Second year what I have taken 75, it becomes 74. So there is a chances of gain. Correct. So interest will be calculated again. 10,000 to 4% to 74, that will be 29,600. And there will be exchange gain 10,000 into 1 exchange gain 10,000. So what they are saying, this 10,000 will be regarded as an adjustment to interest cost in this year, second year only, to the extent of what? This amount. To the extent of previous loss which is regarded as an adjustment to interest cost. Means suppose if this amount is 60,000, then how much we can adjust? To the extent of 50,000. 10,000 India's 21 will be applicable. Have you understood this point? Are you able to follow? Are bolna? Are you able to concentrate? Once again, what I am saying, the exchange gain is 10,000. This will be regarded as an adjustment in subsequent year to the extent of which amount? The loss which was previously recognized as an adjustment to interest cost. What I am saying, if suppose this exchange gain is 60,000, suppose, then how much will be regarded as an adjustment to interest cost? Suppose this exchange gain is not 10,000, this exchange gain is 60,000. So how much you can adjust? Only to the extent of 50,000, 10,000 will be covered. Means extra will be covered under Ind AS 21 only. Understood this point? Okay. In exam, normally they have asked till now for first year, they have not asked second year. Subsequent year till now they have not asked. Understood? But have you understood? With this point number 7 also over? Correct. Now let us come to one special point. Special point regarding consolidated financial statement. Capitalizing borrowing cost in group financial statement. In a group financial statement. Because a new question has been given in ICAI study matter regarding this topic become important. Correct. Capitalizing borrowing cost in group financial statement. Correct. What they are saying? There may be a situation when the borrowing are taken by one company and qualifying asset is developed by another company within group. Correct. Means borrowing is taken by parent company. Qualifying asset is taken by developed by subsidiary company. Quite possible. Capitalization in such circumstances would only be appropriate if the amount capitalized fairly reflected interest cost of the group on borrowing from third party that could have been avoided if the expenditure on qualifying asset were not made. Understood? Means what they want to say. What they want to say. Suppose this is parent company, this is subsidiary company. Correct? Understood? So suppose the one loan has been given by parent company to subsidiary company. Means in this company one borrowing will come and they are developing one qualifying asset. Correct? Now the question is that we are not discussing about individual financial statement of subsidiary company. In individual financial statement of subsidiary company, can I say this is a borrowing and this is a qualifying asset? So of course borrowing cost will be capitalized. But in consolidated financial statement, can I say this borrowing will be cancelled and there is no borrowing cost? If there is no borrowing cost, question of capitalization will not arise now. The question of capitalization will not arise. But suppose the loan has been taken by third party by parent company and then it was transferred to subsidiary company, then borrowing cost will be capitalized. Then borrowing cost should be capitalized. Understood? Have you understood this point? Correct. However, the entity carrying out a development should not capitalize any interest in its own financial statement as there is no borrowing. Correct. Agreeing. Me suppose one party in this situation, just try to understand. I'm just giving one more situation. Suppose one loan has been taken by parent company. So cash will be there and this cash may be diverted to this company and equity share capital might come. Means subsidiary company may allot equity shares and this will become investment in what? Subsidiary company. So you can see there is no loan where? There is no loan in the books of subsidiary company, but they may develop qualifying asset. So ultimately, can I see this cash is used by whom? Subsidiary company for development of qualifying asset. So in their book, so there is no borrowing cost. The question of capitalization will not arise. In this book, there is no qualifying asset. The question of capitalization will not arise. But in CFS, can I say in CFS borrowing will also come and qualifying asset will come. So of course, capitalization required or not. In consolidation, capitalization will be required. In consolidation, capitalization will be required. Understood? Interesting point now. If however the entity has an intra-group borrowing, then interest on such borrowing may be capitalized in its own financial statement, but not in consolidated financial statement. Already I have discussed. If there is some intra-group borrowing, so in their own financial statement it may be capitalized, but ultimately in CFS it will be cancelled. The question of capitalization will not arise in consolidated financial statement. Understood this point? Let me take one question which has been given in what? Come to question number this question. Interesting question. In a group with a parent P, there are three subsidiaries with the following business: A. Real estate company, B. Construction company, C. Finance company. P is a parent company. There are three subsidiaries. Parent company has no operating activities in its own and perform management function for its subsidiaries. Correct. His parent company has no operations. Financing activities and cash management in the group are coordinated centrally. Finance company is a vehicle used by the group solely for raising finance. All entities in the group prepare Ind AS financial statement. The following information is relevant for current period 2001-2002. Real estate company borrowing is 10 lakh with an interest of rate 7%. Expenditure on qualifying asset during the period amounting to rupees 15 lakh 40,000. So can I say in this company there is a borrowing and there is a qualifying asset also? So it means borrowing cost will be capitalized. So in this case 10 lakh into 7% means 70,000 will be capitalized. 70,000 will be capitalized. Have you understood this point? All construction work were performed by construction company or amount invoiced to real estate company include a 10% profit margin. Which case this 15 lakh 40,000 is the cost of real estate company. Is the cost of real estate company, but it include profit of which company? It include profit of construction company. So in consolidated financial statement that profit should be eliminated. This 15 lakh 40,000 this work has been done by which company? Construction company. So they have included their profit in that particular cost. So this 15 lakh 40,000 is inclusive of profit of which company? Correct. So in the individual financial statement of 15 lakh 40,000 is cost, but in consolidated financial statement 15 lakh 40,000 will not be cost because it include internal profit also. Correct. That need to be eliminated. Construction company no borrowing. So no borrowing cost capitalization. Correct. Even though finance 10 lakh of expenditure on qualifying as using its own cash resources. They are using its own cash resources. So can you say, but there is no borrowing. The question of capitalization in the individual financial statement will not arise. Got it? This point. Then finance company raised 20 lakh 7% per annum externally and issued a loan to parent company for general corporate purpose. Okay, they have raised loan, but actually there is no qualifying asset. In the books of finance company, the question of borrowing cost capitalization will not arise. Then a parent company use the loan from finance company to acquire a new subsidiary. No qualifying asset apart from those in real estate company and construction company. Parent company did not issue any loan to other entity during the period. What is the amount of borrowing cost eligible for capitalization in the financial statement of each of the entity for the current? Please now we need to understand in the books of parent company. Whenever they ask parent company, we'll think from consolidation point of view. Correct? So can you see in parent books, just try to understand. There will be two qualifying asset. One is qualifying asset 15 lakh 40,000. But this 15 lakh 40,000 include profit of which company? Construction real estate company. Sorry, construction company. So 10%. So can I say this is one? If I am saying 10% profit margin, 10% profit margin. So can I say this is actually what? Sale price for them. Understood now? So what we should do to find out profit? Follow. So can I say we'll do what? It will be 10 by 110. Correct? Because 10% on cost. So it will be 100 plus 10 is equal to sale price 110. So 10 by 110 will do. What is the profit coming? 1 lakh 40,000. The cost price will be 15 lakh 40 minus 1 lakh 40. How much it is coming? So 14 lakh will be qualifying asset 1. There is qualifying asset 2 also. Qualifying asset 2. What is the qualifying asset 2? They can say this 10 lakh is the qualifying asset 2 in the books of construction company. So this become qualifying asset 2. And can I say there will be actually two loan also. One loan is what? This loan of real estate company 10 lakh is the loan. 7% 10 lakh loan. So one is 7% 10 lakh loan and one is what? 7% 20 lakh loan. So 7% 20 lakh loan. Understood? Have you understood this point? Correct. It means first we need to calculate capitalization rate. Can I say capitalization rate will be 7% only? And then we should now find out borrowing cost to be capitalized. So 14 lakh into 7% and 10 lakh into what? 7%. Bolo. Have you understood this point? So once again, we can't do one-to-one relationship. We can't do one-to-one relationship. You can't say that 20 lakh was not used for any qualifying asset, therefore will not capitalize. We can't make one-to-one relationship. Means when we prepare group financial statement, so entire entity become one single entity, and we have taken loan, so that loan will be used for some purpose and will do capitalization. One-to-one relationship is not possible only. Are you able to understand? Means you can easily see that this finance company, this raised 20 lakh loan, but this was diverted to whom? This was given to parent company, and parent company has used this loan to acquire new subsidiary. So ultimately, it is quite possible that some amount has been transferred to whom? Subsidiary company. They might be using it for qualifying asset. So one-to-one relationship is not possible. You have how much loan? This much loan you have. This much qualifying asset. Apply Ind AS 23. Calculate borrowing cost to be capitalized. Understood? Have you understood this point? Correct. Answer is easy. You can do it by your own. Correct. Got it? So I think all the points of Ind AS 23 now covered now. All the point is covered. Yes. All the points I have covered. Only one question is left. Let us come to that question. Normally students do mistake in that question. Therefore I have taken this question also. Normally. You will say me what will be the answer. Let's see whether you are doing mistake or you are doing correct. Don't see the answer. Huh? Alpha Limited on 1st April 2001 borrowed 9% 30 lakh to finance the construction of two qualifying assets. For the specific or general borrowing? This specific borrowing or non-specific borrowing? Alpha Limited has taken a loan on 1st April to finance the construction of two qualifying assets. Is specific or non-specific? अरे बोलो. I'm asking something. Whether it is specific loan or non-specific loan? Huh? Non. अरे नहीं रे. To finance the construction of two qualifying assets. To finance the construction of two qualifying assets means specific only na. Purpose is there na. This loan was taken to for construction of two qualifying assets. English रे. This loan was taken for which purpose? For construction of two qualifying assets. Specific borrowing na. अरे बोलना रे. Specific. Need to read the question carefully. Correct. Construction started on 1st April. The loan facility was availed on 1st April 2001 and was utilized as follow with the remaining fund invested temporary at the 7%. What they are saying? First half for factory building they have used 5 lakh, and for office building they have used 10 lakh. From 1st October 5 lakh and 10 lakh means one thing is clear that out of 30 lakh 10 lakh is used for factory building and 20 lakh is used for office building. Understood? Means what actually happened? This is what. For factory building, they have used 5 lakh from this date and 5 lakh from this date. For office building, 10 lakh from this date and 10 lakh from this date. Means can I say for the first 6 months, this amount was unused and therefore it will be temporarily invested. And they have given in the question that it was temporarily invested at a rate of 7%. Now you only say how much borrowing cost will be capitalized. So first we need to find out actual borrowing cost. Follow. For factory building and office building, how much you will take? What will be the amount of borrowing cost to be capitalized? I am asking only one question to you. On 10 lakh or 5? Means for factory building will calculate on 10 lakh or 5 lakh? 10 lakh. Very good. Why? Because this is specific borrowing. Understood. My emotions you have understood. If it is non-specific, then we would have calculated capitalization rate and capitalization rate would have been applied to average expenditure. Understood this point? Correct. Very good. Means can the first will say 10 lakh into what? 9%. And this will be what? 20 lakh into what? 9%. And then temporary investment is 5 lakh into what? 7%. This is 10 lakh into 10 lakh into what? 7%. This net amount will be capitalized into 6 by 12 into 6 by 12. Now okay, that is only given in the solution. Check out. With this Ind AS 23 over. Any doubt? Have you understood? Sir. Now, can we take one more Ind AS? Which Ind AS we will take? Let us take 2237. So 2237. Can we take 2 first? Let us revise it first. Hmm? Come to 2. Sure. Now, come to Ind AS 2 inventories. Let us do fast. Inventory is nothing to inform you, only just I will highlight a point where you can do mistake. There are some points which require attention. Inventories are assets which are held for sale in the ordinary course of business, correct? Which are held in the process of production, which are held in the form of material supplies to be consumed in the process of production or for rendering of services. Means can I say for trading organization, means for non-manufacturing, only stock in trade will come, only the stock in trade will come. But for manufacturing, finished goods will come, WIP will come, and raw material will come. Correct? So we are here to understand what will be the valuation of all this stock. Means there can be stock in trade, there may be stock of finished goods, there may be stock of WIP, there may be stock of raw material. What is the objective of this index? To value inventory on reporting date, and valuation will be done at lower of cost price or NRB. Cost price or NRB. NRB full form is what? That realizable value. Now we need to understand what is included in cost price, what is not included in cost price, what are included in cost price, what are not included in cost price. So what are the component of cost price? There are three component of cost price. First is known as cost of purchase, second is known as cost of conversion, and third is known as what? Other cost. Third is known as other cost. Understood this point? Follow. Now when I am saying cost of purchase, so can I say in case of trading organization it will be cost of purchase of stock in trade. In case of manufacturing this will be cost of purchase of raw material. Cost of purchase of raw material. So what are included in cost of purchase? It's nothing but invoice price less trade discount or rebate plus non-refundable duties and taxes. plus any directly attributable expenses to bring the asset in present location. Present location means in case of trading organization it will be warehouse. In case of manufacturing it will be factory. Correct. Then cost of conversion. Can I say cost of conversion will come only in case of manufacturing? Means raw material will be converted into finished goods. Some conversion cost will be there. So it will include two type of cost of conversion. One is known as direct labor. Direct labor, you know, from costing subject, all manufacturing wages will come which are directly related to the production unit produced. Correct. Then it will also include production overhead. When I say production overhead, it means indirect material, indirect labor, or indirect cost. Correct. You all are expert in direct material, direct labor, indirect material, indirect labor, sorry, direct cost and indirect cost. We are not discussing on that. But as per India's two production overhead means as per India's two production overhead will be two type variable production overhead and fixed production overhead. We all know that variable production overhead because it vary according to actual production, so it will be allocated to each unit on the basis of actual production. It will be allocated to each unit on the basis of actual production. But fixed overhead will be allocated to each unit on the basis of actual production or normal production, whichever is higher. Normally student do mistake यहाँ पर is they might be knowing but in exam I don't know what happened, they do mistake. It is normal production or actual production, whichever is higher. Normal production or actual production, whichever is higher. So fixed overhead allocation is based on what? Normal production, actual production, whichever is higher. Got it? Have you understood this point? Correct. Now, what are the other costs? Other costs are those expenses to bring the inventory in condition of sale. Means any extra cost incurred to bring the inventory in condition of sale will be also added. For example, can you say transportation cost from factory to warehouse will be also added? Transportation cost from factory to warehouse. This question is not. This question is given in what? This RTP. They have given two transportation costs, and they have asked you which one will be added. They have given transportation cost from factory to warehouse. Warehouse means retail outlet, and transportation cost from retail outlet to customer. And they have asked you to calculate cost price of inventory. I was doing the same question in my class. Most of the students said the both will not be included, even though I have done Indians 2 in the class. Because normally what happens when questions come, we know every point, but when question come, we can't apply it. Means any cost incurred to bring the inventory in condition of sale will be added. So can I say when you are doing transportation from factory to warehouse or retail outlet, because that is required to generate sale or not, so that will be added. But any transportation cost from retail outlet or warehouse to customer place, that is not required. That is to carries outward. So that is carries outward. Are you getting? बचपन में क्या carries inward, carries outward? Understood. That will not be added. Now this question was asked in this RTP, your RTP, this attempt RTP. Means one thing they can ask anything. And sometimes simple question become difficult question because we don't revise. And when we don't revise, we can't answer now. Because we revise 4-5 chapters only. Consolidation, just combination. Then what? Financial instrument. Time mila share based payment. Correct now. So we normally concentrate on 5 chapter, but these are also chapters from which question can be asked. And therefore I have taken this chapter initially only. Because through me you can revise now. If I will start from consolidation, then you will not come in this class. This so we can do by our own. You will think like that. But have you understood what I want to say? Every chapter is important. Every question is important to score marks in exam. Got it? So what I excluded from what? Cost price. What I excluded? Can I say excluded means what? Whatever is debited to PL account will be excluded. Simple. Means administrative expenses, selling and distribution expenses, abnormal loss, storage costs unless it is necessary for production. Means storage costs are of two types. If it is necessary for production activity, it will be included. If it is not necessary, then it will not be included. The storage cost of raw material will be included, but storage cost of finished goods will not be included. Correct? Correct. Then borrowing cost will be included subject to Ind AS 23. We have discussed in detail. Ind AS 23 now. Correct. Can I ask one question? Depreciation, whether it will be included, it will not be included. Depreciation included or it will not be included. Included, not included, everyone need to respond. Huh? If I am asking question, then live student need to also respond. Depreciation will be included or it will not be included? Everyone respond. Well, no one is answering. Depreciation will be included if it is for the plant and machinery which are engaged in production activity. Costing you have done, production overhead is consist of depreciation. But which depreciation? Which are engaged in production activity. Means depreciation of those assets which are not engaged in production activity will not be included. Correct? Depreciation of those assets which are required for production purpose will be included. Similarly, amortization of those intangible assets which is required to produce inventory will be included. For example, suppose I have purchased one patent. I have purchased one patent or know-how for production of inventory. Okay, that is required to produce. So amortization of that intangible asset will be included in the cost price of art. Inventory na. Are bolna re? Yes, it will be included. Are you able to understand what I am saying? Right now I am using camera for production of what? My recorded classes. So I will recover the cost of this camera from student only na. So I will include it in depreciation of this camera in what? Cost price of recorded classes. Are bolna, you think that there is no cost of recording the class? There are many costs which we incurred for recording the classes. Understood? Yes, sir. Correct. Now, this special case is not so much special in CA final level. Joint product and byproduct. In a joint cost, if there is a joint product, the joint cost will be allocated to each product on what basis? So, in the ratio of sales, in sales ratio of each joint product, either at a time of fleet off or on completion of production. I hope no discussion required in this. Understood? Yes, sir. Byproduct also, you know what is byproduct, correct? No discussion required. If the amount is immaterial, can I say byproduct will be always immaterial value only? If it is material, then it is not byproduct, correct? So if the amount is immaterial, so you will say byproduct will be always immaterial. Can I say it must be measured NRV, and that NRV will be deducted from cost price of main product or joint product to find out the cost price of finished goods, correct? So it will be measured NRV. Means for byproduct we don't apply cost price or NRV which is lower, it will measure NRV, and that realizable value will be deducted from cost price of main product. Simple. Yes, sir. Deferred settlement term, same thing whatever we have done. Deferred settlement term means if suppose we purchase any inventory at a credit period which is beyond what? Normal credit period. Then in this case also, can I say the cost price will be equal to present value of all future payments? Or we can say purchase price at normal credit terms. Correct. Same thing. If the inventories are purchased on deferred settlement term, purchase price for normal credit terms will be the cost price which is equal to present value of all future payments. Same thing, interest will be equal to future payment minus present value of future payment, and this interest will be recognized as an expense over the period of credit. But this interest expense will be recognized as an expense over the period of credit. Correct now? Over the period of credit means 2 years. So during 2 years, 3 years. So during 3 years, over the period of credit. But this interest expense will never be capitalized to the cost price of inventory. Means what we have done under Ind AS 16, Ind AS 38. Ind AS 16, Ind AS 38, Ind AS 40, similar point we have done. For property, plant and equipment, intangible asset, investment property, but there it was given interest will be interest will be recognized as an expense over the period of credit unless it is covered under Ind AS 23. Means that interest may be capitalized. But in this case, that point is not given. Means this interest expense will be always recognized as a expense. It will never be covered under Ind AS 23. So inventory na. The inventory can say if you purchase, it is ready for use. The question of capitalism will not arise. If you purchase some inventory on deferred settlement basis, so once you purchase, it is ready for use or not? Ready for sale? Ready for sale, the question of qualifying asset will not arise only. And therefore, it will never be capitalized. Are we able to understand this point? Yes, sir. One example as I have taken for this purpose, A Limited purchased inventory at rupees 60 lakh on 1/4/2016 on 2-year credit, which is more than normal credit period. Rate of interest for similar transaction is 10%. Calculate cost price of inventory. So cost price of inventory will be 60 lakh or present value of 60 lakh. Present value of 60 lakh, which will be 49 lakh 58,500. So on the date of purchase, what journal entry will do? Purchase account debit to payable, purchase account debit to creditor. This amount. Then every year will recognize interest expense. We can see interest expense to creditor, then interest expense to creditor, correct, and then creditor will be paid once it becomes 60 lakh. Got it? Yes, sir. Then cost of agriculture produce harvested from biological assets. This point I will discuss under Ind AS 41. This point I will discuss under Ind AS 41. Ignore it. You will automatically understand this point when I will do Ind AS 41. Chalega? Yes, sir. Then what is the meaning of NRV? NRV. So can I say NRV for finished goods or stock in trade? It is very easy. NRV is equal to what? Estimated selling price minus estimated selling expense. Both will be given in the question. Apply that. Correct. Second, for WIP, what is the meaning of NRV? It means estimated selling price minus estimated selling expense minus estimated cost to complete. But this is selling price. In case of WIP, this is selling price of finished goods or selling price of WIP. This is estimated selling price of what? Finished goods. Means when I am saying calculate NRV of WIP, first calculate NRV of finished goods, which will be produced from that WIP. So first we need to calculate NRV of finished goods, which will be produced from that WIP. So this is estimated selling price of finished goods minus estimated selling expense of finished goods. This become NRV of finished goods. From that what you deduct? Estimated cost to complete the production. And this become NRV of WIP. Now coming to raw material. For raw material what they say? For raw material what they say? If the finished goods in which raw material will be incorporated is expected to be sold to the finished goods in which, means right now we are doing valuation of raw material, but raw material cannot be sold. Raw material will be used for production of finished goods. So what they are saying, first find out the finished goods which will be produced from that raw material are expected to be sold at cost price or more than cost price or less than cost price. If it is expected to sold at cost price or more than cost price, then there is no loss. If there is no loss, question of provision is not required. So in that case, value raw material at cost, because there is no write down required, no write down, no impairment is there. Correct. So value in this case, whenever it is expected to be sold at more than or equal to cost price of finished good, value raw material at cost price of raw material. But if they are expected to be sold at below what? Cost price, means there is expected loss. Expected loss means we need to decrease the value. So what they are saying in this case, the raw material will be valued at lower of cost price and is replacement cost. Understood? Have you understood this point? Yes, sir. Now, how to determine expected sale price? One question has been given in ICAI statement recently regarding this point. Let me take one example. Very good question have been asked. Suppose this is balance sheet date. Now there are 10,000 units. Out of that 10,000 is a closing stock. Out of that 10,000, 2,000 is under a contract. Means we have already done one contract to sell at rupees 100. Quite possible. Means we have done one contract, but control is not transferred. If control is not transferred, we cannot recognize the revenue. This is the inventory, but under a contract. Are you able to understand what I am saying? The on or before balance sheet we have entered into a contract to sell it, but till now it is not sold. Correct. Then remaining is 8,000. Out of 8,000, this is suppose date of approval. You know date of approval means approval of financial statement. Before approval of financial statement, out of this 6,000 was sold at rupees 90. Quite possible. Understood? Correct. And 2,000 remain unsold till now. 2,000 remain unsold till now, and the management is expecting that this will be sold at rupees 70. Have you understood? So what will be the NRV? So my question to you all, on balance sheet date, these 2,000 units were sold at 100. So NRV will be taken at 100, 90 or 70 for 10,000. Means what will be the answer? Means what will be the NRV? Have you understood the question? So NRB will be what? For 2,000 NRB will be 100. For 6,000 NRB will be 90. And for 2,000 NRB will be 70. Have you understood? This question if come, many students may do mistake. Have you understood this point? And this question may come. Have you understood what I am saying? So what they are saying, ki how to determine an expected sale price. First preference will be given binding agreement on reporting date. That only we have taken, but only for those units which are under the contract. Second preference, sale agreed before approval of financial statement. So for 6,000 we have taken that. For balance, last preference for balance, fair estimation given by management. We have taken this only. Have you understood? So for 2,000 we have taken this. For 6,000 we have taken this. For balance 2,000 we have taken this. Understood? Correct. Now cost formula I will not teach. This to bachpan se you know. Cost formula whether you require discussion. FIFO, LIFO, adjusted selling price method, standard cost. This you know from bachpan. Correct now. You can do it by your own. Now, how to compare NRB and cost price? Yes, the comparison of NRB and cost price will be done on item by item basis. Means each item will be compared separately. Until unless group basis require means until unless item by item basis comparison is not basis, then group basis can be done if circumstances require. What they want to say, suppose A, B, C are the similar item. Similar item is, can I say it can be rice category A, rice category B, rice category C. Similar item or not? Correct. Similar, but they are different items. Cost can be 100, this can be 80, this can be 200, this can be 240, this can be 300, this can be 310. So first preference we need to take item by item basis. But if item by item basis is not possible, then group basis is possible if they are similar item. So we can group it in one category if the items are similar, and group basis can be allowed. But we cannot group other. We suppose there are some pulse also, rice pulse also. We are dealing with pulse or wheat, etc. That cannot be club in this. That is the different category only, na. Are you able to understand? So group basis is also allowed if circumstances require. But normally in exam they require they ask item by item basis. Then reversal of write down. This is a new point, and this point number 10 is also new point. Means this was not in AS2. Reversal of write down. Means can I say NRB should be reassessed at the end of each reporting period? NRB should be reassessed at the end of each reporting period. Correct? And any increase in NRB means if NRB increases subsequently, if NRB increases subsequently, correct, then amount of previous write down is reversed. Have you understood this point? Have you understood what I'm saying? Not understood. So let me explain. I need to explain now. Let me explain. Let me suppose you purchase an inventory at rupees 100 at Y0 means at the beginning of the first year and remain unsold for 3 years. You can see Y1 also unsold, Y2 also unsold, Y3 also unsold. Correct. Now at Y1 what is the cost price 100 but NRB become 90. So valuation will be done at 90 and how much you have written down? 10 will be written down. Is this 10 will be charged to PL as an expense? So this will be charged to PL as an expense. Expense will be equal to 10. Correct. Now second year, once again reassessment is required means valuation is required. The cost price remains same, but NRB may increase. Now NRB become 95. What is the value 95? So you can see the previous carrying amount was 90. Now it become 95. So there is a increase now. So this is known as reversal of previous write down. This is not gain. This is not gain. This is reversal of previous write down. So this is known as reversal of previous write down, and this will be recognized as a reduction of expense in year 2. I mean, this is not a gain. This is not a gain. It will not be credited to PL account. It will be considered as reduction of expense in second year. Have you understood this point? Correct. Very important point. So this whatever increase happened due to increase in NRV in subsequent year. In subsequent year, NRB increases from 90 to 95. So there is an increase now. So this increase will be considered as reversal of previous write down, and reversal of previous write down will be considered as reduction in expense. Similarly, third year once again 100 and now NRB become 110. We will take lower only now. Means maximum reversal will be previous write down. It cannot be more than that. Your previous write down was 10. Can you reverse more than 10? No. You cannot reverse more than 10 because you will always take lower one. So you can see 100. So now 1 second reversal how much? 5. This will be also considered as reduction of expense in year 3. Have you understood? Important point, till now no question have been asked. Now recognition of expense. When to recognize? So can I say when inventories are sold, as per matching concept, the carrying amount of inventory sold will be recognized as an expense in the year in which revenue is recognized. That is cost of sales. We do minus closing stock because of this concept only. Means we say now, this is sales and cost of sales is what? Opening stock plus purchase minus closing stock. So this closing stock we minus because this is not an expense of current year. Correct now, and this will be charged to PL. When inventory is written down to NRB, when inventory is written down to NRB, to recognize such write down as an expense in the year in which write down occur. Correct. When reversal of write down means in year 2, year 3 there was reversal of write down. So recognize as a reduction in the amount of inventory recognized as an expense in the period in which reversal occur. Understood? Have you understood? With this Ind AS 2 over, scope you can read by your own. Disclosure you can read by your own. Ind AS 2 over. Correct. Can we take some questions of good quality? Come to Ind AS 2. This question have been asked 2 times in exam CA final. However, this is also asked in CA inter. However, they have first asked this question at CA inter and then 2 times they have asked at CA final. What do you think? Which one is more easy exam? CA inter or CA final? You only say. This question initially asked at CA Inter, then two times same question have been asked in CA Final. What do you think? CA Inter is complicated or CA Final? Bolo, I am asking a general question to you. Inter is easy. Inter is more complicated than what final. And you pass Inter means you'll pakka pass what? CA Final. Only what is required for patience is required. Sometimes we lose patience and we become patient. Correct na? Chalo. So this question, in a manufacturing process Visual Limited, one byproduct BP emerged beside two main product MP1 and MP2 apart from scrap. Details of cost of production process were as under. Raw material 15,000 1 lakh 60 wages itna, fixed overhead itna, variable overhead itna. If question is silent, to always will assume actual production and normal production are same. If the question is silent, we will say actual production and normal production are same. Output MP1 this much, MP2 this much, byproduct this much. Closing stock 800 out of MP1, 200 out of MP2. Entire byproduct has been sold. Average market price of MP1 and MP2 is 80 per unit and 50 per unit respectively. Byproduct is sold at 25 per unit. There is a profit of rupees 5,000 on sale of byproduct after incurring a separate processing charge of rupees 4,000 and packing charge of rupees 6,000. 6,000 are realized from sale of scrap. Calculate value of closing stock. This question is very easy. Only one point, if you misunderstood, this question become difficult. And from my point of view, this question should not be asked at CA Inter level, but they have asked. But what you will do about this? If you can understand this, then this question is easy. Only one point they have given. Because of that point, you may do some mistake. But what you will do about this 5,000 profit? Let's see what you can do. Don't read solution. Huh? Once you read solution, interest gone. Then to you'll say, "Acha, I know everything." Have you understood my question? If you can understand what will be done, what you will do about this, means this question is easy. Otherwise, this is difficult question. Everyone in live batch, you are not responding. Respond. Everyone need to respond. Bolo. You will say, I will say. Chalo, no one is responding. Correct. This point is not at all relevant. Means you need to ignore it. Why? Because byproduct is valued at NRV and cost price is not determinable. NRV means estimated selling price minus estimated selling expense. And profit is given for bakwas. The bakwas only, not required only. This is given to confuse you. Please ignore this point, then this question is very easy. Correct? Understood? Got it? Correct. So what will be the NRB of byproduct? Now you can do sale price given 25. What is the total unit produced? 1,600. 40,000 minus processing charges minus packing charges. This become NRV. Correct. Then we'll find out joint cost. So raw material is given 1 lakh 60, wages is given 82, overhead is given 58, variable overhead given 40. From this we'll deduct NRB of byproduct, that is 30,000. From this we need to also deduct NRB of scrap. So the treatment of byproduct and scrap are same. So NRB of scrap, how much realizable value given for scrap? 6,000. So 36,000 will deduct from 3 lakh 40, it will become 3 lakh 4,000. Now this 3 lakh 4,000 will be allocated to MP1 and MP2 in the ratio of the sales value at split of time. Correct. You can see they have given MP1 52. How much unit produced? 6250 5000. What is the sale price per unit? So then this becomes sales value of MP1 and MP2 at a split of point. So this joint cost will be allocated in this ratio. And you can see 2 is to 1 and joint cost has been allocated in the 2 is to 1 ratio. And can I say if you divide by total output, so you'll get cost price per unit, you'll get cost price per unit. Once you got cost price per unit, you know what is the closing stock multiplied by cost price per unit, you can find the value of closing stock. Understood? Got it? So because of one point, if you do not understand, can I say you can be confused. Some either you will waste your time or you will leave this question on. Have you understood this point? So normally in exam they play with your mind. They want to play with your mind. They want to disturb you by giving bakwas point, or they will unnecessarily make the question lengthy. Let's see one more question. On 31st March 2001, the inventory of ABC Limited spare part, which it had been supplying to a number of different customers for some years. The cost of the spare part is 10 million, and based on retail price at 31st March 2001, the expected selling price of spare part is 12 million. On 15 March 2001, due to market fluctuation, expected selling price of spare part in the stock reduced to 8 million. The estimated selling price required to make the sales would be 0.5 million. Financial statement were authorized by the board of directors on 20th April. Oh, ho, ho. It is before approval of financial statement due to market fluctuation, the expected selling price decreases. My question to you all, to calculate NRB, will take 12 or will take 8 million? बताओ. Understood what I am saying? Have you understood this question? Will take 12 by 8. I mean, right now we have done to find out sale price. Just see the sale done before approval of financial statement. So before approval of financial statement is given due to market fluctuation. Now expected selling price is what, 8 million. So we'll not take 12, we'll take 8. 8, and what is the expected selling expense? 0.5. It becomes 7.5. Cost price is 10. NRB is 7.5. So how much write down? 2.5 is write down. Understood? Have you understood this point? Correct. Then they have given next year, means as on 31st March 2002, directors noted as such inventory still unsold and lying in the warehouse of the company. Directors believe that inventory is in sellable condition and active marketing would result in immediate sale. Since the market conditions have improved, expected selling price is now 11 million and selling expense is 0.5. So now it becomes 10.5. Cost is 10. So it become value become 10. Now it become reversal of write down. Reversal write down will be what? Reduction of expense. The same, very easy question, but how you are writing that will give you marks. Have you understood this point? Got it? Can I go to other question? This was asked in exam. XYZ Limited has a plant with a normal capacity to produce 10 lakh units of a product per annum. An expected fixed overhead is 3 lakh. Fixed overhead therefore based on normal capacity is 3 per unit. What is the normal capacity? 10 lakh. What is the fixed overhead? 30 lakh. Determine fixed overhead as per Ind AS 2 if actual production is 7 lakh 50,000. So normal production is what? 10 lakh. Actual production is 7 lakh 50. Will take 10 lakh or 7 lakh 50? 10 lakh. So can I say it will be 30 divided by 10 is rupees 3 per unit? Correct? Means how much you will allocate? 7 lakh 50,000 into 3 you will allocate. Means out of 30 lakh how much will be included in the cost price of inventory? Not able to understand what I want to say. Just try to understand. The first case is what? Actual production is how much? 7 lakh 50,000. Normal production is what? 10 lakh. So we'll allocate on the basis of whichever is higher. Higher is what? 10 lakh. So what is my fixed overhead per unit? So cost price per unit will be what? 30 lakh divided by 10 lakh is 3 rupees per unit. So 3 rupees per unit will be included in the cost price of inventory. How much produce? 7 lakh 50,000 produce into 3. Into 3 means how much? How much? It is 22 lakh 50,000 means out of 30 lakh this much included in the cost price of inventory. Can I say balance will be abnormal loss and abnormal loss will be charged to PL? Means if you are not able to produce 2,50,000, that is abnormal loss. Abnormal loss will be charged to PL account or not? Correct? Means how much will be abnormal loss? 7 lakh 50,000 will be abnormal loss charged to PL. Correct. The second case, what is the actual production? 15 lakh. What is the normal production? So बताओ, you will do allocation based on what? 15 lakh. 15 lakh. Now it will be 30 lakh divided by 15 lakh means 2 rupees per unit. Now how much will be allocated? 15 lakh into 2, which was 30 lakh will be allocated. Means there is no abnormal loss. Understood? Very simple question. But when this question was asked, many students have not written the answer properly because they don't revise. Will not revise, तो नहीं चलता. In exam, mind will not work. If you revise, you can do it. There are some points which require constant revision. Understood? Yes, sir. This also you understood. Done. In days 2 also completed from my point. Can we take one more in days? Yes, we are here to take one more in days only. So I should not ask. I should take. Correct now? Which in days you want? Let us take in days 20. Okay, now today I am just taking small Indias so that you become acquainted also for 8-hour class. Suppose today only I will start with consolidation, you will also die, I will also die. So I am just giving some time ki 8-hour class you should understand also na, because what happened morning okay, but once 4 hour done, then after 4 hours the mind become what? Sleepy. I will not feel sleepy because I am speaking, but you are listening now. So sometime when we listen very Srila words means when you listen some song, so what will happen? We feel sleepy na. So now my words will be just like what? And you will feel sleepy. Isliye what I am saying, you just respond with me. When I'm asking, just give response. Correct? Okay? Because it is actually not easy to constant studying for 8 hours, that too only listening. Okay? Now let us come to what? In days 20, chapter number 12 in my book. Chapter number. In days 20 will not take much time, but there are some good questions which I would like to take. First, let us cover it. In days 20, it will not take more than 10 minutes. Why? Because it is same to same as AS 12. More or less all points are same. Now, what is the meaning? The Ind AS 20, the name is only different. What is the Ind AS 20 if you see? It is accounting for government grant and disclosure of government assistance. So what Ind AS 20 says that all government assistance are not government grant. So those government assistance which are not government grant, for that only disclosures are required. But for government grant, accounting as well as disclosures are required. So there are some government assistance which will not meet the definition of government grant. So first we need to understand what is the meaning of government assistance. So government assistance are an action of government, are the act of government, are act of government. Correct. Designed to provide economic benefit, designed to provide economic benefit to a specific entity or group of entity. Means any act by government designed to provide economic benefit either to one entity or group of entity, but not to public at large. Means any act which provide economic benefit, any act of government which provide economic benefit to public at large, that is not government assistance. For example, metro development is going on, that is also by government. So that is also one type of benefit given to the public at large. So that is not government assistance. Correct? So what they are saying, government assistance to public at large in the years 20 is not applicable. If it is to a specific entity or group of entity, then Ind AS 20 is applicable. And if that government assistance meet the definition of government grant, if that government assistance meet the definition of government grant, which I will do right now, then Ind AS 20 is applicable for both accounting and disclosure. But if it is not meeting the definition of government grant, then only for disclosure purpose. So can you see, now we need to understand what is the meaning of government grant. So what they say, government grant are assistance, government grant are government assistance in the form of transfer of resource, in the form of transfer of resource. When I say transfer of resource, means can I say either in the form of cash or asset. The transfer of resource means something has been transferred, either cash has been transferred or asset has been transferred. Understood? Yes, sir. To an entity, correct? For past or future compliance, either due to some past activity or future activity. Correct? For past or future compliance means either it can be with condition or without condition. Correct now? With certain means there may be certain condition, with certain condition relating to operating activity. Means there may be certain condition relating to what? Operating activity. Certain condition relating to operating activities. But conditions relating to operating activities. Correct. So what is the meaning of government grant? Government grant are government assistance in the form of transfer resource to an entity for past or future compliance with certain conditions relating to operating activities. Now this is in the form of transfer resource. Transfer resource. Suppose I am government, you are what entity? Right now I am teaching you. I am providing services. Any resource transferred. And suppose I am giving this education free of cost. I am government. Na? I am giving some knowledge free of cost. Na? So whether it will meet the definition of government grant. There is no transfer of resource. Means can I say whatever free services I have given, it cannot be expressed in terms of money. When I am saying transfer resource, means it must be capable of expression in terms of money. Means if it cannot be expressed in terms of money, it means not a government grant. So can I say any free marketing advice, any free technical advice from government will not meet the definition of government grant, but it will be government assistance. Understood this point? Have you understood this point? Yes, sir. I hope thoda you understood. Correct. Means what they say, government grant does not include government assistance to which monetary value cannot be placed. To which monetary value cannot be placed. Means it cannot be expressed in terms of money value. Same example, free technical marketing advice given by the government. Means any transfer of service without any cost, which cannot be expressed in terms of money, will not be a government grant, but it will be government assistance. Similarly, government grant does not include any normal trading transaction with the government. Suppose you purchase something from the government at a trade discount. So this normal transaction, the trade discount is not a government grant. Can I say anyone doing that transaction with the government, that discount was available? So this is not a government grant. So any normal trading transaction with the government will not be considered as government grant. Correct. Correct. Understood. Now, suppose government participated in the equity of any entity, means government purchased equity shares of the entity. Okay, it is not related to operating activities. Means government participation in the ownership of the entity is not covered in this chapter. That is not government grant. So that is not related to operating activity. That is financing activity. That the government is a equity shareholders, na? That is not government grant. Okay. This point number B and point number C you will automatically understand when we'll do Ind AS 41. Correct. I will discuss once again this point and the Ind AS 41 you can defer. Any free technical advice from the government, whether Ind AS 20 is applicable? Yes. Ind AS 20 is applicable, but only for disclosure purpose. This is government assistance, correct? Government assistance to public at large? No, Ind AS 20 is not applicable. Similarly, any tax holiday, any investment tax credit, any additional depreciation means any tax benefit given. A tax benefit may also meet definition of government grant, but it is specifically excluded from this chapter because covered under Ind AS 12. Anything related to tax, Ind AS 12 will come into play. And any tax benefit, any tax exemption, anything, any credit related to tax will not be covered under Ind AS 20. It will be covered under Ind AS 12. And now, recognition of government grant. This is understood. We need to recognize government grant only when there is a reasonable assurance that the entity is able to comply the condition attached to that, and there is a certainty of collection which grant will be received. Correct. Means, can I say whenever these two conditions will be satisfied, then government grant will be recognized even though not received, is on accrual basis. Are you getting what I am saying? So suppose these two conditions are satisfied, but till now you have not received the grant, will you recognize government grant? Yes. So what journal entry will do? Grant receivable account debit to what? Grant. Understood? Grant receivable account debit to grant means, can a government grant can be recognized on accrual basis if these two conditions are satisfied. What are the two conditions? That there is a reasonable assurance. Reasonable assurance means chances are more than 50%. So when I say reasonable assurance means chances are more than 50%. That entity will comply with the condition attaching to them and grant will be received. Means there is a certainty of collection. Means if any one condition is not satisfied, we need to wait for the actual receipt. We need to wait for the actual receipt of government grant. And once it is received, then we can recognize government grant. But even though it is received, can I say first condition need to be satisfied? They have given only received of government grant is not a conclusive evidence that condition attaching to them will be fulfilled. So if you receive the grant but you are not sure about the condition, then you can't recognize the grant, then it will be considered a liability. So if suppose received, then we'll pass journal entry cash account debit to grant. Correct? Understood? So in this chapter, what we will be learning, this grant will be transferred to income when is how to amortize this grant to PL. How to amortize either immediately or on a systematic basis over the period. Understood what I am saying? This we need to understand. Journal entry understood. Now we need to understand when this grant will be transferred to PL, either immediately or on systematic basis over the period. Now in AS 12 we used to say that some grant will be transferred to capital reserve also. Remember, sometime we used to transfer grant to capital reserve in AS 12, Pakwas point. Now in AS 20 says that actually there are two ways. One is capital approach, one is income approach. This capital approach is not permissible under Ind AS 20. Means grant will never be transferred to capital reserve. Grant will never be transferred to capital reserve. Only it will be transferred to PL. Income approach means grant will be credited to PL over one or more year. So we need to now understand whether it will be transferred to PL immediately or over more than 1 year. So it is very simple. What Ind AS 20 says that if the basis of allocation do not exist, if you cannot allocate over the period, then transfer to PL immediately. But if basis of allocation exists, then recognize in PL on systematic basis over the period in which the entity recognize the related expenses which they are intended to compensate. Understood? Now we need to understand on what basis it will be allocated. If the basis exists, so what can be the basis of allocation? That will depend upon the nature of grant. That will depend upon the nature of grant. So one by one we'll take. First, grant related to depreciable asset. Grant related to depreciable asset. Depreciable asset means what? Property, plant and equipment, excluding land. Intangible asset, excluding those intangible assets which has indefinite life. No one will give a grant for investment property. Practically, for investment property, grant is not received either for property, plant, equipment or intangible asset. Whenever grant related to depreciable asset, so there are two alternative accounting treatment. First, either the grant can be treated as deferred income. Grant can be treated as deferred income. When I am saying deferred income, means it will be amortized to PL over 1 year. Sorry, more than 1 year. So first, grant can be treated as deferred income, and this deferred income is recognized in PL over the useful life of depreciable asset in the ratio of depreciation. In the ratio of depreciation, it means the basis of allocation is what? The ratio of depreciation. Ratio of depreciation. Understood what I am saying? We are here to understand the basis of allocation. Are you able to understand what I am saying? Bolo. Are you able to understand what I am saying? We are here to understand basis of allocation. So first is what? Grant will be treated as deferred income. The deferred income will be amortized to PL on a systematic basis, that is over the useful life in the ratio of depreciation. Second alternative is what? Grant can be deducted from cost price of asset. Can I say if grant is deducted from cost price of asset, the question of transferring it to PL will not arise. Already deducted from what? Cost price. Means now in PL reduced depreciation will come. Reduced depreciation will come. Now in PL reduced depreciation will come ना. अरे बोलना रे. Suppose the cost price of the asset is 100 and grant is 80. So in first case this 80 will be deferred income and will charge depreciation on 100, and this 80 will be amortized to PL in the ratio of depreciation. But in second method, can I see this grant amount will be deducted from cost price and it become 20, and now we'll charge depreciation on 20. So automatically adjustment done na. Correct. But in this case, what they are saying, sometime grant, in this case, second situation, the grant amount is equal to or more than the cost price of asset. Quite possible. Grant amount is equal to or more than the cost price of asset. So can you see then the cost price of asset will become nil. If it become nil for disclosure purpose, it will be disclosed at what? Nominal value. Remember this point. If the grant is equal to or more than the cost price of asset will be disclosed at nominal value. Nominal value means significant value, 1 rupees, 10 rupees, 100 rupees, only for disclosure purpose, because we are using that asset. If we are using the asset, so some amount should come in the balance sheet. Understood this point? Understood. But which one is better method? What do you think? The first method, second method? First method is better method. If question is silent, I will always suggest you to apply first method. But then you can also apply second method also. They will not deduct mark. But I will say if question is silent, give both method. Give both alternative na. Now grant related to non-depreciable asset. Non-depreciable asset means can I say land? The best example is land. Bolo yes or no? In this case, what they said, whenever grant has been received for non-depreciable asset, the government grant required fulfillment of certain obligation. Fulfillment of certain obligation. Is there is some conditions? Of fulfillment of certain obligation means there is some condition. Correct. So what they want to say, if there is no obligation exist, no condition is there. No condition is there. There is no basis of allocation is there. No basis of allocation means it will be created to PL immediately. But if basis of obligation exists, then basis of allocation exists. For example, a grant has been received for agriculture land, 100 lakh to purchase agriculture land, with the condition that you will develop irrigation facility during 5 years. There is one condition to develop what? Irrigation facility. So can I say there is some cost of meeting that obligation? You need to estimate the cost of that meeting that obligation in 5 years, and on that basis you need to what, transfer this 100 lakh to PL. Have you understood what I am saying? So what they are saying? Treated as deferred income and recognized in PL over the period to bear the cost of meeting that obligation. Don't worry, they will give you the cost of meeting that obligation in 5 years. In that cost, you need to allocate. Have you understood this point? Chalega. Then coming to non-monetary grant. Non-monetary grant means grant received in kind. Means instead of receiving cash, you receive property, plant, and equipment or intangible asset. In this case, there are two options. Either recognize asset and grant at fair value, or recognize asset at nominal value or concessional rate. Okay? Let me take one example for this. Everyone. Let me take one example. Suppose, suppose you receive land whose fair value is equal to what, 100 lakh. Correct? Correct. Either you receive free of cost or you receive at what, concessional rate. Correct? So in this case, there are two options. Either you recognize at fair value. So if you recognize at fair value, then what can I enter? Land at fair value to grant 100 lakh. बोलना रे. Or you can disclose at nominal value because free of cost. You will say land rupees 100, 10 rupees. To what? To what? Any equity is, two is nothing, we don't know. But again, this journal entry will not affect your balance sheet. That is 10 rupees now. You are only disclosing at what? Nominal value. But in this case, you just see you are not recognizing what, government grant. This is 10 rupees, a very insignificant value. But you are not recognizing government grant. Receive government grant, but you are not recognizing government grant. Whether correct? Which one is better method? Okay, this is better method. But for that you want fair value of land. Fair value of land means Ind AS 113. You need to do measurement. So some relaxation has been given. If you want to ignore measurement, you can disclose at what nominal value. Suppose concessional rate, you receive the land at rupees what, 100 lakh, na? 10 lakh concessional value. So first option is what, land will be recognized at 100 lakh. How much you paid? 10 lakh. And how much will be grant? 90 lakh. So in this case, grant will be 90 lakh. But second option is what, you recognize land at what? Concessional value 10 lakh and bank is equal to 10 lakh. You can see the second method we are not recognizing grant. Means it is as simple as you deducted the amount of grant from the cost price of land with this method only. I will say this is similar to what? Similar to this method. Similar to this method, which is not appropriate, I will say. There are two options available. Have you understood this? And can I say once you have recognized grant, so you are recognizing grant only at fair value method. So this grant will be recognized on a systematic basis over the period. So because it is non-depreciable asset, so if obligation exists, that point will be applicable. If obligation exists, so it will be allocated over the period in the ratio of cost of meeting that obligation. If no obligation exists, transfer to PL immediately. And suppose this is not land, this is plant and machinery, then it will be what? In the ratio of depreciation. Are you able to understand what I am saying? Got it? Have you understood this point? Or bol? So what is a government grant is treated as deferred income and is recognized in PL on systematic basis in first case when it is recognized at fair value. When these are recognized at nominal value of concessional, and then we are actually not recognizing government grant. Got it? Then grant related to income. Any grant related to income means what? Grant related to income means what? Grant has been received for revenue expenditure. We suppose you receive grant for purchase of raw material. It is related to income, na? Related to income. So whenever you receive grant for revenue expenditure, that is known as grant related to income. This point, have you understood what I am saying? So in this case, simple, treated as deferred income, recognize in PL on systematic basis over the period necessary to match with the related expense which they are intended to compensate. Means in the ratio of expense over the period. So recognize in PL on systematic basis over the period necessary to match with the related expense which they are intended to compensate. So guys, of course in exam they will give related expense over the year, over the period. You should recognize grant in that ratio only. We'll take one question, don't worry. But have you understood this point? Then next point, point number E. Point number E is known as forgivable loan, means waiver of loan. Now we know that government may waive some loan. Whenever any loan is waived, this will be also considered as what? Grant. And this will be transferred to PL immediately. Understood? So if any loan amount is waived, cancelled, so that will be also considered as government grant, and that government grant will be transferred to PL immediately. Right? So when the loan is waived, what journal entry? Loan account debit to grant, and this grant will be transferred to PL immediately. Understood? Second point, which is very important from examination point of view, RTP they have given question based on this, also already asked in exam also. Correct? Concessional loan. Can I say whenever we receive concessional loan from government, so it also includes some portion of grant. So whenever we receive concessional loan, what India 20 says that first major loan at fair value as per the requirement of India 109. So what they are saying, any government grant, whatever amount you have received, suppose you received 20 lakh, correct? Now first find out fair value of loan. What is the meaning of fair value loan as per India 109? Fair value of loan means what? Present value of contractual cash outflow discounted at market rate of interest. So it means we need to find out fair value of loan as per India 109. This is nothing but what? Present value of contractual cash outflow discounted at which rate of interest? Market rate of interest. CCO means what? Contractual cash outflow. Correct. Okay, let me say, assume this is coming 15 lakh. So 5 lakh become what? Grant. 5 lakh become grant. Understood? Means what journal entry will do? Bank account we receive 20 lakh. To loan payable how much? 15 lakh. And grant will be how much? 5 lakh. And can this grant will be amortized to PL on systematic basis depending upon for what purpose this loan has been received. If the loan has been received for the purpose of for the purchase of property, plant and equipment, so this grant can be deferred income. If this is for what? Non-depreciable asset, then we'll apply that rule. If it is for revenue expenditure, we'll apply that rule. Understood? Have you understood this point? We'll take one question based on this, but have you understood? Means what is the rule? Rule is what? If the basis of allocation do not exist, it is unconditional grant without any condition. It will be transferred to PL immediately. If there is some condition, so basis of allocation exists. Basis of allocation exists, so it will be amortized over the period necessary to match the related expense which they are intended to compensate. Correct. But what India 20 says that in two situations, always it will be transferred to PL immediately. In two cases. These are the two cases. In these two cases, the grant should be recognized in PL of the period in which it is received or receivable. Means immediately. Means it will not be deferred. What are the two situations? Government grant received or receivable to compensate past losses. So if any grant is received to compensate past losses, it will be charged to PL immediately. Correct also. Second, government grant received or received as a reward for the purpose of giving immediate financial support without any related cost. Means, for example, any sick company, internal reconstruction you have done, any sick company, government may help, they may give financial support without any related cost. There is no condition. So to save the company from liquidation, some support may be given. So this type of grant will be credited to PL immediately. Understood? Correct? Yes. Now, whatever we have done, we have understood accounting. But from examination point of view, this repayment of government grant is important. See, what will be journal entry in case of refund? In case of refund, is a government grant become refundable if condition attaching to them is not satisfied? So it may become refundable. But Ind AS 20 says that refund of government grant will be always considered as changes in accounting estimate. So refund of government grant will be considered as changes in accounting estimate. Changes in accounting estimate is prospective or retrospective? Prospective. So can I say accounting treatment depends upon what accounting you have done initially. What accounting you have done initially. If government grant was transferred to PL immediately, it will reverse from PL only. So what journal entry will do? PL account debit to government grant payable and then government grant payable to bank. Bank or cash. Understood? If government grant is deducted from cost price of asset, quite possible. Second alternative. So if it was deducted from cost price, now at the time of refund, what journal entry will increase the cost price? Asset account debit to government grant payable and then government grant payable to bank. I hope this also you have understood. Correct. If government grant is treated as deferred income, now just try to understand. I'll first explain. Suppose you receive rupees 100 grant, out of which you have used 80, 20 is unused. We just try to understand whatever unused cannot be deferred income now. Means you receive 100 to purchase plant and machinery, but you purchase plant and machinery of rupees 80. What will be your deferred income? 80 or 100? Your deferred income will be 80 or 100. It equally 20 you have not used, so it will be a liability only. It will be refundable because you have received a grant for purchase of plant and machinery, and if you are not using some portion of grant, it is refundable or not? So can I say it will remain in grant account only, and this will be considered as deferred grant? Bolo yes or no? Out of this deferred grant, let us assume 60 has been amortized to PL and 40 remain in deferred government grant only. Sorry, 20 will remain in what? Deferred government grant only. It means, can I say, out of 100, what is the unutilized grant? How much is amortized deferred government grant? What is unamortized deferred government grant? Now, if there is a refund, first you reverse which account? You only say. First you reverse which one? First you reverse unutilized grant. Then you reverse what? Unamortized government grant, deferred government grant. And then you reverse what? Amortized government grant. This what will be journal entry. Journal entry now I hope you understood. You can see I have written first GG account, government grant account, unutilized, then deferred government grant unamortized, and then PL account amortized to G. In this order we reverse. It's quite possible now you have received 100 but refund is only 80. Means when the refund is only 80, the first what you will do? 20 account debit, then 20 account debit, and balance will come where? 40 will be PL. 40 will be PL na. So the last reversal will be what? PL. Have you understood this point? Not able to understand what I am saying. Just have you understood this? First, we receive 100. How much is unutilized? That will remain in grant only. 80 will be deferred grant. Out of 80, how much transfer to PL? And how much is unamortized? Now, refund is only 80. If refund is 100, then the all account will be. but refund is only 80. So what will be journal entry? First you reverse what? Grant account debit, how much? Then then you reverse what? Deferred government grant account debit, how much? But you refund how much? 80. This balance will be debited to what? PL account. Now you will understand the benefit of this discussion. And the benefit of this discussion, why we are discussing this? This is the order of reversing. You can't reverse PL first. Got it? Correct. But till now this type of question has not been asked. Got it? Done. Completed. Any doubt? No doubt. Correct. But one there is one appendix A to India's 20. Appendix A to India's 20. Do you know about one AS12 grant related to promoter contribution? Grant related to promoter contribution, remember? India's 20 is silent regarding grant related to promoter contribution. Therefore, one doubt came, any grant related to promoter contribution, whether it will meet definition of grant. Because when I say as a promoter contribution, so whether it is related to operating activity. So why government is giving grant? Can I say they want to promote certain industry, or they want to promote certain industry in backward area, and they have given some grant. So what Appendix A to India's 20 says that even though specifically it does not relate to operating activities, but then also it is for operations only, and therefore it will meet the definition of government grant, and therefore such government grant will be transferred to PL. It will never be credited to capital reserve. Means as per AS12 we used to transfer to capital reserve, but Ind AS 20 says it will never be transferred to capital reserve because it will meet the definition of government grant, even though there is no specific point relation to operating activities, but then also it will meet the definition of government grant, and therefore it will be transferred to PL on systematic basis. Understood? So this explanation was given in Appendix A to India's 20. You can read it. Understood this much? Done? Have you understood this point? Follow. Can we take questions? There are some good questions. Let me take. Come to question India's 20. Any doubt? Let me see. Any doubt came or not? Doubt is not coming now. One inventory doubt came. Value should be taken on 31st March. Yes, value should be taken on 31st March only. I will take one question for interest free loan. Don't worry. I'll take one question for interest free loan. Any more doubt? Acha, I will come to your doubt of inventory after completion of question of India's 20. Chalega? I understood your doubt. Okay. Let me take some questions. Question 22. This question 22 is of my question bank. So I have not changed the question number because if you have done classes from me, so it will be find out that question. However, I'll give you the PDF of question bank also, entire question bank with my class note, everything I will give you. Correct? Okay. So if you want to do other questions of question bank, that also you can do it from there. I'll give you the entire PDF of my question bank. There are 4 volumes of question. In my question bank, the 1 volume. So I say there are how many volumes? 4 volumes. So I'll give you the entire PDF of question bank. This is inclusive of what? All questions of ICAI study material, RTP, MTP, exam questions, some other sources also there. So all types of questions are given. So I'll give you the PDF of this also. Chalega? Be happy? Be happy? Be keep smiling. Correct? But you need to do it also. Correct? Na? So you can do it, but I will suggest you do follow whatever you used to follow before. Correct? That is my suggestion, because once you change it, it will be difficult only. Yeah. Entity A is awarded a government grant of 60,000 receivable over 3 years, 40,000 in year 1, 10,000 in year 2, and 10,000 in year 3. Contingent on creating 10 new jobs and maintaining them for 3 years. The employees are recruited at a total cost of 30,000. The wage bill for the first year is 1 lakh, rising by 10,000 in each of the subsequent year. Calculate a grant income and deferred income to be accounted in the year 1 to 3. Have you understood the question? What they want to say? Suppose this is year 1, year 2, year 3. What is the total expense? Means this is related to what? Income. This grant is related to income. So we need to find out the expense of first year. What is the expense of first year? There was some recruitment cost of 30,000 and the wage bill of 1 lakh, means expense is what? 1 lakh, 30,000 first year. Then second year there will be no recruitment cost, but wage will increase by what? 10,000. This will be 1 lakh 10,000, and third year it will be 1 lakh. This point have you understood? So can you see this is the expense? So government grant will be amortized in the ratio of our related expense which they are intended to compensate. Now what is the total government grant? Total government grant 60,000. Correct now. This become how much? 3 lakh. So can you allocate this 60,000 in this ratio? Yes, we can allocate. Can you give me the amount? Can you give me the amount? It will be how much? 18,000? Not 18,000. Acha. 21,000? 21,667. Then 18,000? Triple three. Then 20,000. Understood? I think in this no doubt. But doubt will come in journal entry. Batao. In year 1, how much grant you received? Is only 40,000 now. 40,000. Bole yes or no? Understood? And out of that grant, how much you have transferred to PL? 21,667. Means how much unamortized? Means what is unamortized? Unamortized government grant. Can I say will be 40,000 minus what? 21,667 is equal to how much? 18,333. This you understood. Second year again how much you receive? 10,000. So now it become 18 plus 10 means 28,333. How much you amortize? So how much left? 10,000. Third year how much you again you receive? 10,000. It become 20,000. And how much you transfer to PL? 20,000. It become nil. Understood? So can you see this unamortized government grant will be shown in the liability side of balance sheet. So this deferred income is nothing but pre-received income. Is one type of pre-received income. So it will be shown in the liability side of balance sheet either as non-current or current. Correct? Are you able to understand what I am saying? Are you बोलना रे? Correct. So you can see out of this 18,333, entire will be amortized in the next year. So this will be current only, and this 10,000 will be also current. You need to find out how much will be amortized within 12 months. If entire amount is going to be amortized within 12 months, it will be current. If out of that some amount it will be amortized after 12 months, that becomes non-current portion. So you need to find out how much current portion, how much non-current. Have you understood this point? Any doubt? This is going to come in exam. Good question. If someone is asking from India's 20, I will say this is one good question which can be asked. Other question can be asked, but that you can do by your own. Therefore, I am not taking. Have you understood this point? Any doubt? Doubt. Come to one more question. A Limited received the government loan of 1 crore at 5% payable after 5 years in a bulleted payment. Bulleted payment means what? Entire amount will be paid after 5 years. The prevailing market rate of interest is 12%. Interest is payable regularly at the end of each year. Calculate the amount of government grant and pass necessary journal entry. Also examine how the government grant will be recognized. Also state how the grant will be recognized in the statement of PL, assuming that loan is to finance a depreciable asset. Understood? So can I say first in this batao, everyone. First we'll calculate what? First, can you give me what is the amount of proceeds of loan? 1 crore. Now we need to find out fair value of loan. From this we'll do minus what? Fair value of loan. Fair value of loan means what? To find out the present value of contractual cash outflow. So can you see it means we need to find out year end 1, year end 2, year 3, year end 4, year end 5. What is the contractual cash outflow? So contractual rate of interest is 5%. 5% of 1 crore how much? 5% of 1 crore, 5 lakh. So first year interest 5 lakh, 5 lakh, 5 lakh, 5 lakh, and last 5 lakh plus 1 crore. This will be paid. Can we find out a present value at what rate? 12% market rate of interest. So can you give me this? How much it is coming? Present value at 12%. Now give me the amount, present value. Or can I take from the solution? Can you give me the present value at 12%? How much? Is 74 lakh 76,656 as per the solution. This is 1 crore, huh? 1 crore you have not taken. Wow. How much it is coming? Live batch, you can also give me the amount. I'm waiting for your answer. Please, everyone, don't be in sleepy mode. Hey, so much time. I will do. Huh? I will do. Batao. What is the annuity factor? At the rate of 12%, 1.12 divide equal to, it is coming 0.8928 equal to 0.7971 equal to 0.7117 equal to 0.6355 equal to 0.5674. Can you give me the total of this? 3.6047 into 5 lakh, how much it is coming? 18 lakh. 18 lakh 2000 350. Then 1 crore multiplied by what? 0.5674, how much? 56 lakh 74,000. Total of these two how much? 74 lakh 76,350. What was the answer? Same answer, 74, 76. Now Jadu, when I am doing Jadu is coming or not? It means require also concentration na. अरे बोलना रे. Means when I am doing the answer is coming, why? I am also human being na. So 74 lakh 76,350. So what is the balance amount? 1 crore minus this how much? 1 crore minus this 25 lakh. So this will be the amount of government grant. This will be the amount of loan. So what journal entry will do? Bank account debit 1 crore. To loan account how much? 74, 76. And to deferred income what? 25 lakh 23,000. And this loan amount, on this will calculate interest expense at a rate of 12% by applying Ind AS 109. This is nothing but Ind AS 109 amortized cost table, if you remember. If you know Ind AS 109, remember Ind AS 109 amortized cost table will calculate interest at a rate of 12%. Then contractual payment, this will be closing balance. And this 25 lakh 23,000 will be amortized during the useful life of the asset in the ratio of the appreciation. That is the answer. Understood. This is super important, already given in RTP this time. Similar question is given in RTP. Then balance question I assume we can do by row. Have you understood? Ind AS 20 completed from my point of view. This live student is giving answer, you are not giving answer. Why? Chalo. I'm happy that someone is giving correct answer. Understood. Ind AS 20 also completed. Now what is left? Check. As per today's program, what is left? So as per today we have completed 16, 38, 23, 40, 22. Only what is left? 37. Can we take 37 also? Yes sir, why not? Let's come to 37. Thirty-seven is what? 37, India's 37 is what? Very simple. Let us see. Provision, contingent liability and contingent asset. Provision, contingent liability and contingent asset. If time permit, then we'll take one more Ind AS after this. I think this is very basic Ind AS. Let us discuss whatever is required. I'll not go into detailed discussion. Correct? Chal. Now, Ind AS 37 provision, contingent liability, contingent asset. What is the meaning of provisions? Provision means a liability of uncertain amount and or uncertain timing. Either the amount is not known or timing is not known. Correct? Understood? So it means provisions. Provision means what? Liability. Provision means liability of uncertain amount or timing. Now what is the meaning of liability? Liability means what? Present obligation arising from past event. Present obligation arising from past event, which will be settled through outflow of resource, and that outflow must be also probable. So any liability is a present obligation for which settlement will be done through outflow of resource. Settlement will be done in future through outflow of resource. Means, can I say in this way, all provisions are liability, but all liabilities are not provision? Means there are two type of liability. Liability with certain amount and certain timing, and liability with uncertain amount and uncertain timing. So whenever liability with uncertain amount or uncertain timing, that become what? Provision. But provisions are also what? Liability. Provisions are also liability. When I say present obligation, what is the meaning of present obligation? Present obligation means the obligation is probable on reporting date. When I say obligation is probable on reporting date, it means what? Means the chances is more than 50%. Chances is more than 50% means what? Chances of occurrence is more than 50% than chances of non-occurrence on reporting date. Understood? Correct. Means, can I say in this way? If three conditions are satisfied, then provisions should be recognized. First condition, there must be present obligation arising from past event. Second, outflow of resource which is required to settle the obligation must be probable. Third, a reliable estimation can be made for the amount of obligation. From examination point of view, question is silent always will assume third condition is satisfied. From examination point of view, question is silent, what will assume that reliable estimation can be made. Means you focus on what? Point number 1 and point number 2. Now point number 1, they say present obligation. Present obligation means what? The obligation is probable. And second condition is the outflow of resource is probable. There are two probability. First, whether the obligation occurrence is probable, whether that will occur. If occur, what is the chances of payment? Means both the condition need to be satisfied. Both, not three conditions. Three condition is from examination point of view. Estimation can be always done. Of course, now if estimation cannot be done, they will not ask question now. And it's very easy. If suppose they are saying we are not able to estimate, they say thank you very much, no provision. So examination point of always second, third condition will be always satisfied. So what are two important conditions? First is what? Whether the obligation is there. Which obligation? Present obligation. Means whether chances of occurrence is more than 50%. If the chances of occurrence is there, so what is the probability of outflow? If the probability of outflow is also, if the outflow of resource is also probable, then we can recognize what? Provision. Understood? Now when I am saying obligation, so which type of obligation? So Ind AS 37 has given a clear information. This obligation can be of two types, either legal obligation or constructive obligation. However, AS 29 was silent regarding constructive obligation. What is the legal obligation? Legal obligation may arise due to contract or any legal or any other legislation of law. Means either due to contract or act. For example, right now, just right now, we have done one contract. We have done one contract. So under that contract, you need to pay some amount. That is legal obligation. Legal obligation? Correct. Now, suppose today, we have not done any contract, but today, suppose my happy mood, I announce that anyone who is taking this batch and got 90 plus 5, so 90 plus marks in exam. 90 plus, so you want to reduce it. I want to do some announcement for some reward. 190% or 80% or 60%? 80, chalo, theek, 80. We'll make it 80. So any student who is taking this batch, which batch? Crash batch, and score 80 or more than 80 in which exam? Exam conducted by ICAI, not test series exam. Huh? Who score where? In ICAI exam conducted by ICAI only, not mock test, final exam. So I will refund the entire fees. Yeah, I made a statement. This statement is 100% correct only. Huh? If you score, come to me, I will refund. Entire amount, whatever you have paid for crash batch, huh? Not for regular batch. Which batch? Crash batch. Now, the question is that should I create any provision? Okay, there is no contract because there is only offer, no acceptance. अरे बोलना रहे. But can I say there is a constructive obligation due to my action? So this is known as constructive obligation. So India's 37 says due to constructive obligation also you need to create what provision? So what is constructive obligation which derive from entity's own action? Means there is no contract, there is no act, but due to entity's own action such obligation arises. So of course now can I say if you pass and you score more than 80 or more than 80 you'll come I need to refund now. I need to refund and I will refund because my reputation is there in the market. If I will not refund, what you will say in the market? So I refund na re. Are bol na re. There is an obligation. Means it may be due to past practice or published policies or specific statement which indicate that entity will accept the responsibility and create a valid expectation on the part of other party. Can you see once I have done announcement some valid expectation came to your part? Some valid expectation is there, yes will score then sir will refund. So it means constructive obligation is there. India's 27 said we should create provision for constructive obligation if two more conditions satisfied, point number 2 and point number 3. So there must be present obligation. This obligation can be legal or constructive. Understood? Now, what India's 37 says that only those obligations which are independent, everyone, only those obligations which exist independently from entities' future conduct of business should be recognized. Means which are dependent, those obligations which are dependent on future conduct of entities' business that will not be recognized as provision. So it dependent on future conduct of business. Future conduct, we don't know what will happen in future now. So that obligation cannot be recognized as a provision. It can be disclosed as what contingent liability. For example, just try to understand. I'll take a best example. Suppose we purchase one aeroplane, and due to National Aviation Act, we do some major inspection after 3 years. So once we purchase aeroplane, there is an obligation to do such expenditure. But can I say after 3 years we may decide to sell the asset, sell the aeroplane, do not want to continue it in our operation. So if you want to sell it, that expenditure is not required. There is no probability of outflow of resource. So there is no probability. Second condition is not satisfied. Therefore, no provision is required. Means what I want to say, those obligations which are dependent on future conduct of business, for that no provision is recognized. Understood? Correct. Then point number E, all obligation involve other party. Yes, obligation involve other party. But what India 37 says that identification of such party is not required to create provision. Means even though you don't know the identification, you should create provision. Got it? Then any legal obligation arises, legal obligation. The legal obligation you have understood? Constructive legal. So legal obligation arises when legislation are enacted on reporting date, or it is virtually certain that it will be enacted. Means on 31st March it is virtually certain that it will be enacted after some time. Virtually certain means it is 95% surety. Virtually certain means certainty level is 95%. Have you understood this point? So legal obligation arises when the act is either enacted or it is virtually certain that it will be enacted. It is virtually certain on 31st March that it will be enacted. Means for example, suppose a bill has been passed in both the houses, Lok Sabha and Rajya Sabha, both the parliament houses. Bill is passed. Can I say president sign is only formality in India? So even though it is not enacted, it is virtually certain that it will be enacted. Correct now. So if it is virtually certain that it will be enacted, then also legal obligation will arise. Got it? Then coming to contingent liability. What is the meaning of contingent liability? What they say? Contingent liability means present obligation arising from past event. Those present obligations arising from past event which cannot be recognized as provision. Means can I say present obligation arising from past event can be recognized as provision if two more conditions are satisfied. Means if any one of the two conditions are not satisfied, will not be recognized as provision. Then India 37 said then disclose it as what? Contingent liability. Understood? So can I say contingent liabilities are present obligation arising from past event cannot be recognized because either outflow of resource to settle the obligation is not probable or reliable estimation cannot be made. Or contingent liabilities are possible obligation arising from past event. All possible obligation arising from past event are what? Contingent liability. What is the meaning of possible obligation? Possible obligation are those obligations where chances of occurrence is less than 50%. Chances of occurrence is less than 50%. That is known as what? Possible obligation. Understood? Have you understood this point? Correct. Now can I say we have understood that contingent liability will not be recognized. It requires only disclosure. It requires only disclosure unless outflow of resource is removed. Means if the outflow of resource is removed, then you can ignore disclosure requirement also. Remote means what? Very less chances. Very less chances. Understanding this point? Correct. Yes, sir. Coming to contingent asset. What is the meaning of contingent asset? Contingent asset are possible asset. Possible asset means possible inflow. Asset means inflow. So contingent asset are what? Possible asset arising from past event. So all possible asset arising from past event are what? Contingent asset. Correct. Now for accounting treatment, what they said, if the inflow are virtually certain, that inflow is virtually certain. Virtually certain means chances are more than or equal to 95%. Then it is not a contingent asset. Then it will be an asset, recognized asset. Correct. If it is a virtually certain, it shall be recognized as an asset, not treated as contingent asset. But if inflow is probable, probable means what? More than 50%, but now less than 95%. So if it is probable, then it is not an asset. You need to disclose what? Contingent asset. Then it will be treated as contingent asset and disclosed in notes to account. Correct. And if it is not probable, chances are less than 50%, then no treatment. So for contingent asset, if the inflow is not probable, is less than 50%, then no treatment required. So can I say India 37 is more strict for asset less than liability due to conservatism principle? Bachman say we have done conservatism principle. This can I conclude in this way? Outflow, inflow. If it is 100% certain, then it is a liability, it is an asset. If it is more than 95%, then can I say here it is a provision, it is an asset? Yes, the provision is also a liability. Then, if it is more than 50%, then also it is a liability, but it is a contingent asset. Liability you are recognizing, provision you are recognizing in the balance sheet. If it is less than 50%, then it becomes contingent liability, but here no treatment. If it is less than 5%, means remote outflow, remote probability. Correct? Then no treatment, no treatment. Understood? Correct? Now coming to measurement of provision and contingent liability. Measurement is required either for recognizing or for disclosure also. Even though you are disclosing, amount of measurement is required. How to estimate that amount? So what India 37 says that it is the best estimate of the expenditure required to settle the obligation at the end of reporting date. Means we need to find out the expenditure which is required to be settled the obligation on reporting date, and that amount will be the best estimate. So how to estimate the best amount? So what India 37 says that estimation are determined by management judgment. So whatever management will say, that is the best estimate. But it should be supported by experience of past transaction. Right now I have done announcement that anyone who score 80 or more than 80%, So I know past batches, how many students have scored that amount. So on that basis, we can find out percentage, and on that percentage basis, I can apply right now to the number of students, and we can find out how many students may score 80 or more than 80 amount. So if I know the number of students multiply the refund amount, that will be the amount of provision. So it is based on past experience or report of an expert or due to any additional evidence provided by event occurring after reporting date. With any additional evidence may be taken from the event occurring after reporting date but before approval of what? Financial statement. Understood? Yes, sir. Now, coming to how to measure, this is very important from examination. But they say how to measure, the further there are two situations. But they say the obligation involve large population. Large population means there are many similar items, large population. For example, we have done sales with warranty. We are not doing one sale now. There are many sales during the year, so it involves large population. So we will not create provision for each sale now. That will be to take a lot of time. It is customer whether warranty obligation will occur or not. This is and to will die. So we need to do on group basis. So whenever obligation involve large population, then we calculate expected value of obligation. Expected value of obligation is weighted average of all possible outcome. Weighted average of all possible outcome. Understood? Means I'll just take one example. Similar question have been asked in exam. Suppose during the year 1000 sale 1000 units has been sold. Now as per the past experience, you know that out of these 20% there will be major defect, 40% will be minor defect, and 40% will be no defect. Okay, this is as per past experience, correct? Now we can estimate if there is a major expenditure, so what would be the amount of expenditure for repair, etc. that the management can estimate. Suppose here the expenditure is 1000, here the expenditure is 400, here the expenditure is. So now we can calculate the amount of provision. So this will be what? 1000 into 20% into 1000. This is 1000 into what? 40% into 400, and this will be nil. So this will be what? Amount of provision. This will be the amount of provision. Very easy. Correct. Second one they are saying when there is a single obligation, one obligation with two possible outcome, only two possible outcome. When there is a single obligation with what? Two possible outcome. Understood? Single obligation with two possible outcome is yes, no. Only yes, no. So what they are saying, then take most likely outcome. Then don't apply weighted average. Take most likely outcome. Correct? Means suppose 90% chances that expenditure will be 10 lakh and 10% chances the expenditure will be 1 lakh. So what is the most likely outcome? 10 lakh. You should create a provision of 10 lakh. Understood? So provision is created based on most likely outcome. Understood? Yes, sir. Now, there are some special point about measurement. Provision should be measured before tax, means it should not be net of tax. It should be always before tax. Amount of provisions should be the present value of expenditure. Present value of expenditure. If the effect of time value of money is material, if the effect of time value of money is material, then we should discount it. The amount of provision should be discounted amount. We have done in case of India 16 initial estimated cost of dismantling removing, then in that also we have applied India 37. We have done discounting there also. If the time value of money is material, apply discounting, correct? Discount rate should be always pre-tax. Of course it will be pre-tax discount rate because provision is charged before tax, correct? Understood? Any gain from expected sale of assets shall not be taken into account for measurement of provision. Any gain from expected sale of asset will not be taken into consideration for measurement of provision. This provision should be considered for outflow. So any gain should not be taken into consideration to calculate the amount of provision. Understood? Correct. Now, this is also important point, risk and uncertainties. Can you just try to understand? Whenever we create provision based on past experience, but future may be different. So there is some risk and uncertainty associated with the best estimate, and therefore some adjustment is required. Therefore, some adjustment is required. Understood now? So sometime in question they say risk adjusted discounting factor. It means it is adjusted with the risk and uncertainty which may come in future, because you are doing estimation based on past experience now. But whatever past experience may be what not future outcome. So there is some risk and uncertainties. So that adjustment is required or not. So what they are saying, this risk adjustment can be given into three ways. This risk adjustment can be given in three ways. Means either, just what are three ways? Either can I say will increase this amount, means increase the estimated outflow. Either you increase this now. This is based on past experience 1400. If you are saying future may be different, increase the estimated outflow. अरे बोलना रे. Or can I say we should increase this amount? Or if you are discounting it, suppose you are discounting at rate of 10%, or adjust the discounting factor due to risk uncertainties. Now if you are just saying this to it will be increased, it will be increased, this will be increased. If we are doing adjustment with discount factor, you will increase discount rate or decrease? You will decrease it. So if it is 10% as per past experience and future may be different, so you will say minus 2%, it will be 8%. Bolo yes or no? Sometime in exam they will say rate of discount is 10% based on past experience, risk adjustment is 2%. Suppose they have given, till now तो they have not asked. So 10% minus करेंगे plus करेंगे minus. For discount rate adjustment means either we'll do adjustment in this or on this or on this. Correct? That is only given. Risk adjustment can be accounted in number of ways, such as adding it to the expected present value of future outflow, or adjusting the estimate of future outflow, or adjusting the discount rate. Understood? This question has not been asked till now, can be asked. Coming to reimbursement, this is the important topic. Means if I say Ind AS 37, they may ask question of reimbursement. Reimbursement. Now reimbursement means what? Suppose you created a provision. Means provision already created. Are you have a provision already created? Provision why you have created? Because three conditions is satisfied. What are the three conditions? There are present obligation arising from past event, then outflow of resources probable, and estimation can be made. So it is quite possible that if that out is if that amount is settled, that amount can be reimbursed by third party. Are you able to understand? Means we have created provision for future expenditure, but when that expenditure will be settled, that amount of expenditure may be reimbursed by third party, either from insurance company or director, etc. Now the question is that if the reimbursement is possible, should we create a separate reimbursement asset? So what Ind AS 37 says, that apply possible inflow wala point. Reimbursement is a possible inflow or not? Reimbursement is a possible inflow. Like recognize provision as whatever we have done. Now should we create a reimbursement asset or not? That depends upon possible inflow. Means if inflow is virtually certain, then what? If inflow is virtually certain, then what? Recognize it as a separate reimbursement asset. Separate reimbursement asset. Means in balance sheet provision will be recognized separately and this asset will be recognized separately. Correct? So recognize reimbursement as a separate asset. However, in SOPL, net amount will be recognized as an expense. Suppose the provision is 10 lakh and this is 8 lakh. So how much expense 2 lakh will be recognized in PL. But in balance sheet, separate amount. Correct? Such amount is set up against provision, net amount will be shown in PL. But can I say in any case, reimbursement assets should not exceed the amount of provision. Means if you have created provision of 10 lakh, will you create a reimbursement or asset of 11 lakh? Not possible. Either it will be 10 lakh or less than 10 lakh. The amount recognized as reimbursement assets should not exceed the amount of provision. And can I say if reimbursement, if the inflow is not virtually certain, if reimbursement is not virtually certain, then do not recognize it as an asset. If the inflow is probable, then it will be a contingent asset. If the inflow is not probable, no treatment required. This is only given check kalo. Understood. Reimbursement is an important point, can be asked in exam. Have you understood this point? Correct. Then coming to future operating loss, should we create should we create any provision for future operating loss? Can I say future operating loss is a future event? So we should not create any provision for future operating loss. Now the one clarification has been given. If for future operating loss, you should not create any provision. Now coming to executory contract. So one question will apply, should we create provision for executory contract? Let me give one example. Suppose on 1/4/2020, you have done one contract to purchase what? Machinery after what? 2 years at rupees what? 10 lakh. Means right now you have done one contract that you will purchase a machinery at rupees 10 lakh, and the contract is with Y Limited. So can I say this is known as executory contract? What are the executory contract? When the both the party has not performed their part of obligation, or both the party has partially performed their part of obligation. That type of contract is known as what? Executory contract. So can I say in this case both party will perform their part of obligation after 2 years, and therefore it become executory contract. But right now they have entered into contract. Should we create a liability of 10 lakh? Is this a future event? Obligations should be arising from past event. Na? Executory contract means performance will be done in future. Na? Therefore, India's 37 is not applicable to executory contract. Therefore, we should not create in liability for executory contract. Understood? अरे बोलना रे. Even though we have done contract, but this is based on future event. Na? We'll purchase after 2 years, then only machinery will come. Then we'll say machinery account debit to liability. Right now, we'll not create any liability. Na? So correct. So what they said, Ind AS 37 is not applicable to executory contract unless it become onerous. Unless it become onerous contract. What is the meaning of onerous contract? Onerous contract are those executory contract in which unavoidable cost of meeting the obligation exceed the economic benefit expected from such contract. Means where the cost is more than economic benefit, then it become burden for us. It become burden now. When the cost of meeting that obligation is more than what? Expected benefit, then it is a burden. Burden to recognize loss. Correct? So what they want to say, suppose after 1 year we have changed the production method and now this machinery is not required. So can we cancel the contract? No. We can cancel this contract after payment of penalty only. So these are actually non-cancelable contract. What is the meaning of non-cancelable contract? Non-cancelable contract are those contracts which can be cancelled only payment of penalty. So normally when you have done contract, so it can be cancelled, but it can be cancelled only after payment of compensation. Na? Are bolna re? Correct. So these are non-cancelable contract. Means can I say now if suppose this machinery is no more required, either you will purchase or you will cancel. If you cancel, so you may require to pay a penalty of 2 lakh. And if you purchase, you need to pay how much? 10 lakh. And you can sell this machinery only at 2 lakh. So 8 lakh is your what? Loss. So in this case, it become onerous or not? Become a burden for you. Burden na? So what they said, Ind AS 37 will be now applicable. Once the executory contract become onerous. In this case, by what amount you will create provision? In this case, amount of provision will be unavoidable cost, which will be lower of cost of fulfilling the obligation. So in our case, can you see in my example, it will be 10 lakh and you can sell the machinery at 2 lakh, so it become 8 lakh. Or penalty payable to exit, this is exist, not exit. Penalty payable to exit from the contract. Exit means to cancel the contract. Suppose it is 2 lakh, whichever is lower, we'll create a provision of that amount. Because of course, we'll not incur a loss of 8 lakh. Now we'll pay penalty. So we should create a provision of 2 lakh in my example. Understood? This one question has been given regarding this in this RTP. Understood? Now, can you say in this cost will be always incremental cost. We'll take incremental cost. Any ongoing cost we should take. Means when you are creating a provision to find out the cost of meeting that obligation. So which cost should be taken into consideration? Ongoing cost, or which will be incurred only when such asset is purchased. Means incremental costs are those costs which are incurred to fulfill the contract. Ongoing costs we have done. Ongoing costs are those costs which will be incurred even though asset is not purchased. So you will create a provision for which cost? Incremental cost or ongoing cost? Incremental cost. So this cost will be always what? Incremental cost, which will be incurred only when you are fulfilling such contract. So this cost will include only what? Incremental cost, means you should create a provision only with what? Incremental costs which are not avoidable. Understood? Sorry, which may be avoided. Which may be avoided. Sorry. Understood? Have you understood this point? So relating to this one question have been given in what? RTP. I hope you have understood. Changes in provision you can do. Unwinding of provisional amount. Unwinding of provisional amount means what? We have created provision at present value. Now that provisional amount, in that we'll add interest cost every year. We'll add interest cost. Already we have done under India 16 unwinding of provisional amount. We'll add interest cost and ultimately it will become the amount to be paid. So that unwinding of interest will be considered as what? Borrowing cost, and that borrowing cost will be charged to P. Understood? So when discounting is used, carrying amount of provision increases every year. That increased amount is treated as what? Borrowing cost. This use of provision is simple. Correct? Come to the restructuring last point. Last point. This is also an important topic. Means from this chapter, from three topic question may be asked. One is reimbursement, one is onerous, and one is restructuring. Which I feel, which was not in CA inter level. Understood? What is the meaning of restructuring? Restructuring means what? Changes in the scope of business. Means any activity which will change the scope of business, that is known as restructuring. For example, we decided to discontinue one business, that is restructuring. We decided to shift our business from one location to another location. This is what? Restructuring. We decided to close down one location. This is what? Restructuring. Correct? So whenever there is a restructuring, so there may be some restructuring cost. The question is that if you have decided to restructure, should we create a provision for restructure cost? Till now restructuring not happened. We have decided to restructure. Suppose we have decided that I will close down my foundation business. Suppose till now not closed down, huh? We have decided to close down. So whenever we will actually close down, we need to incur some restructuring cost. So should we create a provision right now for the restructuring cost that we are discussing? So what India 37 says, if three conditions satisfied, recognize what are three conditions? Present obligation arising from past event. Outflow of resources probable and reliable estimation can be made. So doubt is not there. Simply if three conditions satisfied, recognize provision. If not satisfied, do not recognize provision. But doubt will come whether there is a present obligation on reporting, that how we'll understand. Can I say this restructuring decision always will come into play due to constructive obligation? It's a constructive decision now. It's not due to any contract or not due to any legal obligation. Decided to close down because we have decided. So what India's 37 says, that if on reporting there is a constructive obligation recognized, Means simply what they want to see. If you are committed to discontinue, if you are committed to restructure, then recognize. Can you see if I decided, it does not mean commitment. अरे बोलना रे. We decided to become CA, but will you become? If you are not committed, you will not become. अरे बोलना रे. So decided does not mean commitment. Commitment say we need to think, we need to just see what you are doing for becoming CA. So commitment come from your action, not from your decision. So what they want to say, a constructive obligation for restructuring arises. Constructive, this point is very important. A constructive obligation for restructuring arises when the entity has a detailed formal plan of restructuring. This entity has created a detailed plan for restructuring. Some action they are taking now. There is some action. They have created a detailed plan for restructuring. Now, if you are coming to my crash, which you are committed or not? Yes. Otherwise, you would have not come now. If you are coming to crash batch, means you are committed. You are committed. Are you able to understand? Otherwise, you would have not come only. Correct. So entity has a detailed formal plan of restructuring and entity has started to implement such plan or announce the main features of such plan to those affected by it. Announce the main features of such plan to those affected by it. I'll just give a simple example. Suppose I'm committed to some person, some girl. So can I say if I'm commitment, I'll do announcement in social media. And if I'm not doing announcement, means I'm not committed. Bolo yes or no? I'm married, huh? I was saying I'm married. So now this point will not be applicable to me. Just try to understand. Suppose I'm not married and I'm committed to some girl, and if I'm not making announcement in social media, it means I'm not committed. अरे बोलना रे. And if I'm doing announcement means I am committed. So when you are doing announcement of such plan means you are committed. Otherwise you will not do announcement, na. So these two conditions give rise to constructive obligation. If there is a constructive obligation, create provision. Correct or not? Correct? Yes, sir. So these two conditions are important from examination question point of view. Now for measurement of provision, what they are saying, a restructuring provision should include only direct expenditure arising from restructuring which are those that are not necessarily entailed by the restructuring and not associated with ongoing activities of the entity. Means only direct expenditure arising from restructuring, for the direct expenditure we should create provision. Understood? Means for any ongoing activities of the entity we should not create any provision. Means any expenditure which are direct expenditure of due to that restructuring, for that we should create provision. For example, you decided to close down one factory. So you need to compensate employee who are retrenched. Yes, that is due to direct restructuring. This is directly related to restructuring. Therefore, we should create a provision for that termination cost. But if you are paying some ongoing salary to that employee, for that will you create provision? No, Baba, no. Simple. Understood? I've given one example. Restructuring provision does not include such costs such as retraining or relocating continuing staff. The relocation of staff from one to another, this will not come. For that, will never create provision. So that depend upon future conduct of business. Correct? Any marketing activities depend upon future conduct of business. Correct now. Investment in new system and distribution network. These expenditure relate to future conduct of business and therefore for that provision will not be created. Similarly, any future operating loss up to the date of restructuring. Any future operating loss can is for that also we should not create any provision. So suppose today is the constructive obligation. Means today is there was a constructive obligation and now we are incurring some loss. So then this is future loss. So future loss is future event. Therefore, we should not create a provision for that. Understood? I hope you have understood. Hope you can read difference. You can read in days 37 over. Means you can see we have completed in days 37. Can we take some questions? In days 37 over, I think you are able to understand everything whatever I am discussing. Are you able to understand? I've taken some questions. Let me first see whether any doubt is there or not. 5 to 10 minute break. Oh ho. Break was required. चलो ठीक है. 5 to 10 minute break was required at 4 p.m. Now so it become 5 p.m. I have not given any break. You are requiring break? चलो ठीक है. Okay. Next time I'll give. Tomorrow I'll give. Don't worry. Okay. But today I'm sorry. So can I take this question number 28? Or you want 5 minute break? हाँ 5 minute break ले लो. ठीक है. 5 minute break. Otherwise they will die. 5 minute break. हाँ. Can we start? So let us take some question of India's 37. I think as per today's quota, we have completed our requirement, whatever is planned. You know. So question number 28. EU Limited is a large conglomerate with number of subsidiaries. It is preparing consolidated financial statement as on 31st March 2018 as per the notified Ind AS. The financial statement are due to be authorized for the issue on 15th May. So 15th May is what? The date of approval, whenever this type of question given means they have given India's 37 with combination of India's 10. Correct? Is seeking your assistance for some transactions that have taken place in some of the subsidiary during the year. G Limited is wholly owned subsidiary of U Limited engaged in management consultancy services. Just try to understand India's 37 will be applicable to both individual as well as consolidated financial statement as it is. So there is no changes. Means when you are preparing consolidated financial statement, so all the group entity will be one entity and apply India's 37 on entire group entity, assuming that entire group entity are single entity. Okay. On 31st Jan 2018, the board of directors of U Limited decided to discontinue the business of G Limited. Means what? Restructuring or not? Correct. From 30th April 2018, they made a public announcement of their decision on 15th Feb 2018. Means before 31st March they have done public announcement. It means there is a constructive obligation on 31st March. If there is a constructive obligation on 31st March, we should create a provision for restructuring. Correct. G Limited does not have many asset or liability and it is estimated that the outstanding trade receivable and payable would be settled on 31st May 2018. U Limited would collect any amount still owed by G Limited customer after 31st May 2018. They have offered the employee of G Limited termination. Sorry. They have offered the employee of G Limited termination payment or alternative employment opportunity. Just try to understand payment of liability and collection of data is an ongoing activity. So should we think about that when we are creating provision for restructuring? Means when you are settling some liability, that is ongoing activities or not? So should we create any provision for settlement of liability? No. Should we create any provision for collection of amount? No. That is not restructuring provision. Are you getting what I am saying? But they have offered the employee of G Limited termination payment and alternative employment opportunities. Where termination payment is directly related to restructuring activities. Following are some facts. On the date of public announcement, it is estimated by G Limited that it would pay 540 lakh as termination payment to the employee and the cost of relocation of employee would remain within the group would be 60 lakh. The actual termination payment totaling to rupees 520 lakh would be made in full on 15th May 2018 and as per the latest estimate of 15th May 2018 the total relocation cost is 60 lakh. My question to you all, for termination payment should we create provision? For termination payment to employees should we create provision? Should we create, yes or no? Yes, we should create provision. What amount? 540. We should create provision with 540 ki 520. Means what is the date of approval? Date of approval is 15 May. The date of approval is 15 May and entire payment was done on 15 May 520. So can you see it provide further evidence of the condition existing on reporting date? So can you see we should create a provision not with 540 but with 520 lakh. Applying Ind AS 10 means before approval of financial statement, if you know what is the amount of actual payment, so second is we should create a provision with that amount only. So we should create 540 or 520? 520 lakh on 31st March. Have you understood this point? Are bolo yes or no? Understood. Now, should we create a provision for relocation cost of employee? No, relocation cost of employee is dependent upon future conduct of business. Therefore, it is not directly related to restructuring activity. And therefore, we should not create a provision. So, can I say for this 60 lakh or 63 lakh, no provision will be created? The loss after tax of G Limited for the year ended 31st March 2018 for 400 lakh. This is the actual loss of current year. This is already recognized. But G Limited made a few further operating loss totaling 60 lakh till 30th April 2018. My question to you all, on 31st March, there is a future operating loss of 60 lakh. Should we create a provision of this? Any provision should be created for future operating loss? Yes or no? No. Right now we have done now. For future operating loss, no provision will be created. No provision for 60 lakh. How should U Limited present a decision to discontinue? I hope you have understood. Means get only provision of 520 lakh. Have you understood this entire? Can you read the entire solution? You can see solution is given in detailed answer. Means you should write down what is the meaning of restructuring. Then you should write down when restructuring provisions will be created. Then you should write down when constructive obligation arises. Then you should write down what is included in the provision. Then you should write down the answer. If you write down this much, then only you will get point. Means I just want to say that if you write down this much now, whatever I have given my in my India Saransh book, if you write down this much now in simple language, you will be able to get the mark. But if you don't write this much only, they will not give entire marks now. Correct. Let me take one more question. 29. During the year QA Limited delivered manufactured product to customer K. The product were faulty on 1st October 2016. Customer K commenced legal action against company claiming damages in respect of loss due to supply of faulty product. Is QA Limited on QA Limited who has filed a case? Customer K. Understood? Upon investigation matter, QA Limited discovered that the product were faulty defective raw material procured from supplier F. Therefore, on 1st December 2016, company commenced legal action against F claiming damages in respect of supply of defective raw material. Means QA now filed a case against supplier. QA Limited has estimated that there is a probability of success of both legal action. The action of K against QA and action of QA against F is very high. Means the chances to win the case is who will win the case in first case, K will win, and in the second case who will win? QA will win. Means can I say for the first case there is some outflow of resource, and in second case there is some inflow of resource. Inflow of resource means reimbursement. Sorry, not really. Inflow of resource means contingent asset. Outflow of resource means what? Provision. Whether we should create or not. Not able to understand. Means there are three parties. QA. What is the name of customer? K. What is the name of supplier? K has filed a case against QA. QA has filed a case against F. And there's a high chances that K will win. There's a high chances that QA will win. If K will win, so QA will pay some amount to K. But if QA will win in the second case, F will pay some amount to QA. So this is outflow. This is inflow. Outflow means we should think about provision or contingent liability. Inflow means we should think about asset or contingent asset. Now you have understood? Correct? On 1st October 2016, QA Limited has estimated that the damage it would have to pay K would be 5 crore. The estimate was revised to 5.2 crore on 31st March, means reporting date, and 5.25 crore as on 15 May 2007. What was the date of approval? They have not given date of approval. I think they have given, but not now. Means they have given three amount. When the case was filed, when the case was filed on 1 October 2016, then on 31st March 2016, then what is the next date? 15th May. 15th May 2016. Correct now? These are three dates they have given. So first 5 crore. In this date there was 5 crore. Then 5.2 crore. And when the case was actually settled, it is 5.25. Correct? This case was eventually settled on 1st June 2017. When the company paid, it was settled on 1st June 2017. Achha, this is 17. This is 17. This is 17. What is the amount? 5.3. They have given 4 amount. Correct. On 1st December 2006, QA Limited has estimated it would receive damage of 3.5 crore. So in this also they have given 4 amount. The case was filed on 1st December 2016, then 31st March 2017, then 15th May 2017, and 1st June 2017. Can you give me the amount? 3.5, 3.6, 3.7, 3.75. Correct. Now, QA Limited in his financial statement for the year ended 31st March 2017 provided rupees 3.6. This too we have written. As the financial statement were approved by Board of Directors on 26 April law. Means financial statement were approved on 26 April. Means can I say this amount, this amount, this amount, this amount are not relevant? Now you only say first though, can I say it is understood that we should create a provision. So should we create a provision? So with what amount? 5 or 5.2? Always we do provision creation on 31st March. We take the best estimate on 31st March. Therefore 5.2 crore. Now for inflows, should we create, means whether it will be recognized as an asset or contingent, whether it will disclose as a contingent asset. Can you say there is no virtual certainty? There is no virtual certainty. The question of recognition of asset will not arise. But yes, the amount is probable. Amount is probable. It means what? We should disclose it as contingent asset. So contingent asset, can I say 3.6 will be contingent asset? Understood. Good question, na? A good question. Big question are always good question. You can read the answer. Come to question 30. Sun Limited has entered into a binding agreement with Moon Limited to buy a custom-made machine of 4 lakh. At the end of 2017-18, before delivery of machine, Sun Limited had to change the method of production. Similar example I have given for onerous contract. Similar example I have given for onerous contract, na? They have done one binding agreement to purchase a custom-made machine for rupees 4 lakh. At the end of 17-18, method of production change. The new method will not require the machine order which is scrapped after delivery. The expected scrap value is nil. Given the asset is yet to be delivered, should any liability be recognized for the potential loss? If so, give reason for the same, the amount of liability as well as the accounting entry. Okay, now this contract become onerous. Therefore, we should create a provision of unavoidable cost, which will be lower of cost of meeting the obligation and penalty to exit from the contract. The cost of meeting the obligation is 4 lakh minus scrap value is nil, so 4 lakh. Penalty is not given. Penalty is not given means there is no penalty clause. Ignore it. There may not be any penalty clause. Ignore it. So can I say we should create a provision of 4 lakh. Simple. But in this question, in answer, you can see they have written what is the meaning of executive contract. Then they have given what is the meaning of onerous contract. Then they have given what is this. Then a journal entry they have given. Journal entry we can pass PL account debit to provision for onerous contract. PL account debit to provision for onerous contract 4 lakh. Chalega? Yes, sir. This also similar question I have taken in class only. Assume that firm has not been operating its warranty for 5 years and reliable data to suggest the following. What is this? If minor defect occur in all products sold, repair cost is 20 lakh. If major defect 50 lakh. Manufacturer past experience and further expectations indicate that each year 80% goods will be sold with no defect, 50% with minor defect, 5% with major defect. Calculate the expected cost. Can you calculate? Similar question I have taken in class only now. So 80% 0, 50% of 20 lakh and 5% of 50 lakh. This is the expected cost of obligation. If they have not given discount rate, ignore it. Means in this question they have not given discounting rate. So from exam point we ignore, we'll assume that there is time value of money is not material. But if they have given discount rate, we'll apply discounting and we'll calculate the present value amount. So can you say from examination point of view, we can say if the amount is payable, means we can say in this way the amount is payable within 1 year, then time value of money is not material. But if the amount is payable after 1 year, then time value of money is material. But from examination point we can say also that if discounting rate is given, apply discounting. Discounting rate was not given, then the discounting rate is given, apply discounting. Discounting rate is not given, then undiscounted amount. Smart work. Understood. With this Ind AS 37 also completed. I think today we have completed lot of Ind AS. चलेगा? But today this much only. We'll meet tomorrow. Better. We'll meet tomorrow. Tomorrow what are the expected? If you come by revision, it will be helpful for you. You can see Ind AS 10, Ind AS 7, Ind AS 1, Ind AS 36, Ind AS 41, Ind AS 8. I may change also because I don't want to do Ind AS 7 before consolidation. So I will shift Ind AS 7, means apart from Ind AS 7 I can take some other Ind AS also. चलेगा? Understood? ठीक है ना? So I may change some also because Ind AS 7 you will better understand after consolidation. So tomorrow we'll do Ind AS 10, Ind AS 1, Ind AS 36, Ind AS 41, Ind AS 8 and some more Ind AS. Thank you very much for today. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining